Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knucklehead. Happy Friday to just you, Sadnop, as Vanetta is out gallivanting around on her motorcycle somewhere. And she's a real man. When it comes right down to it, I mean, she really is.
On her pink motorcycle. Give me a break.
She is an adventurer. She's a skier. She's a explorer.
She's an adventurer. I'll give you that. She's an adventurer, but it's a pink motorcycle. I mean,
For sure, for sure. Sadnop, did a cold front come into Chicago today? I mean, is it like is it at the at the line between the suburbs and the city? I mean, like you dressed like Nanook over there. What's going on?
I don't know. I guess I thought it was colder. I gotta strip down. I'll take my top off during the next break.
You're in ketosis. I get it. I get it. Well, it's good to see you, my friend, on the last day of the week. I mean, I don't want to talk about the markets right away here. I'd love to hear what you did all day. But Sadnop, something really weird is going on here because every indice is red here, Sadnop. Just now, nat gas caught a small little bit. It's up a penny, and corn is up $2.50. Otherwise, it's a sea of red, Sadnop. Is there something wrong with the market?
I don't know. I'm pissed. I bought back some futures yesterday afternoon. That's all I can say. I was like, I know I'm buying high, but I made a sacrifice to the gods, and kept all the other shorts. So we'll see what happens.
I got you. I mean, we're all the way back down to 60.
We're all the way back to
we're under 6,500, Sadnop.
Yeah,
we're basically under 6,500.
We're basically crashing.
I mean, this is a major meltdown here, especially so early in the morning with so much time to go in the day.
All right, so I'm going to tell you what happened to me last night. Okay.
Uh-oh, something happened. Go ahead.
No, nothing good. So last night was an insane night in Chicago. Now remember, everybody, like, Chicago's kind of this, it's a pretty tight metropolitan area. It's not like a big sprawling, like Dallas or LA or something like that.
Sure.
And
sure. It's dense.
It's dense. It's a little more New Yorkish, that kind of thing. Mm-hmm. So at Soldier Field, which is downtown on the lakefront, Oasis is playing.
Right. I remember
you're packed, and everybody's going out there early.
Helper Monkey Josh is going
there. Yeah, Helper Monkey was there. Everybody's there. The whole world was at the Oasis concert. Mm-hmm. Then there's a place there's a concert venue on the north side called the Salt Shed, the old Morton Salt Shed, which holds about 5,000 or 6,000 people. And that ties up one of the main arteries that go to the north side up towards Wrigley.
Yep.
And that was completely jammed trying to get to the Salt Shed. And then at Wrigley Field, where I live, there was a concert I had no idea was playing. I think it was Chris Brown, but I had no idea. But it was whatever. There was traffic. You couldn't move an inch.
Well, so, it's basically, for those who are not in Chicago, you just mentioned a triangle. Basically.
It's a triangle.
Yeah. So anything inside there, you're pretty much, landlocked.
So Wrigley Field, Salt Shed, Soldier Field, everything is just, there's traffic is a standstill through the entire city. Mm-hmm. And now, when I say I could have walked there faster, I'm not the fastest walker. Okay.
No, you're not even a fast dragger of the foot. Like other people, I've seen other people who have, the same type of problems that you have with your legs that drag their feet and legs a lot better than you.
I just want to go on record saying I don't have any problems, but he likes to think I do. But anyway, I could have walked like twice as fast. It took me an hour and a half to go, like I would say half a mile. And I was not a happy camper. An hour and a half for half a mile was not a good experience in traffic. I've never seen traffic like that. And I live in a residential neighborhood. It's not like a busy area.
Sure. But I mean, there are a lot of construction all over the place. In
construction,
but a lot of construction all over the place everywhere I've gone. I mean,
so usually when there's a game at Wrigley, everybody walks. Like it's like the streets are packed, but you can drive around. It doesn't matter. But last night's concert, everybody drove in from somewhere. God knows where they came from. And I couldn't. It was insane. Josh just wrote to me because he was at the Oasis concert. He said it took me 2 hours to get home after the concert. 2 hours.
Yeah. He said it was hard getting out of the shitty.
He was at Soldier Field.
Yeah, well, that's the city. You got to get out of the city,
He
right?
said it took me 2 hours to get home after the concert. I almost came to your house.
Would the house have looked like Halloween when the kids come for candy? It would have been all dark and black, no lights on.
Oh, I would not have even answered the door.
Right, you walk around by candlelight and stuff like
No,
that.
no, no. I wouldn't have answered the door. If he had called me after the concert, there's no chance I would have picked up the phone because I
There's
knew
no,
it would be
there's no
something.
way. I mean, we've had this debate before with
It
the
would be
guys,
something horrible.
especially a lot of them on the trade desk. Like I always ask them, like, is Sosnoff your emergency contact? And they all look at me like I have three eyes. I mean, nobody picks you as their emergency contact. Like you're not going to pick up the phone.
No, no, I wouldn't have picked up the phone. And there was an outside chance that I thought he didn't get home last night. Like I was thinking he's still in Soldier Field, like looking for an exit. But yeah,
He's got premier exit.
And just so you know, he had the good parking.
Right, he does have the good parking.
And if he can't get home from the good parking, imagine
how us normal people can get by.
If you can't get home from handicap parking, you can't get home because that's easy out. Like you go right out.
Oh, that's a head start. You kidding?
That's a head start.
Sure.
Like, I'm going to Monday night football, and I'm going to the first game. Bears Vikings.
Did you wish John a happy birthday today? It's his birthday.
John McGloin?
No. John McGloin, what in God's name has John McGloin ever given you or got you or done anything?
John? Which John? I don't know what John you're talking about.
Sutcliffe, the guy who's getting you into
Oh. I didn't know it's his birthday. How would I know it's his birthday?
Hey, do me a favor, cut this out, John McGloin, so I can get this to my friend Mr. Sutcliffe and I can be replacing Sosnoff on the field for the game on Monday night. John who? Well, John who? There's only one John who counts.
John, are you listening to this, John?
I have to.
I know. Yeah, I would shut down his mic totally.
That was hurtful. That was very hurtful yesterday. Yes, John's birthday. So there you go. Bring him something for his birthday. Uh-huh. Well, we've got our own woes out here for construction too, Sosnoff, so I don't want to hear about your bull crap. You could have walked. I mean, that's what I thought people in the city do.
Your own woes? You calling that a woe?
Yes. My neighbor has to park on the street.
Oh, God.
Can't put his car in the garage because there's too much construction.
Oh, God. City got suburban problems.
Yes. Anyway,
I was out gallivanting around. That's what got me in trouble. I thought that I didn't know there was all this stuff going on last night. And I was out gallivanting, and when I got home from gallivanting, I realized, oh my God, this has been a tough night. Anyway.
Mm-hmm.
All right, what do you got going on this weekend for the long holiday weekend?
Oh, I don't have pre-foliage weekend pre-gaming the way that you are this weekend, Sosnoff. I don't have that going on. I told you I'm building my sauna. This is a 3-day weekend. It should only take me 5 or 6 hours, but I got to move it from the front of my house to the back of my house. It's about 1,000 pounds. So I got to make a bunch of trips. So
hey, you got a little helper.
I do. I told him he's got to earn his Range Rover. I mean, if he's gonna take the Range Rover as his first car, he's got to take a couple of pallets back to the backyard. So he's helping for sure. He's a good helper. He made dinner last night.
If you give a kid a Range Rover as his first car, you should be just shot.
I like to have people talk about me, Sosnoff. They don't say anything in front of me, but they always say a lot behind my back. So I just keep it going. I give them a little ammunition. Hey, my kid made dinner last night. So we're actually going to start a little service, Sosnoff. So
What kind of service?
What's that?
What kind of service?
He made, well, we're going to start a service for you. That's what I was going to say. He's going to make you dinner, the night before.
He's going to be my personal chef?
Like a chef, like meal prepping. He's going to meal prep for you.
I don't want him to meal prep. I want him to be my personal chef.
He would do that. He chopped up the onions, put a little little green onions on top of some chicken thighs that he made Asian style with some rice, and I cut up a cucumber and put it in a little bit of like I don't know, like Asian seasoning, something marinade or something.
Did you fake eat it, or was it actually good?
No, it was actually pretty good. It was pretty good. I'm not a chicken thigh guy. I know you are.
I love chicken thighs.
I know, I know, I know.
I'm all in on chicken thighs.
I know, I know. You ever see what a chicken eats?
What do you mean?
Do you ever see what a chicken eats? Have you ever
See
been?
what a pig eats? I mean, what does that mean? You ever see what a chicken eats?
This is true. Pigs are not good too. I do love me a good bacon, but I don't eat a lot of pork either. You do.
I mean, what's your point?
I'm just saying, I'm not a big chicken guy. That's all.
You see what a fish eats? I mean, not a big
I
chicken.
mean, if you're going to use facts to win an argument, I'm not going to get far here. It's going to be
Not a
hard.
big chicken guy. I've seen you eat like maybe 40 chickens in your life.
Maybe more. Maybe more. What can I tell you? Anyway, so that's what he did. That's what he did last night. So he made dinner. He's got a big test today, Sosnoff. He's got 6 out of 6 on his last math quiz. That is a high note for him. That's a high note for him for the last 10 years that he's been in school. So if it's he's shooting from strength these days. So he's very happy.
We're so proud of him.
Don't be too proud. Don't be too proud. Almost got killed last night in the car while he was driving. He's very he knows the rules of the road, and he believes that everybody should follow them. So when he's trying to merge left, even if there's not enough room, he says the guy behind him has to give him the right of way. But this guy was not having it, and he couldn't understand why. Like
I wouldn't let him drive in the city quite yet.
he's not. This is the suburbs. But
no, I know. I'm saying I wouldn't let him drive in the city.
He couldn't understand why. He goes, Dad, there's plenty of room for me to get in. Why would the guy speed up? I said, well, he wants to get home to his family. He wants to, he's got things that he wants to do. He's not worried about like what you have to do. You have to be careful that you don't hit something. Because I don't get it, Dad. It doesn't make sense.
No, what's funny is when we were driving around in Mexico last week, we commented that everybody pulls in front of everybody else, but nobody gets road rage.
None, not one.
Because it's just all expected. You pull out in front of somebody else, and like everybody just pulls out in front of somebody else. If you pulled that stuff in the U.S., people are getting out of their cars.
Baseball bats come out, everything comes out. There was no road rage, and there was no street lights. If you notice, everything was like a roundabout, or there was no lights. They didn't pay attention to lights. No lights.
Yeah. Well,
I mean, I know you noticed that because you for some reason got to sit in the front all the time. Like there was
I'm very observant. Because I sit in the front for a reason, because I'm like a backup navigator. Because my sense of direction is so strong. I told you this, I think I told you this, but I read a crazy statistic where they surveyed 1,000 men, and over half the men surveyed said if necessary, they could land a commercial airline.
That's such bullshit.
No. I know. They laughed about it. They said, but that's what people think. If required, 50% of men said that they could land a commercial jet.
This is a full reflection on you women out there. I got to give you your props. You have made us overconfident that everything we do and everything we have.
I don't know if the women making you overconfident or just women have more sense.
No, they've made us very confident. They've lied to us long enough that now we even believe stuff like that. So for sure. Anyway, so did you trade at all last night? You traded a little bit, not a lot here. I'm seeing everything on the future side, obviously, but cool. Net gas. You didn't do too much.
No, because I had a short. No, I didn't really trade last night. I had a short position. I traded some this morning. They were down all night. I thought if they were up, I might sell them, but they were down all night, so I didn't sell anything.
Mm-hmm.
I got a little bit long natural gas this morning because I refuse to be short natural gas when it breaks back through $3. But other than that,
nat gas got a little bit of a bid too.
It's rallied about 20 cents or something last couple of days.
Big move in that gas, especially when it hasn't had a 20-cent rally in about a year.
Yeah. No, no, there wasn't much to do. Baba, I traded Baba for earnings. We just sold naked puts, so that one's going to be good. But then I got a little bit. I did something like
Yeah,
I hate.
Bob is up and everything else is down, right?
Yeah, Baba's up. Marvell missed, and they're down like 2 times the expected move. I hate Marvell every single time that stock. So I did a little something there. But
Yeah,
that's not, Marvell's gonna wipe out Baba.
Mhm. And Dell was down too. Dell was
I
down.
didn't trade Dell because Dell didn't have any volume.
Yeah.
Dell never has any volume. Dell's a weird stock. It's kind of crappy.
Yeah, but
Yeah.
both of them are down. So you got Baba up. Dell. Ooh, public service announcement, TLT dividend. So if you have a TLT position,
I do, but you need to have a pretty deep in the money position.
If you're in September, sure. Let's just call it let's just call it a 40-ish cents dividend or something like that. If you're in September with 21 days and you haven't rolled yet, maybe you should think about rolling today. But if you're looking there, it'd be the 85s. I mean, stock's 87. It's not that far away. If you're in October, you're further away. If you're trading the 0 days, you got to take a look at that. Just about every strike will be, every call strike will be at risk.
I mean, if you want a real public service announcement, today is 21 DT.
Today is 21 DT. So I don't know if you should be rolling, and volatility is basically unchanged, even though we're down small this morning. Volatility down 5 cents. Do you think there's a scoopy moment then?
I don't. On a Friday afternoon.
If you forget the past, you're destined to repeat it, Sosnoff. That's all I'm going to tell you.
I don't think it's a scoopy moment, but I mean, let's put it this way: getting short into a lower opening has not worked.
No, it has not. No, it has.
You have to go back about 17 years to find the last time that worked.
Something like that.
Yeah. I mean, I think it's more of an opportunity to buy bonds here than it is to buy stocks.
Agreed. And bonds 114.12 or so. They've been stuck in a pretty tightish range, but every time they get under 114, they've been a buy. 114 and change right now.
Yeah, 114.12. I might nibble a little long on the bonds here, but that's about it. I don't know if there's any numbers. I don't really care, but unless they send them.
Yeah, Fridays Nvidia's down small too, down around $2 or so. After having its wide range yesterday.
Yeah. The other thing is what I want to say. Oh yeah, I wrote down. Don't forget, there's no first call on Sunday night. First call is Monday night instead because of the holiday. So we're doing first call on Monday night, 4:55. Myself.
That's a real public service announcement.
That is a real public service announcement.
And we do have PCE at the bottom of the hour, Sosnoff, personal spending. Just to let you know.
And if you could find it, could you please find PCE?
They tell me it's a big number. I know PCP. I do not know PC.
Can you find PCA's swing, please? Because the guy hasn't hit the ball in 3 months.
He has not hit the ball, but Schwarber has hit the ball.
He went from being an MVP candidate to being a stiff. Schwarber last night, if you watch the highlights, it's great.
I did.
I watched it. Great. It was great.
Yeah, my boy Francis in the chat room sent it to me last night.
Well, I kind of feel like Schwarber, even though it's been a long time since he's been on the Cubs, I kind of feel like he's a Midwestern boy because he went to Indiana.
Yes, he did. And he played for the Cubs.
Yeah, I know. I said it's been a long time.
Yeah. But, you mentioned first call, but right after first call, we've got a rising star, Anthony, one I know you enjoyed interviewing.
Oh, no, not a rising star, a future star.
Sorry, future star. I apologize.
Yeah,
I get my stars all mixed up, Sosnoff.
Yeah, I'm gonna tell you, he's a 16-year-old kid from Florida, and I really enjoyed the interview with him. I think he started with $2,000, and I can't remember the whole story because we filmed it a couple of weeks ago. But he started with a small amount of money that his dad gave him, and then he lost it, right? Because he took a big shot, whatever, typical. And but he really liked trading. His dad said, no more money. He's 16 years old.
Hey, I don't blame him. He's a good parent. He did good.
Yeah. No, he's not like you. Just keep writing checks. I mean, So his dad
My
said,
last one, Sosnoff. You know, I worked really hard when I was young, so
yeah.
I'm able to do that for Vinny.
Okay. So anyway, his dad said to him, and I met the dad. He goes, listen, you want to trade? Go get a job. So the kid went and got a job in a pizzeria, bussing tables,
Nice,
saved another $1,000 or $2,000 and
nice,
started trading. And then he doubled and tripled his account because he'd started Trade Smart. And
nice.
now he trades every day, and it's a really good story. And he did it on his own because it's way different when your dad gives you a couple grand and you lose it when you're 15 or 16. You're like, yeah, dad's got a lot more. Just go to the gas station. When you have to earn $1,000 a clip for yourself, busting tables, splitting tips, whatever it is, then
you're exactly right, and that is like what's the difference between you and I? I mean, everything was handed to you.
You have a much different respect for money. Everything is, well, I grew up with a silver spoon.
Right. One in your mouth and one in your arse. I mean, you had so many. They were coming out of both ends. It was
yes. Yeah.
I get it.
I had the same exact situation trading. Had to make it all and then figure it out. But you know what? When we were growing up, that there was no other expectation.
You're right. There was no other expectation. You were probably getting one. You were lucky. I mean, you were extremely lucky if you got the one shot.
And you're lucky if you got $20. You weren't getting 2,000.
You weren't. You weren't getting a second shot. That's 100%.
No, you weren't getting more than $20.
No, you weren't. No,
and $20 was a stretch. Actually,
I watched some guys back traders. They didn't even put any money in their account. They just said, "Yeah, the money's there. Don't worry. Just make money today."
Oh, I had a couple days when we first started where we were moving our money around from account to account, just to keep the risk managers off our backs.
Uh-huh.
Oh my God. Yeah. We were masters at it.
You had to.
Yeah.
The way it was.
Yeah. I always told the story. I love telling the story when doing a podcast or something, like how we had a specific phone and a phone number. Scott and I had a phone and a phone number, and Teddy, we had a phone that we only gave the number to the risk manager. So whenever that phone rang, like
nobody answered it. Don't answer that.
Nobody answered it. We had one phone for the risk manager, and we had another phone for the wives.
And you know what? That's a real honest way to go through life, Sosnoff. That's a life lesson you're teaching our audience, right?
Well, it's a little different world back then. One phone for the risk manager, one phone for the wives, and then one phone for everything else. I'll never forget one time I was away something in Vegas. My wife's absolutely convinced that all my friends would lie for me, So she calls the office, and the typical answer was, "Tom's in the pit." Right? That's all he says. Tom's in the pit. You can't talk to him. He's in the pit. And she goes, Hey, can I speak to Tom? They tell her, he's in the pit. She goes, I know he's in Vegas. Okay. I was just testing you guys. And they're like, oh, really? I didn't know.
She was a smart one. She knew. Yeah. I know he's in Vegas. Anyway. All right, listen, let's take a quick 90-second break. We'll come back. Even the S&Ps are down 23. It's the first red opening I've seen in quite some time, just about across the board. But we'll get to all of that in Confirm and Send right after we take a quick 90-second break. This is Tastylive.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with Confirm and Send, where we go to viewer questions. But first, let's take a quick look at the market. I mentioned it earlier this morning. Even the S&Ps and the rest of the market seem to be slightly red today. Even the S&P is down 22, NASDAQ down 134. That's your leader in the clubhouse to the downside. Russell down 6 and the Dow down 138. Even volatility is down by a nickel. Usually when the market goes lower, volatility goes higher. So let's take a look at volatility today to see if it catches a little bit of a bid. Bonds are also down 13. Bitcoin, big move to the downside, down 1,700. That's a 1.5% move. That's the biggest mover on the board here of all indices and products on a percentage basis.
Can I make a comment about that? Just a short comment.
Sure.
I think that I know the AI space is very crowded, you know, as far as money, you know, as far as investment and stuff like that. And I think the AI space, as I mentioned yesterday, I think it's laying the technical foundation for many decades to come. What everybody's building right now.
Mm-hmm.
But I think the prices are way ahead of the actual, revenue flow.
Okay.
And I think it's going to be really challenging to keep the margins they have, in the AI space.
Mm-hmm.
But we'll see. We'll see how if we'll see how what competition does. We'll see everything else. But in the digital asset space, I feel like that's probably even more inflated than AI. And the reason is because there isn't really first of all, there's never been an alternative. It's a completely passive marketplace. And there's not a lot more you can do with the technology in its current state, the asset-based technology. And in the last however many years, there hasn't even been a correction.
No, there hasn't been a correction at all. Matter of fact, the middle of this month, we made new all-time highs.
Right. So I'm just looking at the digital asset space and looking at, if you think the valuations in AI are high, the valuation.
Wait till you see what they got going on in crypto.
Wait till you see what they've got going on in some of these crypto stocks, public, private, everything else. Mm-hmm. The valuations are literally insane. And so I kind of feel like that space has the most risk. And I think it's also the space that people think have the least amount of risk. Because nobody sells.
Sure. Yeah. I get
so anyway, I just look, I would be surprised if you don't have a chance to buy Bitcoin a lot lower. That's all.
Well, if you think that, you got to think Ethereum too, because it's actually had better days than on a percentage basis than.
No. Ethereum's been insane. Could you see Ethereum again at probably 1,000 or 2,000? I don't know, but could you see it 3,000 again? Sure.
Oil down 23, gold down $7 and change, silver down 32. Again, these have all been high. They're all taking a little bit of a breather going into this long weekend. We'll see what this weekend brings for us on volatility front and on price. Net gas up 1.50 or so. Going to the earnings side, you had BABA. That'll be your leader to the upside, at least so far. Pre-market up around $5 now or so. To 124.70 on the bid. Marvell will be your big loser to the downside. Marvell 66 down $11. And Dell, I know you didn't trade it, but Dell down around $8 or so, maybe a little bit more.
Dell's like 120. Yeah. I mean, Dell, Marvell, pretty ugly. Here's your one.
Here's your one glimpse of hope right at the bottom.
No. Here's your 730 number.
Yeah, even the S&Ps have caught a little bit of a bid. They've cut their loss in half, down 13 or so. NASDAQ down 92. Russell actually up $2, and the Dow down 80.
This was a nice little bounce in the bonds. They were trading 14.11. Now they're trading 14.20.
Yeah, they just made a new high, intraday high to 127. 427, sorry.
Bonds?
They trade up to 114.27 to 114.19.
Yeah, that was last night.
Oh, was it? Oh, I thought it just happened.
Yeah. No, that's not now. They just traded the high 21.
Sorry.
Yeah, no problem. So
even the S&Ps are back down to 18, taking back half of their gains that they just had.
Yeah.
And it's gone.
And it's gone. And it's gone. I don't think we traded the earnings plays, did we? Okay.
Nope.
That would be it then. All right, you ready for a little confirm and send?
I am, sir.
Cancel rally.
You said we didn't trade any earnings. You sold puts in BABA, didn't you?
I sold puts in BABA and I sold puts in Marvell. It's going to be a complete wash.
Right. Gotcha. Okay.
Marvell's going to be a loser and BABA's going to be a full winner. Marvell's going to be a full loser.
Got it.
They're both junky puts, so they're small. Anyway, let's see what we got here, John. We got a bunch of confirm and send. Be fun. Hold on one second. All right. So this person writes, I am struggling with the roll logic a bit, specifically when it comes to covered calls. If you don't want to close the position because you might have a tax, there might be a tax reason for not wanting to close the position. What's the best strategy when your short call is in the money?
Well, the tax part of it doesn't come from the call.
No. I understand. This person doesn't want to close the position.
Yeah, they want to keep the stock. They like a dividend stock, or just because they love the stock because they love.
They have a very low cost basis, so they don't want to pay the taxes. They want to keep the stock.
I get it completely. Sure. So they're not understanding how to roll the call so that they don't get stuck with having to give up their stock, right? If the call is in the money at expiration, it's going to automatic exercise. They're going to lose their stock and have no position coming in and whatever taxes or anything else they want. But they want the stock. So as soon as you buy back that call and roll to another month, time has premium. That call that you're rolling to, especially if it's at the money or out of the money, is going to have no chance of an exercise at all. So you'll be able to keep your stock. What did you do? Most cases, you took on a little bit more risk because you have more long delta because that call was in the money before. If you're rolling to at the money or out of the money, you're taking on a little bit more risk. If you're rolling to the same exact strike, that strike with time to go by, 40-ish days or so, is going to have no exercise or assignment risk. So rolling is the way to keep that thing going. So the logic behind it is exactly what you want to do. You want to keep that position on. The way to keep that position on is to roll it from one month to the next.
Yeah, I mean, if you have a position on in a covered call and you don't want to close it down because you want
to extend duration, you want to reduce basis, whatever. You're not worried about.
No, because you have very low basis and you want to keep the position on. Wherever you have that on, because if the call's in the money, it's a winning trade.
Right.
Like everything you've done is right. So just roll it forward, keep it going. And if you can, try to roll it up a strike. Try to keep always roll. Like think about covered calls is the market has positive drift. Every month, try to roll it up a strike if you can.
If you can, meaning it's a positive trade. It's,
yeah. Meaning it's a positive trade. If you can roll it up a strike, usually when you roll forward, you can move it up one strike if you're at the money. That's all.
And collect the same amount of
and collect the same amount of money.
Yeah.
Yep. So you can diagonalize it, but whatever, you just roll it forward. Like, don't overthink this. Like, who cares? You're going to say, well, I have a loss on the calls. Who cares? You have a gain on the stock.
You have more of a gain on the stock if you have a loss on the call.
Yeah, you can't lose money on it. If you're rolling a deep in the money call, you're up money.
That's correct. That's correct. You can lose money going forward because you're extending the rate. Not there. Yes.
Sure. You're long deltas. That's as simple as it's that simple.
Yeah.
Let's go to the next slide. Without oversharing, are you just losing money all the time on your short SPY and QQQ positions? Or does theta make up for it when the delta runs against you? Are there strategic ways you take advantage of what the market gives you when it comes?
Okay, let's look at it. Let's think about a vertical spread for a moment. Let's think about a bullish vertical spread. You wanted the stock to go higher and what at all-time highs. One side of your vertical spread is making 2x, and one side is losing 1x. So you are losing all the time on that one side, but you're making money on your overall portfolio. The reason why I give you that example is, yes, Tom has some short delta in SPY, Qs, and other positions. What you hope for is that the rest of your positions in your portfolio and the theta decay make up for that directional bias or loss on SPY and Qs. Does it work all the time? Absolutely not. Does it work more times than not? Well, that's the game plan. Only time will tell from there.
Yeah, I mean, listen, sometimes your theta can make up for your short delta.
A lot harder when volatility is so low the way it is right now.
Well, it's harder, but the reality is this move up, volatility has gotten crushed.
Yeah. Most it's still even on the move down, volatility is down today.
So net on balance, we've made more money on our short on our positive theta short premium positions than we've lost on our delta. Now, that said, if we continue to go higher from here, that's going to reverse.
Right.
Because like Tony said, volatility is getting really low. It's not going to drop that much more. And if the market goes higher, my short deltas are going to get hurt. But it's intentional. I want to be short delta. I don't need to be short deltas here. Right. I don't have any reason to be. I like to play the market a little directionally. That's all.
Yeah.
So, I mean,
but the fact remains, if you didn't have that short delta on, you would be in a lot better position. I mean,
no question about it.
But you don't know. Only time will tell.
Yeah, it's been a drag.
Right.
But again, when we're at 6,400 or 6,300, I don't necessarily think they're going to 6,500. I mean, that's it. It's not. There's nothing else to it. Like
prerogative, right? I mean,
yeah. If they'd gone to 6,100, you go, oh man, that guy's good.
What a genius! What a genius!
What a genius!
Mm-hmm.
Genius loves company. Let's go to the next slide. How many times, or until what time of the day, will you adjust your SPX 0 DTE positions?
I mean, hopefully you put it on a little before 9 o'clock or so, and then you take it off around 10 o'clock and you have a nice little profit and you don't have to worry about a darn thing. And this question is a silly question because you've already booked your profits and you've spent it. So, but that doesn't work out all the time, right? I mean, all things being equal, if you're sticking with the research, you would probably be adjusting up until the middle of the day, sometime around noon or so, and then you'd be, maybe throwing in the hat if it's not a position that's working out and closing it sometime around noon, because the volatility of the position gets a lot more whippy, as time goes by and there's less time to go, a couple hours left to expiration. But listen, you'll do it right up to the last minute in SPX. There's no exercise or assignment risk, so you can go all day long if you want to.
The other day I did an iron fly. So basically I sold a straddle and bought the wings. When you sell a far out of the money strangle or a iron condor, the likelihood of making a lot of adjustments is pretty small.
Right.
You sell an at the money straddle like an iron fly.
Right.
The likelihood of making a lot of adjustments is pretty high. I made 3 adjustments in the first 20 minutes.
Right.
And then I closed the position because the market started to rally up. So I just rolled the puts up 3 different times.
Yep.
And then when the market flattened out for about 15 minutes, I just took the position off because I didn't like it anymore. But I will roll an unlimited amount of time. I mean, an unlimited amount of times, but until what time of the day? Usually, like Tony said, maybe an hour or 2 hours into the trade, then I'm done.
Yep.
You know, I don't really care about 0DT positions that much. So I was with somebody last week that trades 0DTs very differently. Every day, he sells 0DT puts out of the money at 20 delta and doesn't even look at them.
I get it. It's a bet on
worked. He said if I look at it, it messes me up.
Yeah.
If I don't even look at it, he goes, it's been the best trade of the year.
Right. Remember, well, I mean, we're at all-time high, so that
Yeah, of course.
that helped the position directional bias. And SPX is cash settled. So at the end of the day, it expires to cash. There's no stock the next day. So really is just, it's like saying I want to bet X amount of dollars on a game and I'm not even going to watch the game. I just like that team. And
And he was doing it small, like in, I think it was MES, using MES, which is 1/10 the size of ES. So it's a small trade, and just selling some puts every single day on the opening and not looking at them again. He goes, it's the best strategy I've ever used.
Yeah, sure.
I don't like that. So I will never do that. But that's what I mean. There's so many different ways to trade this market.
Of course.
Let's go next slide, John. Is it normal to have a few problem children positions all the time? How do you know if it's time to cut the position, cut bait, and book the loss?
I mean, I let the market put me in positions. Like when I'm opening a position, selling premium, I like high IV rank. I like some sort of extreme on the stock one way or the other, high or low. And that's what dictates me putting on a position with tight liquid markets. It's always the caveat, tight liquid markets. And I kind of try to do the same thing on the way out too. Now, granted, I would probably say, and maybe most of anybody who's ever traded would say that they stayed in positions, too long. You always remember those bigger losers than you do the bigger gainers. But if I'm looking to cut a position loose and book the loss and get out, it's because IV rank is low, the opposite of what I put on. Markets maybe have gotten a little bit less liquid and the stock's not in play as much, or it's gone to an extreme that I can no longer defend. So for me, it really comes down to the opposite of what got me in the position is when I look to book the loss. But I'll be honest, probably stay in the positions too long. Earnings looming is another reason why I might take off a position, especially if it doesn't fit my earnings assumption.
Is it normal to have a few problem children? Well, I have a lot of positions. Smaller, right now I'm smaller than usual. Right now I have about 50.
But it's cold out, sure.
Right now I have about 50 positions.
But you took off your top. I see that though. I mean, we got one layer of clothing off. We just got to need one more, ladies and gentlemen, one more.
I usually have about 80. So I'm about 30 positions light. And which is super weird for me, but it is what it is. Now, that said, yeah, I always have problem children. There's always something. If you have a lot of positions on 50 positions, you're going to have some problem children.
Sure.
This morning, I only have probably one, which is pre-market. I can only tell of one, which will be Marvell. Everything else should be fine because I'm a little bit short. But I have problem children every single day. We talk about it all the time on this network, all the time.
Problem children right here in this house. What are you kidding me? Everybody has problems.
Yeah. I think they're talking about your positions, not you.
Oh, sorry.
Well, you've got 150 kids. I mean, you're going to bound to have
some problem.
Yeah. I only have 2, and so they're all right. My kids are overrated, but all right, they're good. My daughter absolutely hates when I say that.
I'm sure she does.
Let's go to my next. if I want to sell a put, why not just sell a call and make it a skewed strangle with long delta, using close to the same buying power? Would there be any disadvantage to this compared to a short put alone?
I think like you, and I think using the buying power on both sides is probably the best use. It is the best use of my capital. Now, the caveat to that is, what if we reach all-time highs when just about every call is going to be breached that you put on, which is where we are today. So if we were looking back on a study set of a short period of time, the last 6 months or so, selling this call would have been detrimental to the position. If you would have just sold the put alone, it's all direction, it would have been the best play on the board. So again, it comes down to direction. I like selling both sides. I like this approach if you're leaning a little bit long, especially with high IV rank. It seems logical, but it would not have worked the last couple months.
We have done a lot of research on exactly this topic, and there is zero. We could find zero reason not to sell the call if you want to sell a put.
Yep.
So, in other words, if you want to sell a put, just go ahead. I mean, our research shows, and listen, we messed this up too. I mean, there's lots of I'm short a bunch of different puts, and I'm really mad I never sold any calls against them.
Sure.
How many times have you sold a put and you're like, damn, I should have sold the call because this stock hasn't had an uptick, you know? And we're not talking about the same delta. You sell a junky delta call.
Yeah, agreed.
Yeah, I mean, our research is clear as day on this. You always end up better off doing both sides.
Right, but a short period of time, I mean, you're going to get different results.
Yeah, there's definitely outlier cases where you're going to get, like, you know, choppy.
Yep, choppy,
washy. Let's go to the next slide. Following a binary event, like a Fed announcement, you frequently say to fade the first move. Can you please explain what that means and what's the thinking behind fade the first move?
Yeah, I must have some new viewers, so I appreciate all your questions here. I mean,
we do have new viewers. We have a record number of, for people that are new to Tasty, welcome. We have a record number of people on every single day, which globally, it's like a ridiculous number of countries, people logging in from. I think over the course of last year, we hit almost every country. I think it was like 180 out of 190 or something. Some countries you can't log on. And then we've had, we take accounts from like 60 different countries. And we've had, I think this year we're going to hit 500 million views.
Wow.
Awesome. So it's a crazy amount of tastiness out there.
Sure. That's awesome. Well, to get to this binary event, which is a Fed announcement, we do typically say, and we've done the research, that 24 to 48 hours after the Fed speaks and the market makes a big move in one direction, that we usually reverse that move. So that's what we're thinking about doing, taking the opposite direction, a contrarian role to the Fed market's move after they come up with their announcement on some sort of interest rate number or something like that.
Yeah, it's kind of the pure contrarian play. The assumption here is that the market overreacts. That's all it is. There's like this assumption of overreaction, and sometimes it works. It works more frequently than it doesn't. Let's put it that way.
Yeah.
So, and we like to fade the first move anyway. So it's just the way we trade.
Pretty natural for us, sure.
Fade the first move just means if they go up, you sell them. If they go down, you buy them. That's all. And the thinking behind it is just that historically, markets tend to, after a binary announcement, markets tend to just normalize within the next day or two.
Yes, sir.
John, let's go to the next slide. I know you are product agnostic, but what would be wrong with becoming an expert in a couple of underlyings instead of trading everything under the sun?
Well, Sanav, I think this is probably a question for you because you're an expert just about at everything. So, you can answer this question from a different perspective than us mere mortals.
That's why I don't need ChatGPT.
Right. This is why you don't need ChatGPT. This is why you're always correct.
This is why I don't need AI in any sense. I mean, this is,
That's right.
you know,
Well, and I'm assuming you're talking about calls and puts here. I mean, if you understand calls and puts in an equity stock, then you understand them in a futures product, and you understand them anywhere across the sun here. So it's all the same. So consider yourself just like Tom Sadnoff and not like Tony Batista. You too are an expert in everything.
my wife used to say to me, she goes, I don't even know why I need a doctor. I have you. You know everything.
Right. Oh, you're a doctor now too. That was one of the best lines I've ever heard.
Yeah. Oh, yeah. You're a doctor.
What don't you know?
I should just listen to you. And I'm like, you should. And it's just like, yeah, right. But what could be wrong with becoming? There's nothing wrong with it. In fact, I spent 19 years of my career trading one product. And I mean, I'd like to think I was an expert in that one product, more so than anybody else in the world. But Tony thought he was an expert, and the next guy next to me thought he was an expert. So even though you're an expert, I don't know that matters. But
being surrounded by experts is a good thing, right? I mean, you pick up other things that you didn't know you knew.
I have, there's a lot of things that I've been told I know that I didn't know I knew. But listen, there's nothing wrong with trading a small group of underlyings and getting very comfortable with those underlyings, the strike prices, the rolls, the levels of volatility, you know, what the expectations are. There's nothing wrong with that. We're doing a show. You know, we think it's kind of fun to trade as much stuff, to talk about as many different things as possible. And I like taking trades that customers, you know, suggest. I like trading stuff where the volatility is really high. We're always looking for opportunity. You know, I would have said to you 25 or 30 years ago, yeah, you should only trade a couple of products and get very good at them. But the technology stunk then. Now the technology is so good, you know, I can trade soybeans with the exact same platform that I'm trading bonds, with the exact same platform that I'm trading, you know, Baba and Marvell in. I mean, there's no limitation to what you can do.
In the same speed too, which is really
the coolest thing about Tasty is from the same interface.
Right.
Like, you're not going to go to a different page, you don't do anything. Everything's the exact same with all the same logic and all the same mechanics. But sure, you want to trade a couple? Sure, no problem. Got no issue with that.
Hey, whatever works. If you're profitable, keep doing it. Don't.
Oh my God, whatever works is the best line. Don't change. Let's go to the next slide. The last 2 days have been incredibly slow. Do you still make adjustments on days when there's very little volume? It feels to me like the price action isn't being driven by anything, and I'm best off just not doing anything.
Do you still do you make adjustments? So they're talking about existing positions. Yeah, I mean, I stay as mechanical as humanly possible. So, and it's the hardest thing when there's no movement in the market, or just one directional movement, a stair step higher or stair step lower. It's the toughest thing in the world to sell them in the hole, meaning keep selling them lower as they're going lower and buying them higher as they're going higher, to adjust your delta from getting too short or too long. It's the hardest thing in the world. When markets are moving around back and forth, you get a little bit of flow, even if you don't have a good position, but you hit a little bit of a top when you're rolling, a little bit of a bottom when you're selling. You know, it's okay because you feel like you have opportunity. When you're doing it like it's been the last couple of days, well, I think you're in a much better place if you rolled than if you didn't. So I stay as mechanical as I can.
Last week, the Bat and I were in Mexico, and we were, you know, working, vacationing, the whole thing. And so we're not dating, just so you know. And
not anymore. We broke up after the Mexico trip. I mean, you really promised me a better future than this, but okay.
When I say my wife, I'm not talking about Tony. That's my work wife. And so we were doing a lot of stuff during the day. So it was very hard for us to trade. And a couple of times we were able to sneak off into, you know, somebody's private office and make some trades. But for the most part, we had stuff going on.
Sure.
And the markets were really slow.
Yep.
And so we didn't really get hurt by not being able to make a lot of adjustments. But I felt incredibly uneasy. Like, I think I spent a lot of time on my iPhone just logging in what felt like every 10 minutes.
Sure.
And I made a bunch of adjustments using the iPhone app, but I didn't really adjust as much as I normally did because the markets were slow. Occasionally, the markets give you a little bit of a break like that. But no, we do not we don't take days off. So just because the market's slow, it's not like we don't trade. I mean, there's nothing to do. There's nothing to do. But if the market's moving around, we'll adjust.
And like that teacher you had in school who had eyes in the back of their head, you're always watching, right? I mean, you're always watching.
I mean, I'm always watching. So is Tony. But not everybody wants.
You're looking for opportunities. I mean,
Yeah, I know, but not everybody wants to be like a sick junkie like you and I are.
I know.
Let's go next slide. As someone who has started multiple companies, what is the biggest mistake you made? I'm starting my own business and I'm looking to avoid potholes where I can.
So I think they're asking you this question because I mean I know your biggest mistake actually was telling my mom that you would take care of me and you wouldn't let anything happen to me. So I appreciate that, Sadhna. But I think they're talking more in a business standpoint, not a personal standpoint. So why don't you answer it?
Yeah, that was a mistake telling your mom that because then
I promise I'll take care of them.
After she passed, then I'm like, okay, great. Now I own this.
Now, no takebacks, right?
Yeah, no takebacks.
Uh-huh.
I've been asked this question. We've done multiple podcasts on entrepreneurship and businesses, and I love talking about this. The biggest mistake you can make is not moving forward. Like, don't overthink things. The biggest mistake most entrepreneurs make is they think too broadly. Like, they're thinking everything. Like, I can build this ecosystem and then I can do this and I can, there's 50 things. I can do AI and digital currencies and I can manufacture this and I can, I was talking to somebody.
I got everything to everybody.
Yeah, I got pitched the other day something when we were in Mexico City. I had breakfast with somebody, really nice guy who I really respect, and he's got a very, he's got a good business and he wants to grow his business. And we sat down early in the morning and we talked about, growing business, raising capital, all that kind of stuff. Mm-hmm. And I've known him for a while, totally legit. And he gives me a speech where he says, I'm going to do this here. I'm going to do this in another country. I'm going to do this in a third country. I'm going to do this in the US. I'm going to do this in Latin America, Canada, Europe, blah, 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 all these different things. I'm going to build a program for, this person, these kids, these adults, whatever. And I'm like, dude, narrow your focus. Do one thing and be the best at it.
Right.
Like, do one thing and do it really well. You're comfortable taking risks. That's a great thing. You're comfortable making decisions. That's a great thing. But don't think too broadly. Like, the biggest mistake everybody makes is they think people want to hear this big picture. I'm like, no, don't tell me your big picture. Just tell me how you're going to double your revenue and tell me how you're going to narrow your focus and do just one thing really right.
Right.
And after all the people we've interviewed, Tony and I interviewed about probably 1,500 people on Bootstrapping America before we turned it over to Christy and Dylan. Mm-hmm. And I would say the biggest mistake is focus. People they think too big, and you've got to, it's okay to have big dreams, but people don't want to hear about that. They want to see you do something.
Sure.
They want to see you create, like, every business we've built, we've created revenue right out of the chute. Like, that's our business. We build great revenue, build a profitable business. That's all. And I think that's what investors want to see. If you want to avoid potholes, stay focused.
Very good, sir. Good job out of you. Sadhna, we got the top of the hour here with even the S&Ps down 17, NASDAQ down 103, Dow down 104, Russell down 220, all quiet right now. But a sea of red for the first time in recent stock market history. We'll take a quick 90-second break and come back. We got more with This Week in Stocks. Jamal next.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tastylive.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. I know that. Don't say I'm.
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring the person speaking to you. That's at 7:53 on Friday, and I don't want to say it, but I got bingo! Sazlon bingo! I won! John, can you come in and validate this, please? I would like to have. I have the times and the references.
Yay!
Good for the good guys.
Woo! We got a winner.
Pounds
winner,
and claps
chicken
on his
dinner.
desk. You get the free square of the bat in the middle. Accordion hand gesture. You take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. Starting off with this man, Jamal, this week in stocks. How are you, my friend?
I'm doing well. I'm doing well for the most part. Like we were talking about off air, it is it's a little annoying around my house right now. Somebody's a little bit too happy with the Michael Parsons trade. But, you know, we're taking it in stride. We're going to do it.
Hey, nobody told you to marry a woman from Wisconsin.
Yeah, you have a Packer. You have a Packer wife?
Yeah.
He's a Packer wife. I know.
Yeah. To be fair, I mean, again, you know, you guys know this. I didn't grow up here. I wasn't always a Bears fan. I grew up in Miami. I was a Dolphins fan. I had love for the 49ers, too. That was the team of the decade when I was growing up, of course. And so we didn't interfere. We didn't intersect, you know, like it was never really a thing. until our youngest came along, and he's a Bears fan, and I have to stick up for him because, dude, she would do mean things to him for sure. I mean, she's done things to our kids like, "You sure you want to wear that shirt to school today? I don't know if you really want to wear that Bears shirt. I don't think that's a good idea. Like, you can't do that to kids. You can't rob their confidence like that." So I had to step in.
That poor kid, man. When your mom's a Packer fan, that's a tough thing.
I know. At least it's better than being a Cowboys fan, though. Look, I am happy that the Cowboys lost this situation. He really tried to turn that whole thing around. I mean, he seriously did. Well, this makes us a better team, and we need to stop the run. Stop the run in a pass-heavy league? Come on, Jerry. Come on.
Well, they're going to have 4 first-round draft picks in the next 2 years. That's pretty good.
No, that's a heck of a haul. That's a heck of a 4. I thought it was just 2. What do you mean 4?
They have their own 2.
Oh, yeah.
They're gonna have a lot of. Yeah.
It's less than what the Bears gave up to get Khalil Mack. That's one thing. I mean,
plus, if I was the Cowboys, I would have done the deal with the Bears because the Bears are gonna have a worse record than the Cowboys to get better draft picks.
True. Yeah. Agreed.
Look at you.
Yeah, no, it's
inside the box, Osnoff.
Yeah. Look at me. Look at you, Pikachu.
It's a good time of year. College football was on last night. I mean, I was watching. We were watching the Badgers, actually, Wisconsin Badgers, who were struggling with Miami of Ohio. That's not good to start.
Did they win?
They won, and a backup quarterback kid came in. I actually think the backup is better. That's who they should go with.
Because Miami, they were 17.5-point favorites.
Yeah, they were. They did not won by 10. It was only it was 17 zip actually. Wow, Vegas always knows, doesn't it? It's close.
17.5, and they won by
17 zip. Yeah, that's pretty good. That's pretty good.
Good market maker. Good market maker.
The last day on college football, Miami Notre Dame is this weekend, guys. Again, I tell you, I grew up in Miami. You know, I'm a Canes fan. Oh, getting back to Miami Notre Dame, yes, sir.
I went to the convicts versus Catholics game back in the, I forgot, was that in the early 90s or whatever? 88. Right. My next door neighbors, first condo I bought in Chicago, my next door neighbors both were 7-year domers. They went undergrad and then they went to law school. Both of them, husband and wife, 7 years. Their whole house was in Notre Dame, colors, everything. They led Notre Dame. They dragged me to that game and we tailgated and it was an unbelievable game.
It's good times, man. It's good times back then. I miss those days. Hopefully we can get this rivalry up again. I have a lot of Notre Dame friends now that might not become friends anymore.
Oh, can't let sports get in the way of a good friendship. Look at your relationship.
Yeah, exactly. No, that's out of necessity. It's different. Let's pull up the slides. Let's talk about the week. It was a little quiet, but there was a lot that happened this week, of course. Let's move to the first slide. S&P 500 is up for the 4th consecutive week. Russell 2000 and Dow Jones are also the same. NASDAQ is a little bit out of whack with them. It's been down 1 week, but these 3 have been up 4 consecutive. We had NVIDIA earnings this week, and basically the biggest thing was how they're in the middle of this U.S. and China situation with tariffs. But AI is not slowing down. That's the one thing that they showed, so it's up in a way there. Definitely a quiet earnings though, which I feel like a lot of us thought. I don't know if you guys did anything. I didn't do anything in NVIDIA, but I kind of felt like it was going to be an inside movement, and boy, was it ever.
I was bearish, so I only sold calls, so that worked. But the earnings plays in general have been very modest for us, Jamal. We've Tony, I don't think we've had a. I don't think
outlier move. We've avoided them if there have been any because of liquidity. So
I don't think we've had a big loser. I think there was one earlier in the cycle that wasn't good, but I can't remember what it was. But it wasn't bad. Like, it wasn't horrible. And we've had a lot of really small winners. But I don't think we've had a bad loser this cycle, which is good.
It's a good sign. If you can't remember, that means it wasn't a blowout.
Well, it wasn't. It didn't blow out all the winners. Let's put it that way.
Right.
Yeah.
Apple's been in the news. There's rumors that they've held talks about attempting to buy basically some different these AI companies, whether it's Mistral or Perplexity, that they can upgrade with Siri. They're starting to feel like they're getting left behind a little bit here. U.S. economy beats estimates by expanding 3.3% in the second quarter. No tariffs seem to be affecting consumer spending, people who like to buy things, which is good for the economy, of course. And the VIX and VVIX are hovering near their lowest levels of the year, with readings of 14.43 and 92, respectively. Vol is pretty low.
Yeah, and Vol's even low today with the market down. I know it's only down a skosh here, 15, 20 handles on the E-mini S&Ps, but still you would think at all-time low levels or recent low levels that it would catch a little bit of a blip on any down move, which we're not even seeing here today yet.
I think this morning, you're going to see vol a little lower than later today, Tony, because I think going into a 3-day weekend,
we'll get a little bit of vol expansion.
Yeah, I do. I think the vol sellers will walk away this afternoon, and I think you're going to see vol perk up this afternoon, even if whatever the market does. I think vol's going to perk up this afternoon.
Yeah.
There's a pretty. We can move to the next slide, John. There's a pretty big difference between front month and second month VIX, right? Right now, I would say this is not it. It was probably got to be about $2 and change, right? I don't have the platform in front of me, but
I can tell you, right?
What do you
I looked the other day, it was almost $2.20, I think.
Yeah, I think you're right, but hold on, I'll tell you.
Pretty big.
Yeah, it's pretty. You mean the carry?
Yeah.
Yeah, it's pretty big.
Yeah. This is the forward curve for the Fed funds rate, and when you look at August, September, October, November, December. Basically, we're looking at effective rate of possibly 3.85% for 2-year yields by the end of the year, which is pricing in basically 2 cuts. And a whole full year from now, we're out to 3.17. So rates could be a lot lower within a year's time. We'll see, though.
Yeah, they've been talking about that now for 2 years.
Yeah, I know, but it seemed to gain traction a couple of Fridays ago, right? That big rally. Right.
Listen, this chart in front of you is why we are staying long bonds. Long bonds means you're betting on rates going lower like this. And this is why we're staying long bonds every single day for the rest of this year until we get a rally. And it so far hasn't gone anywhere, but it's worked.
It is wild how we can have this. Obviously, this is a future looking ahead in this pricing, but bonds have been fairly, steadfast, sitting around 113, 114. You talk about ZB, right?
Yeah, but the funny thing about bonds now, which I think is a little weird, is that even though they haven't gone anywhere, the put prices keep getting a little cheaper, almost like a commodity where they have a floor, So the puts are a little cheap, but I think the best play out there is to be short bond puts. But there's buyers. There's no question. There's put buyers every single day in there.
Yeah. Let's move to the next slide. Is this getting a little out of whack? This is XLK to XLF, tech to financials. Of course, you can look at this ratio. You can look back at the .com era when obviously tech started to fall off. You can look at the global financial crisis, and then you can see the pandemic and the AI. Is this starting to trail off? Is this something to trade, or is this a situation where tech is just going to be outpacing financials?
So this is tech over financials. These are all over tech tops, right?
Yeah, I don't know if you call them tops, but they're heights.
I mean, it's a weird relationship. Like I don't really look at tech and financials. Like I don't even know what that pairs trade would look like.
Well, I mean, it might be something like a NASDAQ Russell. I mean, on a very kind of broad-ish base.
Maybe. Okay, that's fair.
Yeah.
I mean,
it's not a one-to-one correlation.
Yeah, you sell NASDAQ by Russell is what you're saying.
Yes.
All right, that's fair.
Yeah. Or just in general, do you feel like financials have kind of been left in the dust, or is it just really tech is really outpacing by that much?
I just think tech's outpacing. I think some of these financials are priced stupid as well. I mean, like you can't look at like Goldman Sachs and JP Morgan and go, oh my God, those stocks are dirt cheap. I mean, they've gone up 1,000-fold since 2008. I mean, it's their prices are in the stratosphere.
So that's what I just looked at yesterday when I was thinking about this, and you lose sight of like the price, right? Like honestly, if you would ask me yesterday what price I thought Goldman was, I wouldn't have said $700. I kind of lost sight of the fact that wow, this is a $700 stock now.
Sure.
JP Morgan $300.
$700 and they can't even make a market.
Right.
Yeah, right.
JP Morgan $300. They can literally not make a market.
Yeah, right.
So I'm not so positive that like I said, they're making money because they've annuitized their customer base and they've annuitized, their models, the fee structures. They're running unchecked right now, but God help them if they ever have to make a market on anything.
And see, you know what? And then this was actually makes me think even more about this whole thing. Actually, I didn't really. So Goldman and JP Morgan are obviously not the ones that are getting left behind when we look at this chart. To me, this chart says there are a lot of names that are techs that are not just Nvidia and Apple and Microsoft that are pushing this higher. And that's not quite the same in tech.
Yeah, sure. Agreed.
Let's move to the next slide. This is the 10-year yield minus the 3 months. So any chance of rate cuts at some point in time will be reflected in here. This thing crossed over in October 22, and everybody was screaming recession at that point in time, right? When it crossed and went negative. And now it's just sitting pretty flat. Surprising that it's actually not a little bit higher giving. This is kind of reflecting some of what we were talking about. Not a whole lot of, even though people are expecting rate cuts, not a whole lot of big change here as of yet.
Agreed. I mean,
you take a look at the long end of the curve there, like, the ZB bond, and, we're sitting at 114, what seems like, forever. And that's reflecting here what you're getting in this relationship between the 10-year and 3 month too. So yeah, it is all quiet. Do you think that means that bonds are going to have a lot more volatility if they do get some sort of rate cut coming than the overall market?
I would think so.
I don't think so, Tony. But I mean, I can tell you that what scares me the most about bonds is I kind of feel like everybody's, because the puts are always bid, I feel like everybody's buying bonds, buying puts. And I feel like, that's their protection. And it's been too easy to be short puts in there. It's been too easy to be long bonds. They've taken one swing at you all year. I don't know. Is it possible everybody's wrong?
It wouldn't be the first time.
Be the first time.
I mean, that's a crowded boat.
Sure.
Right now, the world's not sitting around short bonds going, well, I think interest rates are going to go to the moon. Every single person thinks interest rates are going to get cut. And so you've got 99 people on the boat, and I'm one of them, thinking that rates are going to go lower, and you got one person on the other side. Usually that one person's right and 99 other people are wrong. I don't know. It just scares me a little bit.
Similar to the dollar, right? There's all these people who are short. At some point, that's going to change too.
We'll see. Yeah.
Let's move to the last slide. The de minimis exception actually already ended at 12:01 this morning. So it's going to cost more for shippers and customers. Packages that are under $800 will no longer be duty free. There was an additional 25% tariff placed on India on Wednesday, brings the total to 50%. Apple is holding their an event on September 9th to announce new products, including the iPhone 17. I've been long Apple heading into this thing. We usually see kind of a buy the rumor, sell the news and that, right? Tesla sales in Europe fell 40% in the month of July. 7th consecutive month of declines happened to coincide with January, right? When people started in office. So looks like you were ahead of the trend, so I was often getting rid of your Tesla. Seems like nobody in Europe likes it. Maybe you're kind of European. I don't know.
You know what? We saw.
Consider yourself European, sound enough? I mean, I know you consider yourself a.
But last week we saw the BYD, a lot of them.
Yes.
Do you know what it stands for? BYD.
BYD. It stands for.
Come on! I told you when we saw one, it was on the car.
Something. Build your dreams.
That is correct. Build your dreams, just like Jamal did with all these slides today. He built his dream.
Yeah, exactly. Wait, it really does? Isn't it a Chinese company? It stands for Build Your Dreams?
Yeah, I mean, that's what was on the car. It was, yeah,
that's what BYD stands for. Build your dreams.
No, it doesn't. You guys made
build your dream under a communist regime. Nothing says oxymoron like that.
Research August 25th, the market measure how volatility impacts options skew. Check that out. That's all I got.
Apple is one of the buckers today. It's up a couple of pennies, not that much, but it is a bucker just the same. And Tesla is also one of the buckers, trading 346 on the bid. It closed at 345 and change, so it's up about 30, 40, 50 cents. So you named two of the buckers in the market today, with the market being a little bit weaker. The Russell, which we talked about the Russell NASDAQ just a moment ago. Russell just turned green for a second. NASDAQ still down over 100, 114. Closer to its lows than its highs for sure. Right now, even the S&P's hanging out at 6,500. I'm going to ask you both a quick question here. I mean, expected move in the E-mini S&Ps for the day is closer to 30-ish handles. Let's just call it 34 handles. What's the odds we close this weekend at right where we are, 6,500?
Pretty damn good. 34 handles seems huge to me.
It does seem huge. I agree with you. Yeah.
I feel like there's been a lot of days where we start sort of like this, especially this week, where we're kind of down, and then before you know it, we end the day, a little bit higher, and somehow sit around the expected move. So I don't know. I would say we're gonna end up 6,500. I don't see how we can't. But
it's that roundish number that everybody's looking at. All right, everybody, let's take a quick 90-second break and come back, which only means one thing. We're going to be up or down 50 handles today. We'll take a quick 90-second break.
I was going to say it's almost a lock. 64.75 lock. Put it on the board.
We'll take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell. That's right, Sadlov. Good job out of you. You got it right again. I'm back in 90 seconds. Thanks, Jamal.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Calling all traders. Are you using Tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient, and Tastylive does it again. They teach it in a way that is fun, it's easy to understand, and you're learning from people that have done it for 40 years.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University, #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago, #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign,
Number 18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. The opening bell is imminent here in about 3.5 minutes or so. As I quoted the E-mini S&Ps for most of the morning, they are down. They're down by 14 handles, south enough. That's about where they were after that number came out at the bottom of the hour, back at 7:30 or so. A NASDAQ down 100. Russell catching a small bid here, up $4.70. And the Dow down 80. Volatility in by 15 cents. That's the lows of the day. 1660 is the low, 1690 is the high. They're sitting at the lows of the day with the market lower too. Interesting. Bonds down 17 now to 114.09. Sosnoff. Bitcoin trading down 1,500. Ethereum down around 95, well, 56 on the futures. Oil down 24 cents, small move there. Gold, small move up $1.90. Your earnings plays, Baba is the first one. Baba's going to be higher by about, they've been holding steady. Baba's now up a little bit more than it was before, South enough. Baba was up like $4. It looks like it's up more like $9. Marvell, MRVL, looks like it's trading 65. That's down 12. That's a little bit weaker too than it was earlier pre-market, and Dell was down around 8. Looks like it's down around 10. So all the earnings staying in the same direction, maybe getting a little bit stronger.
They got it to 07. You know, it's weird. I've just been thinking about the bonds. I mentioned this to you. Everybody's long them. I'm comfortable long them. Something's bad's going to happen in there.
You're just too comfortable being comfortable?
Yeah. I hate Marvell. Don't ever let me trade that stock again. I hate that stock. I am short the 69 puts. That's not going to work out.
No, that's not going to work out.
No. And we're short a bunch of puts in Baba. That will work out. But other than that, I mean, I don't know. I mean, I think this is going to be a good opening for short premium, short delta positions like we have, but we'll see.
We'll see. It might.
I don't see anything else that's in trouble here today. We do need a bounce in JD.com, so maybe for once it's up 40 cents. So maybe we got a little bounce in there. That's about it, man. I'm ready. I need more positions.
We need more positions. We need volatility to creep up a little bit. We need some market movement here, two-sided action. Yeah, you are correct on money on the sidelines, ready to go. We're at or near all-time highs. Volatility at or near all-time lows. Not the best scenario, South, for putting on new positions, unless you're going to get a little bit of delta direction. And even then, I think you might be looking at diagonals because we have not had any signs of market capitulation. We haven't had volume surges. We haven't had two-sided action. We haven't had volatility bid when the market. We haven't had volatility bid when the market's going higher. I mean, it's been really all quiet. Nobody's scared. You're not scared in your bonds. Nobody's scared in their stocks either.
Nope, I'm not scared. Can't scare me.
Let's see what's moving the market a little bit lower. You are correct, Sadnaf. Marvell down around $12 or so. Dell down around $10. Meta also down around $7. Netflix down 4.5. AppLovin down around 3 and change. AVGO down 4. Nvidia down $2.40. That's a 1.33% move in Nvidia. Coin down $2 and change. On the upside, South enough, let's see what's moving the market or trying to keep it higher. Affirm up 13 and change. That's a big move, 17% move in a $94 stock. Big move there, taking some of the glory away from Baba. That's up just about $10. That's
purposely, just so you know, Affirm, we were very nervous about the upside in there. I did not like the skew or anything, so we stayed away from Affirm. It was a good no call.
Yeah, sometimes it's better to be lucky than good, but you come up with your assumptions because you've made enough trades that you see something that's not there, you see something that is there, meaning what the skew is, and looking around at the markets, and you make an intelligent decision to stay out of harm's way. Tesla up $2 and change. That's all I got, Sadnov. Kind of a little bit of a tug of war here.
Yeah, I got to figure out what to do, and
yeah. That's your Baba buying back some putties at a penny, which makes sense as Baba is lower.
Somebody's got to sell those puts eventually. I got to do something in Marvell. I don't know what to do. I got to sell something, honey.
Yeah, I didn't make that mistake in Marvell. I've traded Marvell a couple of times over the years, and it's just a hard one.
Oh, it's a hard one, all right.
Mm-hmm.
I don't know what to show. I don't know what to sell. I guess I got to sell some any call. Sell a call, any call.
Mm-hmm. Mm-hmm.
Not sure what else I can do. Sell a little Bobalicious. I refuse to pay anything more than
a penny.
I refuse to pay anything more than a penny.
Okay. Well, to get the direction right, I mean, you're basically in the 0 days. Today is the day, so
yeah,
I don't mind.
Yeah. Yeah, I'm not exactly sure. Trying to fill something in Marvell, but not having a very good luck. I'm trying to sell something, anything.
To reduce your delta, you're saying, right?
Yeah, anything. Find a call.
Mm-hmm.
63, 64, 65. Sell a call.
Sell something.
Sell something, honey.
Do something.
A little bounce. Baba, let's see what do we got here. Anyway, what else? All right, what else do you think here?
So far all quiet. So not really. I'm not seeing any kind of big outlier move one way or the other. I mean, I think volatility, as you and I both said, it needs to catch a bid here going into the long weekend, or we are really going to have another green market here today.
We took a quick gander through all the different stocks to see what's Nvidia's a little ugly, which kind of doesn't surprise me. TSM's a little ugly.
Nvidia is weakening now by almost 2%, down 3 and change, almost 4. Yeah, you're right. That's hurting the Nasdaq, which is down 135.
VIX one day is at $8. I wouldn't expect too much there. Let's take a look at our positions also real quickly, because I didn't really look at go through positions today, see if we have any problem children. Bonds, for sure, a problem. Marvell wiped out our BABA profits.
Wah.
I blame you 100% for that.
Of course. Marvell, a big move lower, 17%. You're not going to get that kind of volatility for earnings.
That is the second time in a row that PIG did that.
Well, it got me the first time. Didn't get me the second time because I'm SMRT smart.
Got me the first time, got me the second time. I you know what, Pat? I don't like him here today. I don't like him.
Okay.
I think the rally cry. I don't like your call. I don't think they're going to rally.
Well, here, look, I'm looking at volatility. We have a $35 expected move for the market all day today. We're down 20. It's been a very quiet week, volume-wise, on the E-mini S&Ps. It's been
I don't like them.
Almost anemic.
I'm not looking for your rationale. I just don't like them. You don't have to give me.
Well, the fact that you don't like them makes me feel a little bit more confident. Again, I'm not a big bull here. I just don't see anything in the tea leaves that says, we're crashing into this long weekend. And by crashing, I don't going red.
Yeah, I don't think we're crashing.
Yeah.
But
all right, you ready to take a quick 90-second break? We can come back. We got fast markets. Sosnoff, our viewers came to bat for you. They decided to say, hey, this is what Sosnoff should trade and come up with something good. Don't disappoint us. You want to do that?
Yes.
Don't let the viewers down, Sosnoff. We'll be back in 90 seconds. Fast market next. This is Tasty Live.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tastylive.
I'm running Snow Leopard with this.
I'm a Mac. I'm a Mac. I'm a Mac. Gee. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Your outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see the star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? known by the ladies as the toolbar. 10-hour battery life. Force, quiz.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Now, don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. If you didn't know that, I don't have any idea why you're watching.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it!
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 80...
82, 83, I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same
16
team.
inch?
12 inch.
With gloves. Because
gloves.
We were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him to use a charity case.
Tomas! Back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with Fast Market. Fast Market.
That music gets you going every time, doesn't it?
It does. It gets the juices flowing, Sadnaf. I'm not gonna lie.
I don't like them today.
You don't like them any day.
I don't like them today. I'll leave it there. I don't like them.
Okie dokie.
NVIDIA, you couldn't just open here yesterday, huh? You had to rally back.
Well, you've got some things in your camp, Sosnoff. You've got bonds week down 17 ticks. You got Bitcoin also down 2,000 now to 110 and change. What you don't have in your camp is you've got volatility down 17 cents from a /VX. You got the Russell trying to hold, and you really have no volume anywhere on the E-mini S&Ps, NASDAQ. I mean, we've been in a very tight range here, 10 points high to low, maybe 5 points.
I'm not going to be in the Hamptons, okay? The Midwestern Hamptons.
Okie dokie.
All right, let's do it. Let's see what we got.
Ready?
Bam, bam, bam.
Bam, bam, bam.
All right. All right, John, let's see what we got. NDX 4-day call. Great. This is Grace from Seattle. Gracie, what are you doing here? 4-day call broken wing butterfly short at the expected move, 1020 wide. Does this even trade?
Well, NDX is going to trade, 1-to-1
Sure.
with you. So
NDX down.
To answer your question, as a 40-year veteran of this game, would be indubitably yes, they trade.
All right, hold on. Short at the expected move. The expected move is, let's say, $260. I got to figure this out.
No. Expected move is around 100 and change on NDX.
No, 4-day.
Oh, sorry, 4 days. I digress. You are correct. 260 points-ish.
Ish. Let's say, where are we right now? We're
550.
550. So we got to get to 820, right?
On the upside.
Okay, 820. Go. What's the next one? Then you got $20, $20 wide. So you got 820.
And under 2,300 or so.
hold on, 820. You're going to buy the 820s.
Oh, you want to do a broken wing butterfly? Sorry.
That's what she writes here, right? Broken wing butterfly.
Yeah.
820, 830, 850.
Depends on how wide you want to get. Yep.
She says 10 or 20 wide.
Which is a very small position in NDX, which is a very big product.
It's a 90-cent credit.
That is correct.
Well, I don't know what the credit is. 80 cents, 90 cents.
Oh, good luck.
Would you say good luck?
Yeah.
I know. I need an uptick here.
Right, because you have a synthetic short call spread here, and you've got a downtick. Oh, look at you.
85 cents. I gave up a nickel, Grace.
I hope you're happy with his
That's the first time anybody's had that trade for us. So let's go next slide.
And you did it on a down opening. I mean, you are amazing.
I don't usually do that, but whatever. Let's go to the next slide.
I hear you.
Oh my God, you guys are killing me today. Jeff from Miami. Okay, he wants to do a 0 DT iron condor, slightly larger 30 delta. Well, we did the study on this yesterday, Jeff, and your best bet was the 20 delta.
That is correct.
We just did this study yesterday afternoon. 0 day. Let's just see really quickly. 20 delta. Well, we'll go 23 delta on the puts. Oh. Well, these are hard. The deltas don't really line up. 26 deltas on the calls. No, we got to go. Okay. 64.55. We're going to go $20 wide. 56, 55.20, 55.35. I'm bearish today. Me no like this market.
You're a big bear. Urgh, look at you. So much machismo.
Me no like this market today.
Have you liked the market any day in the last 2 months?
Don't try to don't try to make sense of this.
Don't be rational here. I got it.
Don't try to be your,
Don't try to be the wet blanket that you normally are.
Yeah. Don't ruin it for everybody else.
Got it.
All right, Jeff, I'm trying to do this.
Try as you like, Sosnov. Try as you like. Even the S&P down 31, Sosnov. Close all watertight doors.
Nice little downtick there. All right, we got it on, Jeff. We'll see what happens. Let's go to the next slide. Like I said, I don't like this, but I have a short delta, so I'm okay. What do you got next? MBD, Brad from Fairhope, Alabama.
Huh?
First time hearing from Brad from Fairhope. No idea where that is. TB, and I don't think it's very good.
Oh,
it's up again.
You have a position in here?
Jesus. Insane. I'm betting it'll trade in a wide range after this move, selling the 270, 380. That's better than I got on. Brad, I got the 280, 360. Let's see. What are you doing?
He wins.
$270 done. 380. 380, 270. I mean, yeah, sure. It's going to trade. These are hard to figure out what price. So I got to do a little price discovery here. You got to give up like what's the stock? Oh, the stock just dropped $3. Wow. The stock moves. It was just up $3, right?
That's correct.
It moved 70 cents a tick. 10.44. I think I gave up 6 cents. Let's go to the next slide.
Next slide we go.
Dow Chemical, Tyler from Missoula, Montana. Missoula. Let's see what we got here. 27 and a half, 22 and a half, 27 and a half strangle. I mean, can I make money on this? Is it even possible? It trades a little bit. I'm going to give up a penny, see what happens. 147. Oh, you Dow Chemical. 147.
Filled 147.
All right, it's something. Let's go next slide. I'm neutral to slightly bullish on CCL. What do you guys think about a OC 33 straddle? Tony's favorite cruise line. OC 33. I'd rather do the 34, 31. Give it a little bit of width.
Oh, would you?
267. Dead smack in the center. Thanks, Austin from Boise. Austin from Boise. Cool. Next. Ben W. from New York City, New York. Hi, Ben. What do you got here? NVIDIA's IVR dropped to 1%. Perfect for poor man's covered call setup? Well, that's if you're bullish in NVIDIA. We're not. Perfect. I don't think it's perfect for poor man's covered call. I think it's perfect. What do you want to do? Ben, I'm cool with that. But I'm not interested in getting long NVIDIA here. Nope. No. Poor man's covered call means is using, well, this isn't really a poor man's covered call. This is like a, well, how many positions on in there? Stock's down $5 today. So if we were going to do this, let's just say we're going to buy, GN's a little long. Let's buy Dees. Okay. So if we go out and buy the Dees 190s, they're trading for about 990, let's say. These are really tight markets.
That is true.
And we're going to sell not SEP, but ACH. We'll sell the ACH, but instead of selling the ACH 190s, let's sell the ACH 185s. Now that's a diagonal. Now that's a knife.
Now that's a spicy meatball. Have you ever had a spicy meatball?
Yes.
You have?
I think so.
You think so. Got it.
Unless a spicy meatball means something that I don't know what it means.
I don't know what it means either.
Is that a code name for something?
No. Not being one of those guys. No, absolutely not.
Okay. Let's go to the next slide. I mean, I didn't know. Maybe there's means something today. I don't know. Mike from Sacramento. UPS is lowest since 2013. UPS. Man, we have not traded this Mike in like forever.
Mm-hmm.
I wish it was down today. It is a pig.
PIG pig.
What do you got in here, Mike? Doesn't trade that much. Buying the ACH. 85.90 call spread, right?
Yes.
Wants to buy the 85s, sell the 90s.
Mm-hmm.
278.
Mm-hmm.
I don't even like this trade, but usually the trades I like the least
Work out the best.
Yeah. Because like this is something I would never do.
Uh-huh.
So Mike, I'll try it, but I haven't gotten fills yet. It's not that liquid.
Okay. Okay.
We're gonna give it one more little oomph. Nothing. 283.
283 it is.
Let's go to the next slide.
Bitcoin under 110, 1098.
Or monthlies. Jade Lizard. Sell the 180 put and the call spread. Zero upside risk. Well, you don't need to have any upside risk in Lulu because it's probably going to zero. I have on in there, I'm short the 182.5 puts and the 230 calls. Well, that's basically what he wants to do.
Yeah, pretty much.
So he wants to sell, let's see. I already got this position on essentially, but let's see. He wants to sell the SEP 180 put. Okay.
Mm-hmm.
And the 225, 230 call spread.
Mm-hmm.
For 567, looks like it's 580-ish.
That's correct.
No. 75, maybe. It's hard to tell in Lulu because it's kind of a crappy.
It is.
577. A little bit better than you had on here. A little bit.
577 it is.
577 it is. All right. Let's go to the next one. Jorge from Los Angeles. Implied volatility is a bit higher than average. How about a 20 Delta Strangle to collect some premium? All right. I never thought I'd have to say this, but Bat, stay off those stay off those Bronny James sites, Bat. Love you guys.
Everybody's a comedian. Everybody's a comedian.
He's so easy. They got him easy on that one. He's a point and clicker.
They did get me pretty easy.
They got you. They got you.
They did. I'll give him that.
What does he want to do here? 20 Delta Strangle and MU. MU is trading for 120. We're going to go to October.
Mm-hmm.
Okay. 20 Deltas, 105 hoodies, and we'll go to the 140 calls. It's a little different. Yeah, it's a little. I'm centering by price, not by.
I got you.
By price.
Mm-hmm.
They're popping vol today. We should get a decent.
A little bit up 15 cents now. So I don't know if even the S&P is at the expected move around $37.
I said I think it's way outside these starts.
Mm-hmm.
564. Jorge. We'll take it, dude. Let's go next slide. Oh, Abhishek from San Mateo, California. Pretty neutral here in GDX. So are we. GDX, trying to grind out a winner in there. We're currently in 56.67 in October. Let's see, 56.67. We'll roll up our 58 puts, 67 calls. It's price equal, delta equal. It's perfect. 27 deltas. Price is exactly the same. No skew. Mid price is 234. Filled at mid price.
Beautiful.
Right, we got it. That gives us. There we go.
That gives us. There we go.
That gives us a there we go. Let's take a quick look. SPX, just let's look at our SPX 0 day because they moved around.
Mm-hmm.
Call side is a little low here. So we're going to, remember we said we adjust?
This is correct.
So we're going to roll our call side down.
We adapt and adjust.
We adapt. We roll our call side down a little bit, neutralize the deltas, give ourselves a little hope. And
a hope, a wing, and a prayer.
NDX, we did a broken wing butterfly. We don't trade a lot of NDX, so that's a kind of a rare one for us. But I think Dow, we did a strangle. It's a cheapie, kind of a long shot. CL, we did almost a straddle, like one strike off a straddle. We did not do a poor man's covered call. Actually, what we did was a diagonal spread. We did a diagonal in NVIDIA. We bought a call spread in UPS. We basically bought a Jade Lizard in Lulu. In MU, no, we traded MU, John.
You did 564 credit.
We sold the 105, 140 strangle in MU. GDX, we sold a strangle. Now, I needed to sell a lot of premium today, so this was like a good start. And it's a good day to sell premium because the market's kind of weak.
Right.
But there was one trade I didn't make, wasn't there? No. We did them all.
Very good, Sadnoff. Look at you. You the man.
Look at you, Pikachu. Gold just rallied $16. Not that it matters.
No, not that it matters.
Not that it matters. And looking at some of the earnings stocks for last night, Bob was up 11. That stock is a beast. And Marvell is rallied, and I rolled calls down. So we're pretty much done in Marvell now.
Very good, my friend. Good job out of you, right?
I don't know. I'll let you know in a couple weeks.
Well, time will tell there too, my friend. But you know what we got to do right now, Saz? Do you know what we got to do right now, Saz?
Pray?
Yes. We need to take a quick little break. You know why? We got a market measures coming up next. And then after the market measures sound off, it's Friday. We're going to go to your phone call. So get your questions ready. We'll be back in 90 seconds. We got more Tasty Live immediately following these messages. Back in 90 seconds with Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Beth, I forgot you used to go on the road.
Oh yeah, she was on the road for 2 years.
And then she had the Bellagio written into her contract.
No, but it was. I think Beth, were you at the Flamingo with us?
Never. No, we would just go there for dinner.
Don't worry, Nikki. They put me in the Barclays across the street.
You're a camper. You could rough it.
Yeah, you're a camper.
Right? Yeah,
You're a camper guy.
You're a camper.
Hold on, honey. You're a camper.
Oh my God. Is there anything up? Don't stand up. Is there anything up there?
I have no clothes on underneath my shirt. I'm not in the office.
Oh no.
Oh no.
Can you put that leg up again?
No.
No. Do not.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With what's coming up next, Sadnov, a market measure. But first, let's take a quick look at the market. Sadnov, what's happening? Even the S&P is down 50, as foretold by my great one.
I just want to bring up a couple things. As foretold by me, not you.
You, by my great one. Your great one. That's you. My great one. I was giving you all of the props. Volatility.
Okay, hold on a second. There was something weird this morning when you said that the expected move was like
$35. It was a large.
It didn't make any sense to me because on a Friday long weekend, it didn't make any sense. So that's why I was so bearish. Because that expected move just didn't make sense. And sometimes, you don't like when you're betting on a football game, you're like, why is this team a 7-point favorite? It should be even. And then next thing you know, they win by 30. Same thing. Same thing. So that's kind of that's what scared me this morning.
Got it. All right. You're getting all puffy chested. I can see that.
No, not at all.
With everything lower, stating the obvious. Okay. We'll see.
I'm a master of the obvious. In case you know that.
Very good, my friend. Don't worry about it, though. We've got a market measure.
I'm not worrying about it. I'm looking for actually.
So volatility up 2.5% now, almost 2.5%, 40 cents. You're not going to get any contraction of volatility these days, right? For the weekend. Like everybody always asks, like, what's when does volatility come out, is not coming out right now.
Not a
For the
chance
weekend.
in hell. I didn't think, I told you, I thought it would be cheap this morning and then get more expensive.
We both thought that. I did not think it was going to get to here. I did not think even the S&Ps were going to be down over 50 handles.
Okay, it's fair.
Mhm.
Again, every day is a learning experience for you. And I love to see watching your growth over the past 15 years. It's just amazing.
Okay. I am going to put that on the list with, I worked very hard when I was younger, so I can have somebody like you check my trades. I'm going to put that up there with both of them. It's one of the, you're really shooting nuggets at me these days. I mean, we're down half a percentage point on the E-mini S&Ps, well, a little bit more on the E-mini S&Ps, Russell and the Dow. Let's just, let's at all-time highs. Let's just relax here. Chemo.
We had a Dell, we had a Dell position on.
That's on you, Boo. You told me no.
No, it's a good one. We did a put ratio
so
spread.
money goes to money. Look at you.
I forgot about this. We did a put ratio spread in there. I didn't think it was going to get near the at the money. We did the 123, 120. Remember 2 days ago?
I do.
Did it 1 by 2 and it actually went right to the perfect.
Dell's right there at 120, so you're able to put it on for a credit, take it off for a credit. That's a home run. That's something you never see Sadnov do.
Winner, chicken dinner. Forgot about Dell. Did we do anything else that I forgot about? I don't think so.
That's your best trading when you forget about it.
I know. I'm a good forget about it trader.
You are a good forget about it trader.
All right, let's do it. Quick little reminder, just a couple of, John, before you get to here, just a couple little things. Number one, we are going to do I just keep mentioning this just so people realize, instead of the Sunday night show, now it's going to get interesting on Sunday night because there's something going on today. But instead of the Sunday night show, we're going to do the show on Monday night. Monday's a holiday. We're going to do first call on Monday night. So Monday night, 4:55, myself, Chris, Ilya, and we'll see who else is going to be on. I'm not sure if we have any special guests. Also, on a week from today, 1 week from today, right now, the Bat and I will be performing.
Yes, we will be performing.
We'll be performing, and we'll be doing some incredible dance routines at the Regency Ballroom. There you go, Bat. You, me, ballroom dancing. It only makes sense. Come out and see the Bat and I dance away at the Regency Ballroom in San Francisco next Friday. It's September 5th. We will be, I mean, the show doesn't start until, let's see, what time is it right now here? It's 9:12, so it's only 7:12. Well, I mean, you can start dancing at 7. No,
I can go. I'm like the Energizer Bunny. I can go all day.
Yeah. So we'll be at the Regency Ballroom exactly 1 week from today, right now. Doors will open at 8 o'clock in the morning. The show will start at 9. We're really looking forward to it. We should have a great crowd. We should have a really fun time. We're coming locked and loaded with lots of cash.
We will.
We are ready to do a live trading show in San Francisco. We haven't been to San Francisco in a couple of years. I feel like it. And I think the last time we were out there, we were in Palo Alto. And that was a cool place too. So we're going to be at the Regency Ballroom, San Francisco, next Friday. Come on out. Can't wait to see everybody. Doors open at 8. Show starts at 9. Tastylive.com/events. Tastylive.com/events. 2 weeks after that, we'll be doing the same kind of show. We do different trades each time in New York City. So that'll be on the 19th. So it'll be at Webster Hall on the 19th. You sign up at the same spot. So if you're in New York, tastylive.com/events. If you're in San Francisco, tastylive.com/events. Please don't sign up if you cannot make it, because we will be going to a wait list next week for San Francisco, and we want to make sure everybody that can make it gets a spot.
Sure.
It's all free.
Always free. Yes.
Always free. We got some giveaways from the CME, giveaways from the SIBO, giveaways from us, and it's just a live trading show. There's nothing else to it. It's not like we're not teaching a lot of lessons. We're not doing anything. We're just trading. You got to kind of.
But you learn by doing and watching and seeing it. When little nuggets hit people in different ways. So
We're going to put on basically $100,000 portfolio, not notional. That's actual buying power. Last show we did in Chicago, we used $120,000 of buying power. So we put on a lot of positions. The last show we did before that, I think we were in Milan. I'm not exactly. I got to check, but we used 100. We used about 120,000 each show. So it's real positions. All right, that's all. Let's ready, John.
I'm ready.
It's 9:14. Spoo's down 52 without a bounce all day.
True.
Yep, no bounces. The skinny on future scalping. Let's go to the first slide. Let's have some fun with this. So options tend to work well for longer term trading. I wouldn't call it long-term trading, longer terms, because they offer flexibility, limited risk, and time for the strategies to develop. Traders can benefit from changing market conditions, use options to hedge, or guard around broader trends without needing constant adjustments. The other side to it is you can just be very strategic. Futures are often preferred for short-term scalping due to their high liquidity and leverage. We're talking about the actual futures contracts now. We're not talking about futures options. Options and listed options, we treat those the same way. But futures themselves are just a very efficient product because the amount of capital required to carry a reasonable amount of leverage is pretty low. High liquidity, if you stick to the major futures, high liquidity, leverage, and low transaction costs. Tony and I on this show never talk about futures that are illiquid. We've been doing the show for 15 years, and you've never heard us talk about a single future that's not liquid. We don't even list them on the platform. So we only trade the most liquid, probably the top 10 to 15 most liquid futures and futures options. We don't touch anything else.
That's correct. We always are looking to do that.
Liquidity is the key to us. We'll never talk to you about a futures option that's illiquid. We'll never talk to you about a future itself that's illiquid.
Right.
Overnight, things can get a little funky, but during the day, it's going to be the most liquid underlyings. Let's go to the next slide. But where do I start is the question from our research team. All futures contracts have different notional sizes, share equivalents, tick sizes, tick values that you should be aware of. I've done multiple live shows on futures. I've done webinars on futures. We put together decks on futures. The main difference is futures are not standardized. So it's what we call nuanced know-how is required. And there's a ton of stuff on Tasty, literally a ton of stuff. For more information, see the Tasty blog from August 21st. You can check that out of 2024, where you can download a futures cheat sheet, all you need to know, which basically we line everything up for you. We'll reprint it again too.
Of course.
And for futures, you'll notice that on our watch list, and you'll see this at the live show, all we watch is futures. I mean, what's in front of us all the time in the futures markets. The futures markets drive the stock market. I mean, we obviously trade 80% more stocks and indexes, but we watch futures. Just for the leverage, just for the ranges.
Yep.
Okay. So we're going to look at some of the micros and some of the minis. Years ago, they didn't have micro futures. Now they do. And so, they're basically 1/10 the size. And it makes it a lot easier to trade futures, especially for people that are nervous about it. But also, we trade a ton of micros. We like them.
Sure.
Let's go next slide. So here's a sample of the cheat sheet that we put out. Now, we did this because the cool thing about this, we put the major futures up here. And you can see we have a description. These are all the index futures, essentially. And we have the notional equivalent in the middle column, and then we have the ETF equivalent. So on Tasty, what we do is we beta weight everything to the S&P SPY, and we also show everything in equivalent ETF deltas. We're the only platform in the world that does this. And you're thinking, well, why do you do this? We do this to normalize everything on the platform. Every other platform that's ever been built shows the original deltas for each underlying. But if you don't know that one product's bigger than the other notionally, it's impossible to line up those deltas.
Right.
We do it all for you. And again, I can't stress this enough. We're the only platform in the world that does this. And so it makes following a big position or following all your different positions so much easier and so much cleaner. That's why we get emails all the time from people at other firms. They're like, how do I follow this stuff? Because it doesn't make any sense. Of course, it doesn't make any sense because they really don't, whoever developed most of these platforms doesn't understand the ETF equivalent. I know it's not rocket science, but it's just hard to build into software.
Correct.
We also have, in some cases, the vol symbol equivalent. And then, of course, there's the tick size and the tick value. So everything is in front of you. You notice it's not standardized. When you trade IBM or you trade NVIDIA, the tick size, everything's standardized.
Right.
When you trade ES and Q, nothing's standardized. But they're all the same products. Okay.
Yep.
Let's go next slide. We call it nuanced know-how. So we're going to be using the micro futures in the case. This is an example of just using the micro futures watch list, which includes everything. We have all these different watch lists in the drop-down menu on Tasty. So you don't have to know all the symbols. You can just go to the drop-down menu in any one of the columns, and you can just take a look. And we have micro futures, futures. You can see everything. It's listed there. So you don't have to search for symbols or anything like that.
Mm-hmm.
Tony can show you after this segment's done. We can show you how easy it is to find everything.
Sure.
Let's go to the next slide. So these are these are just, we put these up here so you can kind of see these are the largest intraday ranges over the past year. And just to give you kind of like an idea, I guess, you know, when you think about kind of, you want some context around risk, I think that's what the purpose of this.
Mm-hmm.
So, you know, just to give you an idea, that's all this is, just to give you some context. The VIX having the most, the micro ether, you know, the natural gas, these are the riskiest ones. The micro Bitcoin, crude. Then you start getting down to the indexes like the Russell, NASDAQ, S&Ps. You know, I mean, it's a little less. That's all.
Mm-hmm.
Let's go next slide. And these are the 10 largest intraday ranges over the past, you know, over the past month. That maybe once all year.
Mm-hmm.
So micro ether, mini VIX futures, we rarely trade those. You know, natural gas, we've always told you it's dangerous, but then micro Bitcoin, you know, so the bigger indexes that we trade all the time, the moves are much more manageable for context purposes. Let's go to the last slide. So there's some takeaways here. Options are ideal for longer term trading due to their flexibility. And the same goes for listed options and listed futures options, okay? And the ability to adapt to changing market conditions without constant adjustments. But even so, options are very strategic. Futures suit short-term scalping because they're high liquidity, leverage, low cost, fast execution. Now, the cool thing about Tasty, again, is that we standardize and normalize futures by showing on the platform the ETF equivalent. So you don't have to do any of that work yourself. Also, from the exact same interface, we show and let you trade everything. And one more thing, we just launched a brand new ladder on the platform, which has been getting really good reviews from our users. It's the newest ladder in the industry. It's fast as hell. It's simple to use. It's clean, simple to use, and it's on the platform. And we can show you where that is on the drop-down menu when we finish this segment. Tony can show you where it is, but it's basically a futures ladder.
Mm-hmm. Mm-hmm.
Okay. And then before trading futures options, it's important to understand the contract. What's really important is some of the nuanced know-how of the futures, like notional sizes, tick sizes. But you'll figure that out pretty quickly because as soon as you start trading it, you figure it out. The more important thing to know is stay away from some of the exotic ones like micro ether. It's really hard to make money in there. It's not that liquid, and it's the one that has the biggest moves. Micro Bitcoin, micro ether, micro natural gas. Those aren't really scalping vehicles. Okay, just to be fair. You want to scalp Bitcoin, use IBIT or BITO. You want to scalp ETH, use ETHA or use the cash Bitcoin, cash Ether. But if you want to trade anything else, futures are great.
Agreed. Hey, Tom, I do got to do one public service announcement here. 855-238-2789 or 855-BE-TASTY. That's the phone number to call because phone lines are open. Give us a buzz. We'd love to hear from you. I got 4 or 5 lines open right now, right this minute. Even the S&Ps, Sadnov, they're down 48. They're off of their lows by about only 8 handles. NASDAQ down 260 and change. That's your the weakest of the group. Russell down only 12. I say only 12 because it's half a percentage point. NASDAQ's down 1.25 percentage points. Dow down 226 and volatility up 35 cents off of its highs by about 20 cents, well off of its lows, which it made overnight last night. Bonds down 18, Sadnov. How you feel about that?
They haven't really moved. They're been basically a 1-tick range for the last hour. I don't have any strong feeling on it.
Bitcoin down 3,500. That's a big move. 3% on Bitcoin. Ethereum's got itself a 3.5% move, also down $159. Gold caught itself a bid. It's rallied to its highs of 3,500 today. It's up $24. Gold back near its highs. Gold IV rank of 20, starting to percolate a little bit on the up move. What do you think about gold, Sosnov?
I think we don't have a gold position on because the IV and IVR was really low in there. I don't know what it is today, but I'm staying away from GC. I don't like silver at 40 and I don't like gold at 3,500. I think those are rich but I think there's better trades.
Taking a look at my watch list, those Buckers, Affirm still up $13, trading near, well, not trading near its highs. It got all the way up to 100. It's trading near its lows, up $13 or $14. Trading 93 after trading 100. BABA up 13. It is trading near its highs. UNH up $1.60. And then you really got gold and volatility products. Not too much else going on for the stocks that we trade. Apple was hanging in there. It's only down, still is, only down 5 cents, but it was green a moment ago. On the downside, Sadnov, you've got Netflix down 22, Dell down 13, Marvell down 12, AVGO, which is one of the leaders in the market, down 12, Meta down 11, Tesla down 7. So yeah, it looks like they're taking some stocks out to the woodshed here. Some of the leaders in the clubhouse, Sadnov. That's why the NASDAQ is so weak. 855-238-2789 or 855-BE-TASTY.
Tony, before you go, just show people where the drop-down list is for the just show people where the drop-down list is for the micro futures and futures.
Sure, could do that for you right now. All you have to do is, like I have Bat's watch list up here. You can click on that bar. You can go to any one of the lists that you want. Here's the Tasty list with the 52-week high and lows. Here's all the crypto products that they spoke about a moment ago too. You like dividend stocks? They've got dividend stocks that you can go to. And all you have to do is click on one of these. If you're looking for futures, you just go down to futures. You want the micro futures, you go to futures micro, you click on that, and then you'd have all of your micro futures that Sosnov spoke about just a moment ago. If you want to go to the active trader, you just click on that little right here where I have table view. You can have table view, curve view. Those are usually the two most popular, but those who like to trade futures have really enjoyed this active V2 right here with this ladder on all the different futures that you want to trade. Sound good, Sadnov?
Sure.
We'll take a quick 90-second break and come back. We got your phone calls next. We're going to go for the next half an hour at 855-238-2789 or 855-BE-TASTY. Oklahoma's number one. Who's going to be 2, 3, 4, 5, and 6? We'll be back in 90 seconds. This is Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Steve in Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents? I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you say, way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, hey, way to go out on the ledge.
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A Scoopy Scoopy.
Scoopy Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you know, you bought something and it never goes lower. Scoopy Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tastylive core strategies. Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade. Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
Tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tastytrade. Genius loves company.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tastylive core strategies.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tastylive core strategies.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
If you say, way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, hey, way to go out on the ledge.
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy.
Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you know, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
If you say, way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you
think technical. Actually, Saz doesn't want to answer any of the questions. He didn't have him that I made. I would have questions there.
No, are. I'm
that good, Saz. No, if I'm S&P down 7, you and I was friend. So good job at a side day.
Yeah, we're sorry. Problems we figure out how to get it. Also, take telecalls today. Thanks for that. So sorry, and call back. Jump to the line. It's rare, but something breaks. So sorry. Pat, just talk about a couple minutes. Wrap it up.
Sure.
I
50. I tried to small 8 or handles. They not do as that weakest to the group. That usually get in a sustained way lower. 100 to flips here. Volatility up 35. Reports that the volatility before. So we just today. Very sorry. Everyone, we have.
Sounds good. Sorry about that.
Peace. Very sorry about that. Very sorry.
In the world of investing, a beast lurks between the numbers.
Watch the world fly by. Watch the world fly by. We're making our own way. We're making our own way. We're making our own way, yeah. We're making our own way. the show. Watch me go, 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 go. Watch me go, watch me go. Start the show. Start the show, start the show. Watch me go, 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 go. Watch me go, watch me, watch me go. Start the show. Start the show. face are rosy eyes. Why don't you tell me the rest of the line? Hey, hey, hey. Hey, hey, hey. I'll be right beside you. All I ever want to. Can't get a better view. Honey, spring and summer right through. All the way I told you. Can't get a better view. 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 Cruising upstate and cooling down, pulling over to fool around. It's high time to get out of town. Close our eyes and get lost in the sound, yeah. Hey, hey, hey. Hey, hey, hey. I'll be right beside you. All I ever want to. Can't get a better view. Honey, spring and summer right through. All the way I told you. Can't get a better view. Can't get a better view. Can't get a better view. I'll be right beside you. All I ever want to. Can't get a better view. Honey, spring and summer right through. All the way I told you. Can't get a better view. 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 Sun is up, it's a perfect day. Hitch a ride on an ocean wave. Take my hand now, show you the way. Saw you talking to somebody, telling them it'll be okay. Got the sign that.
Hello, everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Miss Jenny Andrews. But wait, there's more. We've got a handsome devil in the middle. I don't know which side he's on. Actually,
right below you, handsome devil on the bottom, right below you.
Yes.
Thank you, Liz. Thank you, Jenny. And thanks for having me on today for a couple of topics.
Hey, TP, when our viewers heard you were coming on Fridays now, they went wild. TP on Fridays. Everyone's
Oh,
excited.
boy. Thank you.
so,
Hey, guys, I'm sorry I didn't wear the flame shirt. I'm sorry. I thought it might be a little too much for the topics today.
Okay, listen.
So,
If we have you on Fridays, we need the flame shirt every Friday, and I need it.
okay, fine.
Okay, it's Flame Shirt Friday with TP.
Fine. Okay. Duly noted and appreciated, Liz.
Good. Yeah, we're very excited to have you on today. Okay, so now we started a little bit late. We're going to jump into something that's very, very high level first, if that's okay.
It's okay with me.
Okay, Jenny, do you want to? We're in the platform and we are in hymns. This is something that we were going over yesterday at the close of our show that we actually ran over on. This is for one of our viewers. We were going back and forth. We were talking about a collar and how to do it with synthetic stock. That was the crux of it. He wanted to figure out how to use less capital. Now, we pulled it up as a leap in December. We originally went to December 19th with the 112 days. I've been going back and forth with the same viewer. He wanted the December 2026 with 476 days. Let's open that cycle up.
Okay, and so I remember his trade. It was well, he
buy the stock.
Wanted to do the stock synthetically, but if I put it in here like a regular collar, buy the stock, and he wanted the 45 put,
And the
buy the
50 call.
45 put and sell the 50 call.
Yep. So it's in his one package, and then if you go to the Analyze tab,
and you could see here max profit $580,
max loss 0,
max loss 0, and you go to the curve page, and it does almost look too good to be true, where no matter what, you never lose.
Yes. Now, in this example, that being said, in this example, you're using $2,700 to do it for a very extended period of time. In a PM account, it holds up very, very little.
Mm-hmm.
Okay. So now, he was asking, and we got kind of crossed yesterday. We weren't in this cycle. He was asking how to do the collar with synthetic stock. And TP, what I had said was, if you're doing a collar with synthetic stock, just do a synthetic covered call, meaning sell the in the money put. And it's that same thing. So Jenny, if you could show TP this, and then we will put this to bed.
Okay. All right. So, but I just want to show here again, max $538, it looks like you never lose. Whereas if you were to put in the spread and instead of doing the 50 covered call, you sell that 50 put, that's a synthetic covered call. And then you buy that 45 put here, it's max profit 390, max loss 113. There is a risk on this trade. So what's the difference?
Let's see, TP.
Well, all right. So let me step back for a second about why you do not see a loss on these collars going out that far. Okay. It's because the P&L does not include interest. Okay. Now, why are we seeing, and if you look with HIMS right now is trading at 43, so let's say right in between 42 and 45. Why are the calls, the out of the money calls, trading over the out of the money puts? Yes, the market is seeing some risk to the upside, but anytime interest rates are relatively high compared to a low volatility, you will see out of the money calls trading over out of the money puts. Interest rates, in other words, when interest rates go up, they push up the value of calls. Why? Because there is an advantage to owning the call as opposed to owning the stock and paying carry costs on the stock. And if you bought the stock and did the collar and you say, wait a second, I'm making money no matter where. Yeah, according to the stock and the options. But over time, over those 476 days, you're going to be paying interest. Now you say, wait a second, I have enough cash to do that trade. Well, okay, you're giving up interest that you'd be earning on that cash. And the way the option markets work, they don't know if you're using cash or margin. They don't care. The models don't care. They just know that if you buy stock, you're either borrowing money to buy the stock or you're giving up interest. And that has to be factored into your overall P&L.
There you go. You heard it here first. So so if things are too good to be true, they usually are, right? There is for every gimme, there's a gotcha.
Yeah, it means that the market isn't letting you just have free money.
Right.
And I think
I wish it were true.
Too, sometimes we're trying to roll something. We might be trying to roll something and you look at the extrinsic value and where you're rolling to and you think, oh, I should be taking in this much credit to roll this. And then you put the trade in and you're not always getting that. And so when you see something that looks off, what's off is the cost of carry that's priced into these options.
That's almost always the case when you see something like this. And it's not just in HIMS. You see the same thing in Apple and IBM and all this stuff. And the market's not wrong, okay? The option prices nobody's making a mistake here. It's just the nature of how interest rates and volatility come together in the option pricing models, and that's what you get. So yeah, you can sell more premium in the call than you're paying for the put. Okay. That's the way it is.
Our viewers are great. The fact that they're going out searching, finding these trades, and coming back and saying like, "Look at this. Looks like you can't lose." It's nice that they're out there, looking for things and trying different things. And our viewers are smart.
And I'm not saying it's a bad trade. That's not the point. I'm not saying that you should not do that trade, but don't think that you're getting, free money here.
Right. Because you do have to pay for it somewhere, especially in a PM account, because you're borrowing money to keep that. You're borrowing money to keep that collar on there to begin with. If you're only using $75, you're actually borrowing $2,700.
Right. The PM doesn't think about your cash outlay.
You're borrowing that much money for 476 days.
Yeah. Right.
So put a pin in that.
Is there just a cut and dry way to know if you're trading in a margin account, portfolio margin account, whatever, and you open up your account and you see like this is how much money you have in parentheses, that's the money that you're actually borrowing. What is the interest rate you're paying on that borrowed money?
So Jenny, what people should be looking at is their cash balance. That's all that really matters when it comes to borrowing money. If your cash balance is negative, like you said, John, has parentheses around it, you are borrowing money. And the rate that you're borrowing, I don't think it's on the platform itself, but it is on our website. If you dig through the Tasty Trade website, you'll see the interest rate charged on debit balances.
And is it just always fluctuating?
Yes. So it's broker call, usually broker call plus some amount. And as interest rates go up and down, yes, the interest charge changes as well. So if we see a rate cut in September, yay, if you're borrowing money. Your margin interest should go down.
So just one other quick question since we're on this topic, because we have heard people say like, oh, I'll just if I have all these positions, I could collar it all, free up all the cash. If you're in portfolio margin, you collar all your stock, you free up all that buying power, and then to put that buying power into something like, like BIL, you're earning money on this, but you're paying interest on that. Like it's kind of a wash.
Oh no, I don't know that you should do. I don't know if that's the right play. I think
that's what I'm saying. Like that's not the play because
that's not the play.
That's what I'm saying. Like that's not the play because you think you've got that money to use, but you're paying interest on it.
So here's what you're not going to do, okay, or at least what. And this might lead to our next discussion. Here's what you're not going to do. You're not going to earn interest greater than your borrowing costs on a retail brokerage platform.
Ever, period.
If you're paying $750 on your negative cash in a brokerage firm, you're not going to earn risk-free 8%. Okay, it doesn't that doesn't exist. The only time that can exist is if you are trading a massive portfolio as part of an international bank, where you have one department borrowing money for as cheap as they can get it. You're lending money as high as you can get it, and it's a machine. It's a different way of making money. Okay.
Yeah.
And so the only time people should have positions in BOXX or TBIL or BIL is if their cash balance is positive.
Yeah, I mean, there are other ways to earn interest that we could talk about in another segment that let you actually see, there are more than one way to skin a cat. Let's put it that way. And we can go down that rabbit hole in a different show. But yeah, anytime you have positive interest positive cash, you are theoretically earning interest on that cash at the brokerage firm. Not as high interest as what you're paying if you're borrowing money.
I mean, that's the world.
That difference is where brokers can make some money.
And that's the world, TP. There's no arbitrage.
Yes.
It's buying versus lending. I mean, that's the entire world. Okay. On a total side note, I do want to get into the meat and potatoes of our segment. It kind of looks like we're in Tasty After Dark with our backgrounds, doesn't it?
Well, it's Friday. It's Friday. We're just gearing up for Friday night.
It doesn't.
A long weekend.
It feels like a night segment. Like.
Yeah, we should have some like 90s, like, you know, electro, you know, like industrial, whatever. Do. That'd be cool.
Oh my gosh.
It's got that vibe.
It brought back terrible flashbacks of the Liars Club. I don't know if the Liars Club still exists, but I don't know if any of you remember that from the city.
I do not remember that from the city. Would you like
to? It was like an all night, like.
Yes. So that, like I said, we're giving off those vibes, and I kind of like it. We all need like a big cocktail in our hand at 11.
Yeah.
I've got an iced tea. That's it. I got my iced tea.
I've got my good water. Okay.
All right. Are you ready?
So, yeah. So what we just hit on, guys, is what a big bank does. How does a big bank make money? And I know that, you know, you talk to people, I talk to people, oh, I'm a trader, right? Oh, Wall Street. They kind of lump us in with Wall Street. Okay, you're a trader, you do Wall Street. That couldn't be further from the truth. Okay?
Agreed.
Our company, our whole Tasty Nation is built on the idea of the self-directed investor, the self-directed trader. That's what our content is geared towards. That's what our technology is geared for. Wall Street is different. Wall Street, when you actually think about the big banks, and those are institutionally focused. Yes, they may tip their hat to the retail investor, but only so that you can buy their products and let it turn into an institutional customer, right? So when you buy, let's say, a mutual fund, if you buy some product created by one of the banks, and guys, I will be the first to admit, they're extremely creative. They will come up with all sorts of fun new little things, you know, like, you know, oh, this ETF does this, or this mutual fund for that, and blah, 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 blah.
I heard this fun fact the other day that this is the first time in history that the created funds, you know, your ETFs, your mutual funds, is larger than a lot of stocks. Like, we've gotten to the point where the baskets are bigger than the things inside.
I am not surprised. And that's okay. But here's where I start to get a little pissed off. Okay? Because remember, if something is free, then you are the product. And when it comes to Wall Street, you are the product. Okay? So my whole point is, when it comes to your wealth, you don't need Wall Street. Okay, let's go to the second slide.
Moving along. Here we go.
So I just I asked a really basic question. If you are bullish on the S&P 500, in other words, you are bullish on America, you think the market's going up, and it has. It's been going up forever, okay? Should you use a product from Wall Street? Should you buy a mutual fund? Should you just buy a big index fund and let them manage it for you? Or should you rely on yourself?
Can I interject for 1 second? This just
Yes.
says bullish on the S&P. I mean, even if you're just, everybody tells you, if you just want to invest, whether you're bullish or bearish, they just say put money into the S&P. That's what everybody's trying to do. So even if you just think, you know, your dollar cost averaging, what everybody in personal finance is told to do, you can give it to somebody else and let them do it, is what you're trying to say.
Yes, thank you, Liz. That's exactly right. So it's either you don't understand how to invest, you don't understand the risks, you don't really understand what the S&P 500 is. We do. We'll take care of you. Okay? And because we'll take care of you, we're going to charge you a little bit of money off the top. And those management fees, even though they look pretty small, they're like, 0.5% or 0.2%. They look really small. When you're managing tens of billions of dollars of assets, that pays for a lot of $350,000 salaries for portfolio managers. Okay. And then the age-old question is, where are the customers' yachts? Let's take a look at the last slide. We'll get a little bit into the argument about this. So what I did was I had the research team, smartest guys on our staff. I said, okay, we have data from 2013 to 2025. Okay. If you are bullish on the market, and of course, we all know what happened. The market base, it had some ups and downs on the way, but it went up over time. Okay.
That's the only true there is. That always, and from there to here, it's up.
Yes. And yeah, go ahead. Sorry, Jen.
People may have thought if you saw this, put money in the market or do it yourself, they would think that just putting the $2,000 into the market would have beat anything, because the market has seemed to have gone straight up for as long as we've been doing this.
That's right. That's right. And they have made money. Okay. If you put $2,000 into a gigantic S&P 500 fund, and I say gigantic because you can pick any one of them and they're all basically the same. Okay, a gigantic S&P 500 fund, you're making you're up about $6,000 as of a couple days ago. You made money, good for you.
You're saying,
and if you don't have any other benchmark, that seems pretty good.
So you have a one-time $2,000 put in in 2013. That's what we're comparing, at just apples to apples. You're not continuing $2,000 a year. This is an initial $2,000 investment in 2013.
And you're reinvesting dividends.
Okay, there you go.
Okay. And that number also does not necessarily include all the fees. So I'm being kind of generous with that 60-67, because trying to determine how much the fees affect the net asset values and stuff like that, that's a rabbit hole I don't want to go down. Let's just say ballpark, you made $6,000.
Perfect.
Okay.
You made $6,000, or that's what you have in the end?
No, you would have. It's worth about $8,000. Your profit is $66,000. Okay. Now, here's where it comes down to: should you do it yourself? All I did was I sold an at-the-money put spread in SPY. Sell the at-the-money put and buy a 20-point out-of-the-money put to create a short vertical. $2,000 worth of risk. Actually, less than, because you're collecting credit. Okay? And you do that every 45 days. Put it on 45 days, let it expire. Wait for the next 45 days to come up, blah, 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 blah. So you did about 7 to 8 trades a year in this. Cumulatively, including commissions, you made about $7,300, about $1,300 more than just buying and holding. Okay. Now, what I want people to take away from this isn't so much that, gee, if I sell put spreads in SPY, I'm going to have, 15% outperformance in the S&P 500. Maybe you will, maybe you won't. And do I do this sort of trade? Well, I do this sort of trade, but I also do a lot of other adjustments to this and try to squeeze a little bit more out of it. But my point is, this is a very simple, this isn't the Liz and Jenny style of trade small, trade often. This is just $2,000 in the market at all times, okay? You outperform. So the question is, for a little bit of knowledge, and let's face it, a short put spread in the SPY is pretty basic, okay? It's pretty straightforward. I think that's the perfect beginner strategy. A short put spread. Which strikes you choose, that's another question. But a short put spread,
very easily
learn how to do that.
Learn how to do one thing, and you just can do it once a month, once every 5 days. It's pretty easy to do. If you're not trying to learn anything else, you're on with your merry way. If you learn how to do it, it would take you about a minute to put it in.
Yes.
I don't know if you remember this, but when we were on the road, probably 10 years ago at a road show, one of our viewers brought all of his kids. He brought all of his kids to the road show, and every single one of those kids every month just sold a put spread every month in IWM. So they used a general market ETF. They sold put spreads in it every month, and that's what the dad taught his kids to do. So they're all old now. They're in college now.
They
They're
were
all
8
growing up
at
now.
the time. Yes, he taught him to do one thing, and it was great.
Yes, and they're still doing it. So that's amazing that that's the one thing the father wanted to teach his kids.
Yeah. And so my point is, are there other issues? Well, of course, and you got to enter the trade and stuff like that. Maybe you guys can show how you create this sort of spread on the platform. But my point is, if you are simply relying on Wall Street to take care of you, you are missing out. And it's not that much work, not that much knowledge to be able to get a little bit higher potential returns on your capital.
Well, you're leaving money on the table.
Go ahead. I'm sorry.
You're leaving money on the table with a slight bit of knowledge.
Yes. Yes. And also, what we're not talking about is risk, because even though I might have about $2,000 of risk at any one time on my short put spread, I now have $8,000 of risk in my S&P fund because it goes up and up and up, right? And I'm not doing deltas. I'm not evening things out and all that stuff. So the results could even be even more skewed to the put side, but I'm not doing that. Just saying you do one. That's it.
Yeah, this is just down to its simplest form.
So I got to say, to answer the question, where are the customers' yachts? Right here. Okay. So no, you do not need Wall Street. You need a little bit of knowledge and a little bit of confidence, and you can potentially outperform those products.
I love it, TP. This was great. This was a good segment.
Good segment, TP. Thanks for bringing this on. Thanks for joining us on another Friday. We look forward to having you back next week.
Thanks for having me, guys.
All right, we'll see you next week, TP. Thank you. Now, Jenny, let's jump into the platform as TP is exiting stage left, and let's actually show how to put something on, just to show what he was talking about.
So I know he didn't get into too many details on exactly where to go or what put spread to choose, or but we quickly go 40.
Yeah, DTE, but he said at the money 20-point wide.
So, well, I don't know if he was doing at the money 20-point wide or was he risking $20?
So at the money 20-point wide. I did know this because I had a conversation with him. So he went at the money 20-point wide. So the risk is actually only $1,500.
Okay.
And the slides were very simple, but this was the context of the research, the apples to apples research.
So I'm going to go to the table page, curve view analysis. And so here, risking $1,400 to make $500. Now, the research, results showed this made over time, 2013 to 2025, over $7,000 putting this on every month.
And you got to figure your 45 days, you're letting it go to expiration. You're not talking about any nuances, meaning that you are just letting it go and then putting another one on. Now, the positive drift in the market has helped, right? So this is a put spread. So the positive drift will help with these type of put spreads, but it also helped your stock.
Now, some people might choose to give themselves a little more room and move it further out of the money, or you could adjust this however you want. My one word of caution is that if you have $2,000, if you only have $2,000 and you put this on, and the first one you put on is a loser,
problem.
Right. So I think this is one where if you're coming to start doing this and you only have $2,000, I would start on a smaller scale and slowly build your account, because you don't want to have like one trade wipe out all the money you have. So I wouldn't start like going all in with this on your first trade if that's all you have.
And everything can be scalable, right? So everything can be scaled to whatever account size you have. No, I kind of agree with you. But somebody who's got a little bit of a bigger account, or $2,000 once, if you're just going to say, I want to use this $2,000, it's a good way to do it. If you have a larger account, instead of buying SPY and putting $2,000 into SPY, this isn't a bad way to do it if there's a little bit more.
And I've mentioned this before. So this is a spread, very defined risk, outperform the S&P in our study. I've sat on a board where we had a company come trying to sell us on a naked put fund, where basically same thing. They were going out. I think they were going out 60 days and selling a 45 delta put, and they just did this every 60 days. 45 delta put, 45 delta put, 45 delta put, and again that also outperformed.
That also outperformed, right? Because, well, Jenny, you and I say this all the time. It's kind of hard for me to go back to basics. But if somebody wanted to get in something, and we're in SPY, which is a $600 product, but if somebody wanted to get in something that was lower priced, I would much rather you go out there and sell the at the money put than go out and buy that product. Because what you're doing is you're giving yourself room to be wrong. So just stick with that. Just stick with the 45 delta put for that example. So, or even if we go to TP's example, can you do that where you do a 20 point wide again at the at the money?
Yeah, I'll pull up TP's example.
So if we're just going to go from that example, what I love about it, and the reason I say I would rather you sell the put than go out and buy the stock, is by just creating even this simple spread, 20 points wide, not thinking about it, you're putting it in, you're getting $500 in credit. But what that's telling you is that this S&P 500 can go down $5.13 before you start to lose any money. So that's, I think, what people don't realize.
That's at expiration. At expiration.
That's at expiration. So that's with this graph right here. That is at expiration. But if you're just setting it and forgetting it and walking away, you're only looking at expiration anyway.
Right. For people who want to put these on and come back and take care of them at expiration, right? You're not looking at it in between.
Because I will also like to say that if it gaps up to your top, you're not going to make that money immediately. If you're looking at it at an intra-cycle, you're not going to make or lose as much as this says intra-cycle.
And I mentioned our viewer teaching his kids, and I remember they were using IWM, and I want to say they would go out, let's say about the 45-day mark, and I think they would just sell
35 delta.
Was it a 35 delta, or was it like a $5 wide? Or I think it was something just as simple as this, like a $5 wide. You're right, probably around the short 35 delta.
Yes, but it is fascinating because if you're comfortable doing this, and I love TP's point, because if you're comfortable doing this, now this looks scary. So, I know that I'm teaching an 18-year-old right now who is not an 8-year-old, but he's an 18-year-old. You open up this option chain and it does look intimidating. But once you just get comfortable with putting something in that is defined risk like this and just lather, rinse, repeat, then you learn this, you're comfortable with it for a while, then you can move on and add other clubs to your bag, for lack of a better thing.
Oh, perfect. I like it. I'm glad TP brought that on today.
Kind of fun.
It's kind of nice having TP come on every Friday.
I know it, and we can't get rid of him. I love it. Okay, so we have 15.
We'll have to let him know next Friday we are doing the morning show. So we'll have to, maybe he'll want to join us on the morning show.
Yeah, maybe he'll call in. Okay, so we have a lot to do, Jenny. It is 21 days till expiration. It is also a Friday. We have to make sure we have no in the money signs. We have to take a look at our positions and see what's happening in there. I want to take a look at our triple Q's calendar.
And we will. I only brought this up because we were in IWM and I saw this. Remember, this was a big lizard we put on a long time ago, and we're left with just the butterfly of it. And when I say a long time ago, it was 25 days ago. So 25 days ago, IWM was trading at 218. So the fact that it went from 218 to 234 in 25 days, a little pullback wouldn't hurt anything.
This is not a crazy pullback. I'm getting correlated by Marvel, not by this market. This market is not bad. I have a bigger than a breadback position in MRVL, and I actually forgot about earnings yesterday, so shame on me.
And that is down. Oh, I keep hoping. Oh, it's 65. It's making a little bit of a. But we don't have anything in Marvel, which I wouldn't mind getting in. I wanted to see so the 60 put in there uses $800. What do you think?
That's not bad.
No, it's not bad.
Oh, hold on. Oh, never mind. It's $5 wide strikes. I was going to say, let's look at a buffer.
Oh.
But it's $5 wide strikes. Do you want to go?
I mean, the buffer would be maybe buy that 65.60, getting your break even to 60. That's $2. And then you'd have to sell the 70. So you have $500 in profit potential. And then even 60, it's not bad. You have $500 in profit potential instead of 200.
And your break even's wrapped around the same.
And your break even's wrapped around the same. Yeah.
Yeah, your break evens wrapped around the same. It's not bad.
Hey, I'm a big fan of the buffer. And now, if we needed to, if we wanted to release buying power, you could buy that 50. So what is this trade? What I want to see what this looks like. So
what is this?
I didn't even release buying power.
It didn't release buying power because it's not that expensive. Just to find your risk.
It almost looks like a Delta Buster. It is. It is. It is.
Yes, it is. It is a Delta Buster.
It's a Delta Buster.
You love the Delta Buster. You love the
Not the Delta Buster.
reverse Delta Buster.
The reverse Delta. It's the Delta Buster in reverse.
Reverse Delta Buster.
Yeah. Crazy. Crazy. So what do you want to do in Marvel?
I actually think let's keep it simple. Let's sell the put. Excuse me.
Okay. And if we wanted that closer to the $500 profit potential, we could sell the money. We could sell this 65.
I kind of like $800 versus $1,200 of buying power, though.
I know. Yeah.
Although $440 in extrinsic value is pretty good because look at that out of the monies.
I know. Yeah. Let's do a TP test. Theta per day, $4 on 1,200, or $378 on 800. Does that seem right?
Yeah.
The theta be almost double on $4 extrinsic value?
No, it'll double. Well, fun fact, it'll double as we get closer. It'll get, but not when you're 49 days out in time.
All right, we'll get the $2. Unless we want to look at, I'm just trying to see use less buying power if possible. Hold on. If we
I do thoroughly enjoy a little bit of room to be wrong though in Marvel.
I know. So if we bought the 65, if we bought this at the money, bought the 65 and then went to September, could we sell the 70, 65?
Okay, 350 is the number I can live with.
Yeah. Okay. So here we have 65.72. So that's $7 for 368.
I mean, that's the cheapest of the bullish options that I've seen.
And we're in.
Okay, good.
Let me push this out.
Hair's kind of crazy today.
That's kind of crazy.
My hair.
Oh, I can't get this piece of. I was gonna this is gonna look crazy. This is gonna look crazy. It's gonna.
You're gonna cut it again?
No, I'm gonna
put scissors in your hand. I thought you had scissors in your hand. I was scared because at some point she did. During COVID, she cut her hair live on air.
It was like in my face. There was a pair of scissors sitting here. I didn't have an extra pair of glasses thrown on top of my head. All I had was a pair of scissors.
Okay, so now we've got to jump into Twitter. Let's take a look at all the in the money signs.
Okay, jump into Twitter. I wanted to show we've got these beautiful ladies. So left to right. Well, there's Fazia, and then Mio, Francine. Oh, Mio. I'm like Mio. That's Fazia. Francine, Sylvina, and Sally.
Oh, I love it. Thank you so much for posting this.
I know. So Tasty Trade
from Australia.
Yeah,
love it.
So that's awesome. Our viewers would meet at road shows. They also connect on Twitter. There's lots of ways for our Tasty Trade network to connect, and they go out and they meet. They're great. And they always look like they're having more fun than us, Liz.
Oh, I know. I know it. It's so fun. All right, let's keep going.
Frankie with the option volume.
Frankie is traveling right now, so he's not on the YouTube chat, just a little FYI.
An economic calendar. This morning we had PCE. And honestly, when it came down, the market popped a little bit.
It did pop.
So
not, but yeah.
All right, and Blue Wackadoo, good luck. I hope we have a little rally because at 9 a.m. the SPOOs were not down 50.
So where's his short?
Where's the even here is around 64.55.
64.55 in SPX.
Yeah, 64.55, and we're trading 64.51. It's not. It's close. It's
close. They're in good. I mean, they're in my mind. That's decent shape.
Yeah, it's not bad. That's his break even.
Yeah,
so
that's not bad.
And look at this, Theta Raider. Hold on. The new tweets popped in. Okay, a new raid deployed. It's Hunting Premium. I like this guy. I don't know who he is, but I like it. Theta Raider Hunting Premium.
Like it.
ES Iron Condor 4 DTE, September 2nd. So Iron Condor 4 DTE.
This is the one you're doing an ES Iron Condor. You're doing the 0 DTE, but with one overnight, because this is going to be, you're using all 3 days of risk in the long weekend.
Yeah, so let's see. 65 30, 65 20, 65 64 35. So 64 30. So it looks like the call spread's just $10 wide, 65 20, 65 30. And then the put spread is $20 wide. Let's take a look at this. And I want to say that they came in this morning on Fast Market because I think this trade came through Fast Market today.
Oh, good.
Yeah, 65 20, 65 30, and 35.
Do you know how, it says the Theta Raider was like, but it's all mushed together. It's got, I read it totally different. Okay, what were the strikes?
I think it was the 65. Well, this might have been earlier because we've fallen since 65 20, 65 30. I'd probably bring it in now. And then it was the 65 45 25. So I'm sure this came in earlier before the market was down, is my guess.
Yeah, but it's still not a bad.
And maybe I'd adjust the strikes. There's 64 30, 64 10.
$25 wide.
And then bring this down. 65 10, 65 20.
Fine, yeah. I mean, they're all versions of the same trade. Pick your spot.
Now, okay, so just so the ES is like a 50% multiplier. So this $20 wide is really like a $10 wide. So it's like a $10 wide on the bottom, $5 wide on the top, and you're getting $250. So so you've got $250 in risk to the top and $750 in risk to the downside. I don't mind it.
No, I don't mind it either. I mean, I don't want to do it I don't want a 3-day risk overnight trade like this. I don't want it over a weekend. I definitely don't want a third day.
But some people don't mind. They don't mind it because they're getting, you're getting paid extra. Like you're further on this than you would be on a one night overnight. Like you're getting, paid for that longer weekend to take that risk. So some people, yeah, I get it. I get where he's coming from.
I do too.
Yeah, so welcome, Theta Raider. All right, then we have Ashvin. A couple scalps. I've been watching level 2 data on SPY lately to help me with deciding on verticals. Does anyone else do that? So if you do, reply here to Ashvin.
Please reply to Ashvin because I don't watch level 2 data on SPY. So we need people helping people here, Ashvin.
Yeah. So thanks for posting. Jack Tucker, 0DT SPX, a double tranche.
Oh, wow. Okay. So, and they're 64.30 is their downside. So they're in good shape too.
Yeah. 64.30, 64.80. So he must put this on a little later.
Can you click that one? I want to see what time you put it on. The left, the other side. 9:26. Because I just want to see what time.
Yeah, 9:26.
Yeah, that makes sense.
Okay. All right, and then Herb Hims, is there a way to put it on a synthetic, not zebra, with the collar? So this came in 29 minutes ago. After
if you're using the synthetic stock, it's understanding the limitations of the capital. That's why we were having the problem with.
Right, so like that would be priced into those calls. So if you're going to buy like a deep in the money call instead of, that should be priced in. But I'll look at a zebra because I don't know.
He said not zebra in parentheses, didn't he?
Oh, did he?
Yeah. So Herb, the only way that I know, and Herb's smart, so maybe he knows better than we do. The only way I know how to do synthetic stock are in the money calls, which are going to be expensive, collars, which are going to be, expensive, or zebras. Those are my only synthetic stock positions that I know of.
So, and whatever you look at, you can kind of look at this. So if I go all the way to these Ds and I look at it in the money call, so here, I'm making this math really simple. So 33 strike, let's talk about parity. 33 strike and the stock's trading 43. So there's $10 that trade. If you're talking about the stock to the strike, $10 of intrinsic value. And I look at the puts, and it's somewhere between, around, let's do mid-market, say $7. So you've got $10 of intrinsic value, $7 of extrinsic value. So this should be trading for $17, but it's trading for $20. So there's that extra like few $100s that is the cost to carry.
There's your cost to carry. And so that's just it, is Herb, I understand where you're coming from with it. The synthetic doesn't make any, there is no gaming of the system. There is no arbitrage here. It's not like you're going to get the free money with this, in my opinion.
Yeah, so like in order to buy this call, instead of buying the stock, you're paying, the couple $100 in interest that you'd be charged on the stock. Like it's all priced into the options.
Yeah.
So you figure if he, buys this 45 put, sells the 50 call, buys this. Oh, sorry, I got this. Yeah, buys the put, sells the call.
Yeah.
It does show a max loss.
Because it does have a max loss.
Right.
So that's just it, is Herb, I think you've stumped us. If you know the way, let us know.
All right, Skaven Stocks replying to someone.
Oh, wonderful.
Excellent. Okay. Now I think we're out of time, Liz.
Okay, wait, go back to Twitter real quick, because they came back in. It's up there. It says, watching the live right now, thinking about CDE December 19th, 12.5, 15 bull call spread. Thoughts on risk versus upside here? Let's take a look at it real quick.
12.5, 15 bull call spread. He's going out to December.
I don't know what that is.
CE, Core Mining, it's trading 12.87. It had a rally. If we went to bull call spread all the way out in December, 12.5. You know what? Wasn't it like 12.5, 15?
12.5, 15.
Okay.
Cents. So we talk about risk reward. You're giving up 70 cents in extrinsic value, which is typically we like to sell the premium. But if you're bullish and you think it's going to go up, you've got it wrapped around the at the money call spread that you were actually paying a little bit more extrinsic value than you were selling. I like this better, Jenny. I do. You could even go to the 21-day and keep moving it.
Right. I mean, your only risk is that $1.20. I know it's had a run. If you think it's going to continue to run, so here it's 90 cents in the 21-day or $1.20 in the 49-day.
This is not tasty rules, but when you're looking at this, kind of the common sense slide kicks in. If you're putting a wrapped around the at the money debit spread on, you're not going to get paid until a very long time away. Why don't just keep moving it? I agree with you, Jen.
And my thought is, if you're willing to risk $1.20, because this has gone up so much and it could easily fall. If you're willing to risk $1.20, I'd rather have the $1.20 and unlimited profit potential.
Yeah.
Yeah. Should we buy it?
Sure.
All right.
I mean, I would go. You and I are over traders, as we have established. I would go with the CDE, the shorter term.
All right, here. Yeah, September. And I'm just gonna, something tells me I'm not gonna, well, maybe I'll get filled at 85. Sometimes when I'm doing this, like my 85 bid will go up and then they'll change this. Then it's like, then this moves to 95. I should just pay.
It's not exactly the most liquid of markets, CDE.
I know, but we'll keep an eye on it. And if it doesn't go up, all we lost is $90.
Jenny, can you take a look at CGC for me?
Yeah, see, can it be?
Oh, it's down. I want to take a look at the chart. I was listening to another podcast or something this morning before the markets were open, and they were saying it's going to be the year of the pot stock.
Maybe I better buy my MJ.
I almost called you.
All right, now we'll go through and push things out. Oh, we don't have any red in the money signs. I have a lot, so I got a lot of work to do today, but.
No, we've kept this pretty clean. There isn't much that needs to be done. I mean, Spoo's around 52. It's keeping its wings down. We put on that triple Q's calendar 2 days ago, and it's made $100. So
let's take that off.
Yeah.
Yeah, but we paid $350 for a calendar. It made $100. Take that off. 440, 847. Okay. And honestly, that's more than I ever thought that calendar would make, truthfully.
I know, you were so mad at that calendar.
I know.
So that's the only thing too. Other than that, I mean, this account is okay today. It's not, I mean, we're a bullish account on a down day and it's not getting hit that much. Do you know what I mean?
No, it's not. It's not bad. It's not bad. All right, Liz, we are out of time. It is we're time for the long weekend. I'm going to have Lily's birthday celebration.
Oh yes, have a wonderful time. Her birthday's not till Friday though, right? Her real
It's not till Friday, but we have
just for my purposes. I would like to know. That's the only reason.
we always celebrate it Labor Day weekend.
For sure. And you should go celebrate our girl, and everybody out there have a wonderful long weekend. And remember to trade small, trade often.
Staff with us, learn with us, and watch the Liz and Jenny show. We'll see you on Tuesday.
Cool, everybody.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and of course, Mr. Thomas Westwater in the house with us today for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tastylive, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend it with my buddies, Mike and Thomas. Thomas, good morning, sir. How are you?
Good morning. You know, the weeks are flying by here.
Yes.
The weather's cool, cold, and yeah.
I have to ask you, did you see the screwworm report?
I did, and I'm still long live cattle. It's been my
Did you
trade.
see the human case, though?
Yeah, it's in a human. So I'm not sure if the guy went to Mexico or something, or if it's...
This is what we were talking about.
the end of the world.
Genetically modified. We don't need to do this.
But they did.
But they did. Now we have humans getting screwworms.
This is how 28 days later starts.
Yeah.
You know, the screwworm debacle.
I mean, live cattle making new highs. I mean, I'm going to stay in it to win it.
Why not? I mean, it's been working.
Mm-hmm.
I have to close mine. I'm deep in the money. But yeah, that was kind of when I saw that, I was like, oh my God. The fact that I even know about the screwworms, I attribute to you, Thomas. So
Yeah.
Thank you for that.
So we are
for
safe.
putting me on to the screwworms.
We're safe up here in Chicago. They don't like the colder weather.
Okay, that's good.
Yeah. The cows down there near Mexico, I'm sure all the ranchers are nervous. I'm sure this injects some more uncertainty, some more fear into the market. So
yeah,
it's going. We're going up. So I like it.
Nice, very nice.
Yeah, I closed my position 10 points lower, which is kind of crazy. But yeah, it's had green day after green day for the last 2 weeks straight. It's nuts. It's like a meme stock.
Did we go over 2 or 3 weeks ago, somewhere there? But yeah, it's doing really well.
Mm-hmm.
I mean, I think this is the thing where you'll eventually get a big pullback. All of this will come out this year, and when that does happen, it happens fast. But for now, I don't think we're close to that because this is still a big problem if you're looking at what the USDA is saying and the monitoring and everything, and looks like it could get worse.
Oof.
Craziness.
Yeah. And you only get that info on this show on Tuesdays.
Yeah.
There's nobody else on the interwebs, on the CNBCs talking about the screwworms.
Before it's on.
Before you, yeah.
Right.
So there you go.
Yeah,
So
CNBC, the first time I saw them talk about screwworms and live cattle was this week. So
Okay.
Yeah.
Which is even shocking that
Right.
started.
They're even mentioning it now.
Yeah. So, there you go. Tasty is always early.
Indeed.
There you go.
Indeed. Just like the market. We are the market.
Yes.
We're live.
But the rest of the market's been another chop fest of a day. I mean, yesterday we had a little bit of movement into the close. They sold off like 20-ish handles into the close, but today has been an absolute nothing burger. We've got the E-minis down 3. They've had a 33-point intraday range, including the overnight session. since the open, it's been like a 10-point range. It's really been nothing here. The NASDAQ up 35, nothing really moving there. You have an NVIDIA up $1 and change. It's near highs here. It's one of the only ones really moving all that much. You've got the Dow down 19 and the Russell up 16. So the Russell actually bucking the trend here, which is a little surprising given that bonds have sold off. Bonds down to 113.31 here, giving up a lot of what they had in the rally on Friday, and rates obviously moving higher, which is kind of a surprise to see the Russell kind of bucking that trend here. Oil as well, moving lower, down $1.35, 63.45. Volatility futures basically unchanged. It's been the same MO for the last two sessions here. Opening. In the opening of the session, we've had volatility a little bit bid. It's continued to contract throughout the session, which is what we're seeing again today. Gold catching a little bit of a bounce. It was unchanged for most of the morning. It's now up $17. Silver as well catching a little bit of a bounce. It's basically unchanged. It was down like 30, 40 cents at one point. And Bitcoin continuing its weakness, down 1,100 on the futures, spot down to 82. Ethereum bouncing a little bit, but it too has been very weak as well. So it's been a very mixed bag, choppiness. I don't know if there's too much to glean from the overall market action. I know NVIDIA is kind of our event for the week, but other than that, it seems very much like a holiday week, which is what we have going into Labor Day here this coming weekend.
Yeah, NVIDIA is going to be interesting. I feel like NVIDIA is primed for the earnings dump.
Ooh.
Because we've seen so many stocks
Mikey the Bear?
that are just
Who is
trickling up, and then they just get hammered after earnings. Like how many we can pull up how many other charts that we can pull up that are exactly that same thing.
But if NVIDIA has a 10-point down move, it'd be back to where it was on Friday. That's which is the expected move, I think, is about $10. It's not like we're taking months of price action away. It's days, hours, minutes of price action.
Yeah, but I think NVIDIA is interesting because even if it sells off, I think people are going to want to get into it. So
buying opportunity.
Yeah, does the sell-off even last more than a couple weeks?
Is that the prognosis here?
I mean, there's a lot of moving parts with this earnings because the U.S. is, they're charging for the shipments to China. Now NVIDIA is saying it's going to make a new chip versus the H20. It's going to be more advanced. But now China is saying, they're putting backdoors or kill switches in it, that kind of thing. But they still need the chips, so they're going to take them either way, I think. So, it's the revenue stream to China is reopened. But we'll have to see. I mean, I'm looking to see what the CEO says about this concerns about pullback in the AI investment space with Meta doing their restructuring. They're saying they're not, investing less. They're saying it's restructuring. But if you're spending less money, even if it's restructuring, what's it matter? I mean, so we'll have to see how that goes. I think the commentary on the earnings call will be the big thing for earnings.
Yeah. And Thomas wrote a nice little piece in the news and insights tab. Tastylive.com.
Yeah. Little earnings preview there. I'll pop it in the YouTube chat. But yeah, if you like written content, we have plenty of written content on that news and insights tab, including all the earnings reports for the big tech stocks.
Yes.
Big name stocks. But yeah, I did do some stuff this morning.
Okay.
I got into, so yesterday on Overtime, we were talking about how we might see a sector rotation or we think it might make sense to play for one. So I got into a bearish put diagonal in the Qs.
Okay.
Long December.
Ooh.
560 and short the October 550 for $9.50.
Okay.
And then I bought the call calendar or diagonal, long December, IWM, 235 call, short the 245 in October. So both of those are 10 points wide. Both of them are around $9. I just feel like if you see cash outflow from the Qs, maybe it goes to something like IWM.
There you go.
And then I closed my LUV long call that was left over from a vertical spread for a scratch.
Nice.
And then yesterday, Circle and ETH A butterflies from the Tasty Crypto segment with Ryan.
Very nice. Yeah, we did some trades this morning as well. I put on an iron condor in the oil futures /CL. I also did another SPX trade. I don't want to toot my own horn, but it's 5 for 5. And I closed that intraday, like within like an hour. Took like 80, 90 cents out of it, which means, as we've been saying, we're due for a rough one.
I don't know if we are.
I can't do 5 in a row.
We've been picking our spots pretty well.
Yeah.
But
We'll see. And then I got long some more IBIT call diagonals. I did a CrowdStrike short put spread into earnings. It has earnings after the close tomorrow as well. Did a little NVIDIA iron condor for earnings, playing for an inside/down move, and an XLV trade. Healthcare sector, one of the worst performing so far this year. Catching a little bit of a bid if you look at like Eli Lilly is up like 30 and change here today, and then UNH has had its Buffett bounce, but still kind of dead money right now. So maybe there's a little catch-up trade there.
It's coiling. It's coiling at 300.
Yes.
Ready for blast off mode. But yeah, big move in Eli Lilly for sure.
Yes, and those are trades. A little bit more will be analysis on them. Will be coming in the cherry picks, coming shortly in the next hour or two. So we're looking at a lot of sector performances. We're looking at volatility performance month to month. We've got some data on bond yields as well. So a little bit of everything coming at you.
Love it.
Yes.
Quick question from Andrew in the chat. How is the screwworm different than the botfly?
I'm not exactly sure. I know a botfly like lays its eggs, I think, under the skin. I think the screwworm is just a little more catastrophic for the cattle.
Okay.
So maybe a little bit more prolific, and plus it's one thing that's been eliminated or technically eliminated from the U.S. and the botfly hasn't. So I think the screwworm just is more damaging as a pest.
The more you know.
These things sound like creatures from what's that book series with the 3 fingers?
I was gonna say the gorge. Oh, that's Lord of
They're in the dungeon zone. And they're just pestering you.
Yes.
You know what I'm talking about.
God, what is it?
I pledge.
No.
I pledge. No, it's we'll figure it out. Someone in the YouTube chat.
Yeah, somebody chat us.
Hunger Games.
Hunger Games. There we go.
Hunger Games. The botfly.
Yes, is like one of the
screwworm.
They like summon it in.
Yeah.
I feel like that is isn't that one of the like things that happens? They have the like flies or like bees or whatever.
That are like 30 times bigger than they should be.
Yeah. Exactly. Good call out. Wow.
I mean, Google says the botfly doesn't require the host to die, so usually the cows are okay if a botfly gets it, but
the
screwworm just causes a lot of necrosis and tissue death and these big nasty wounds.
Ugh. Gross.
Not good.
I don't want any screwworms.
That'd be terrible.
Screw whatever. Yeah, I don't want any of that.
My screwworm defense systems will be up if they find their way up.
Yeah, is there like a vitamin or something that we can take to fend them off?
Probably whiskey or something.
Ivermectin.
Yeah. Well,
there you go.
I mean, that kills parasites.
Yeah.
There you go. We'll see.
I wouldn't start taking it yet.
Yeah. No, I think we're okay for now.
Beautiful. We're streaming live on the YouTube channel. If you want to stream live there, we are live and ready for your questions. If you want to pop it into the YouTube chat along the right-hand side, just head over to the Tastylive channel, and we'll get to them shortly. But first, we do have some slides, as it is Thomas Tuesday.
Yes.
Taco Tuesday as well. Natty Gas.
We're going to try it again.
Here we go.
We're going to try it again.
Well, I'm already long 2 contracts, so
there you go.
This is where we're going with this.
There you go. Yeah, I'm going to get long a micro contract.
There you go.
That's going to be my play here. I already have a short put spread at 3. But this is now the time where we're getting past the summer. So, the sell-off earlier this month, it was on the basis that the chances for hot weather into the end of the summer vanished. We sold off. Now we're at the lows, and all of that is priced in. Now I think the market is going to start looking forward, going into this demand season, which technically starts in November. A lot of years it starts earlier, sometimes October, sometimes September. And we'll go to the first slide. We'll just take a look at exports. So right now, there's European prices, which are the Dutch TTF futures, which we don't have on the platform, but taking a look at them, they're at 11.42 when you compare it to the US price. Or actually, I'm sorry, it's at 8.7 if you compare it to the US price. So it's at, the highest we've been since June, since late June. It's gone up all the way from 7.5 to 8.7 over the last week. So this is an increased arbitrage opportunity. When European prices are this high, factoring in all the storage cost, the transportation cost, the boil off cost, there's that arbitrage. So you start shipping these U.S. products to Europe, and it creates pressure on the U.S. price because export capacity has to go up. So that's more demand essentially from overseas. So we're seeing this long-term trend, especially since COVID or the Ukraine war. Right after COVID, it's been going up, and this is expected to go up or continue to go up. So it's a good thing going into the winter. Europe has to make sure they buffer their inventories since, Russia, a lot of their gas, not all of it, is cut off from the European bloc. So it's a positive for the U.S. Let's go to the next slide. This is seasonality. So the way this seasonality chart works is you're comparing the average price for each month over the past, I think, 12 years, and you're seeing the premium compared to that 1 year average. So August, you're right near that yearly average. September, you start to go up 110%, so usually, twice the price. And then you go up all the way till November. Then you start to go down a little bit. But, the seasonality all the way into the winter months strengthens. So if we're taking a trade based on seasonality, especially with the lows we're seeing, and you're playing on, the view that winter is going to be pretty cold, Europe's going to need to import a lot of U.S. product, this is probably a pretty good time, given where prices are, to take a long position that, goes a month out, 2 months out, even 3 months out. So 45 to 60, 2 months. It's a good time to get all the way to that October seasonality where, compared to the yearly average, you're well above where you're usually at. So we'll go to the next slide, and this is just the green line here is the actual price based on the premium that Europe has versus the U.S. So this is kind of taking a different view of model if you're just doing U.S. prices. And the red line is based on a linear regression of where prices should be now compared to where they actually are. And we've seen, the green line, of course, has gone down, but this red line is right around 3.3.
Okay.
And we're at 2.8, 2.9. So, you got about 40 cents there of premium.
It's a lot, 15%-ish.
Yeah.
With the 15-20% upside.
And these models aren't perfect. You can look back in the past, see that they're not always correlated, but the correlation, I think, when I looked it up, it's 0.64. So a moderately or modestly strong correlation, not perfect. Few things are. But, it's another thing that shows us, the predicted value is higher. You take into account seasonality where this predicted value could increase even more. This gap you're getting between the actual and predicted prices, it only lasts for so long. So it always comes back, kind of a mean reverting nature, the actual versus predicted price. This is just one model. There's 100 ways you could do that. You look out there, there's probably 1,000 different ways people try to run these models, but it's just one way to look at it. It's a pretty simple one. It's not getting too fancy or too crazy. So yeah, I mean, natty gas trading, we're 2.72, somewhere around there.
I mean, it hasn't been below the predicted really for much time. I mean, like going back to October of 2024, that's kind of a year ago. I mean, but for the last year, it really hasn't been below that predicted price.
Right. And so this is really the first time that it is. And again, it's because, this summer, especially this August, and now, September, it's on the East Coast especially, the chances for that really warm weather to give us our little last demand boost, those cooling degree days as they call them, it's pretty low. And I think if you look over the past 20 years, we're in the top or the bottom 5 cooling degree days when you compare it to those past 20 years. So it's been a really bearish summer. The start of the summer, it was nice and hot, had the prices reflect that, and then those bullish tailwinds just faded away. So I think that's all priced in now. And usually in natty gas, when you get this low, you would see at least a day or two where you get these shorts capitulating, and you get a big rip or rally, 10%, 12, 15 even. You see that sometimes. We haven't seen that yet. We're still trading under the 9-day EMA. It's pinned prices since July 21st. We've attempted to clear that several times. But now we get, a little bit of this, somewhat of a doji candle right here on the bottom. So I'm going to take my shot long.
I like it.
I think, things are working up better than they were when we talked about this a few weeks ago. So, yeah.
I'm in as well. I had one in at 208.04. I did that on the 22nd. So I added another one of the micros just to, double down because why not?
Yeah. I also have two.
The why not is because I stink at trading natty gas, by the way. And I'm usually a contrarian indicator in this space. But this is the gambler's fallacy. It's time. It's due. I'm due.
Well, the U contract falls off tomorrow. That's the last day to trade it. So maybe you see some rotation from the U into the V, and if people were short, maybe they get long.
Yeah.
Maybe next couple days here could be a big green candle.
Yeah, I think that's a good point. The contract expiration, sentiment could shift, people reposition. I'm long in the V contract, the micro.
Yeah.
So I just got long that, so in it to win it.
Love it.
I saw somebody mention UNG. So when you are trading these ETFs, UNG, I don't know the exact makeup of it, but it's usually, a basket of front contract expirations as well as the second contract expiration. So here, you're going to have some drag because you're selling out of, $2, 2.71, 2.8, and buying into 3.14. So there's a spread there that is a drag to UNG, and that's why UNG, when you look at UNG or volatility products, stuff like that, you have this kind of constant drag lower. If you look at this on a wider time frame, you have charts like this where, it was never really trading at these values. This is just all the splits that it has because of that drag.
Yep. Same with USO.
Yes.
Same story. If you have an ETF that tracks futures products, that ETF or whatever the product is subject to drag and drift based on contango and backwardation. So always got to check out the makeup of the ETF or ETN that you're trading so you have a full understanding of what it is.
Yeah, and if you want a product, if you can't get into the futures and you don't want that roll-off component that's affected by backwardation and contango, you can get into something like EQT.
Okay.
Just another way to like 80%.
Okay.
Like front month contracts, then at expiration or the day before they roll.
Yeah, and so it's rolling into the V contract, which
Yeah.
is probably like 9 ticks or 9 cents higher right now, 10
Right.
cents, whatever it is. So there is still that drag there. Makes sense.
Well, it's good to see we are aggressively long.
Yes.
Maybe we'll get that roll pump in the next couple of days. It'd be great.
Let's see it happen.
Sweet. Thank you for that. Love it. Yeah, couldn't be more happy to get to be long natty gas at these low lows.
Here we are.
Yeah. We caught that move in oil too. That was from last week. You pointed that out to us. I know, Mike, you had the micro contract. Did you get out of that?
Yep.
I had just a short put spread. Hit that on the head. Are we getting back in there? I did a iron condor here into this down move. Does that
Nice.
fit your thoughts?
Yeah, I'm in an iron condor as well. I have it between 60 and 67.5 for the 51 days out. So pretty happy with it right now, trading at 62 and 8. So, I think 60 is a good psychological support level. And
round number.
Talks Ukraine and stuff, they're not going as well as they could. So API stocks are out this afternoon as well. I think the consensus is a drop of 1.7 million. So we beat the EIA, we were way over the drop last week. So we'll have to see how this week does with the API numbers. Could give some support.
Yeah, if we get another day like this, if we get closer to 62, I'll just get back in with a micro long contract again. But yeah, good trade, good two-sided action in there. It's been a great trading vehicle for a long time, and it will probably be into the future.
Yeah.
All right. Pop on over to the YouTube chat real quick. Ryan's got an Apple long put vertical. What to do? Long the 215, short the 200 in the 9/19, September 19th cycle.
215, 200?
220.
200.
Yeah, sorry. 215, 200. 215, 200.
Cheap shot.
Yeah.
Got the Apple event coming up.
Mm-hmm.
Bonetta was speculating on a folding phone. Is that something you would be interested in, Tom?
No, I mean, it's one of those things where I don't think I'd like it at first, but maybe you get used to it. I've never thought I have to fold my phone, so.
I'm out.
Yeah.
I'm out on the folded phone.
Yeah, I don't.
Unless
She
I
did
bring
make a
back
good.
T9. The Motorola flip phone T9, that was my
T9.
fastest texting speed ever.
She did make a good point. It gives you a bigger screen. You get like.
It also seems like it could be more breakable. Like the more complex something gets, the more it could break. How all our fridges have like Bluetooth now and stuff. And
Yeah.
Like, I just want a fridge that keeps my food cold.
Yeah, you don't have to be like keeping track of what I'm putting in there.
Yeah.
Soon it'll be like you pull something out, it'll be like, oh, that's 500 calories.
Yeah.
Sir.
Are you sure you?
They already
Are
do
you
that,
sure?
I think. Some of
Do
them.
they?
Yeah, and they take pictures of your fridge.
They
and tell
fat
what
shame
you're-
you?
Yeah, they have cameras inside the fridge. It tells your app what you're low on and stuff. So, you don't have to look in your fridge when you're at the grocery store or something.
Yeah.
It's pretty wild. I mean,
Nestle is behind this innovation there.
Yeah.
Someone's behind it.
Yeah. Mondelez.
What a world.
Mondelez just trying to track everything we eat.
It's really interesting, the data implications, though, because that data is fed back, and you see what people are buying, what people are...
How much of it,
fridge,
how frequency, you get everything.
Who buys what based on demographics. It's pretty crazy.
We need the Wonka food thing that just zaps the food onto the plate.
Oh, yeah, you
And
like
just-
put in there.
That would be sick.
Coming soon.
Bowl of ramen, bowl of ramen, bowl of ramen, bowl of ramen.
And it'll be just overly processed,
Yeah.
screwworm style.
Yeah.
Genetically modified.
Mm-hmm.
This trade, I mean, it's a downside shot. There's not much management that you can do with a long put spread that's, out of the money. You got $125 left to lose on it.
Yeah.
I mean, I might just close out the 200 strike put and just lean short via the long put.
Yeah.
And if you get a $5-10 down move,
You're back in business.
Yeah, maybe you close it and move on to the next trade, but
That's what I did in LUV. I had a vertical spread, got a sell off, bought back the short call, left with the long call, and then you got the rally. If you don't have the counterpart, if you don't have the short option on that eats away at your value that you can get back in the long, if you get the move, you can get out much more quickly on a smaller move.
Yeah.
So you just have to be willing to take another 50 cents of risk, but that's basically the adjustment. I would not be rolling it from 200 to 210.
No.
That's how you kind of kill the trade. It would be too narrow in that sense where you have a 5-point wide, and if you do get a big sell off, that short option is going to eat away at almost all of the profit potential in your long. So yeah, I would say either nothing or you buy back the short call.
got any thoughts on gold and silver? I mean, you rate cuts on the table, money printer go burr.
Yeah, I mean, I'm long silver. I have a call spread. It's still 63 days out. I took it 2 weeks ago. I joined a trade with Vecchio. It hasn't been doing much yet. I'm still waiting for this whole, rates come down, gold and silver go up. I'm not sure. I think the market's waiting for that first rate cut to actually
happen.
Yeah.
Because bonds are acting a little squirrely.
Yeah, they are.
I mean, it's almost like, okay, yeah, we see you, but no, not so fast. Like a little Dikembe kind of thing.
Yeah, I mean, I think we have PCE data next week. We got some.
Friday.
Yeah. Oh, this Friday. Yep. Then you got this independence thing with going with Lisa Cook being fired.
Yes.
Seeing a lot of things. People say they can't fire her. Some people are saying they can. So we'll have to see how that shakes out.
Well, that was the move in the dollar, because the dollar has had some big swings over the last couple days, but we've reversed a lot of the move that it had. From this morning, the euro is higher, but you've had some whippiness in currencies as well.
Oh yeah.
Yeah, I took off a bunch of those currency positions. The only one I have left is the CAD yen. The other ones I took off for small little profits, but
yeah, $20. I was talking about that with my dad. I was like, as long as you stay small with these and you just kind of play for the ranges. There's so much leverage here that you can get, like the 20 or 30 or $40 that you get out of it. You're only using a couple $100 in buying power. And by buying power, I mean like margin. And you kind of just scoopy out of those and the cool things. Been nice.
They are quite nice.
Yes.
Let's see. What do you do with debit butterflies at 21 days that are not quite at profit targets? There's not much to do with debit butterflies that are symmetrical. If they're out of the money and let's say your short options are losing a ton of value, maybe you buy one back. But, or if it's completely in the money, maybe you sell out of the debit spread portion of it. But butterflies are just a credit spread and a debit spread, and both of those strategies only have a max profit one way or another. So if you're reaching max value that you can get out of one of those spreads, you could close that to retain that value and then hope you get a reversal.
Yeah.
But that's basically it. Like these, my ETH A butterfly, 35, 40, 45.
I mean, there's nothing to do with.
There's nothing to do with this one, but yeah. If there was, let's say there's a big sell-off in ETH A, I could buy back that one of the spreads. So I could buy back that 40, 45 credit spread, and then just basically lean long with the debit spread. Or if it rips through this whole spread and I don't close it, I could sell out of the debit spread, the 35, 40, and then lean short with the credit spread. So that's what you can do with butterflies. You just have to be comfortable with the additional risk that you would add. What about adjusting the Apple trade by buying the 200 put and selling it into a broken wing butterfly? I think it's too late for that.
Yeah, because
there's no
gonna
value
be
here.
Yeah, with debit trades, like if you're just buying a call spread, buying a put spread, you got to have some sort of. You have to be correct in some way on the direction of the stock. I mean, if you don't, like, there's been time decay, the stock has gone up. You know, you've just been kind of wrong, and so, you know, the risk on the table at entry is you've hedged it a little bit because it's a spread. And that's really all you can do. I mean, at the end of the day, you got a long put spread and the stock goes up, not going to work.
Yeah. And turning this into a broke wing butterfly or butterfly, it's just, the trade is done ultimately.
Yeah. You got $100 and change. You either take the money and run or buy back the put, the short put, lean a little bit more short.
Yeah.
Into highs or into higher prices because the stock has gone higher. So buying back that put synthetically gets you, you know, a couple deltas shorter.
Indeed. Put credit spread on IBM, September 19th.
Do they have earnings? No earnings.
No earnings.
All super, super low. It's so sad.
I mean, you could do something like that if you want, 235 or 230, 240, 235. I'd just keep it real small, but it's still not great. I mean, you're selling an at the money spread and you're collecting 1/3 the width. Not great. That just goes to show how low implied volatility is. I'd rather just buy a call spread.
Yeah.
Fabricate more max profit with the debit spread versus the credit spread.
You do a little diagonal spread here. 250, 255. $3 and just under $4. October SEP, cheap shot.
Goldman Sachs, short a covered strangle, 727.30. Net credit $3,600.
SEP.
720, 730. Cost basis is at 728. Would you close the 720 put?
I mean, you're up a couple bucks on the trade, right? They said 36.
Yeah. If the basis is at 728, if you buy back the 720, your basis would now be at 738. And
no, the $36 is the credit, and then they bought the stock at 728. Is what it sounds like. That's what I'm thinking.
Well, the stock cost basis is 728, which I assume includes the $3,600. If that's the case, if you buy back the 720, I don't think you can profit on this trade unless you wait all the way to expiration to get all this extrinsic value out of there. But either way, there's still plenty of value in the 720. I don't think you need to do anything here.
Yeah.
But yeah, it's a nice trade into this rally. But yeah, because you have no upside risk, I wouldn't be making any like super adjustments here.
Yeah, you've got a lot of extrinsic value left in that position. You know, $2,000 worth or more.
Yeah.
Yeah, you got $2,500.
Yeah. And so it doesn't include the stock basis does not include the credit.
No, so they're long stock at 728, and then they did the strangle on top of it.
Yeah. So your basis is at 690 or something, but still, the 720 still has a lot of premium there, and it's going to hedge your downside break even if you keep it on. But yeah.
Yeah, this is what you want.
It's a good position.
Yeah.
Is selling the guts better than selling a strangle? I mean, when we talk about buying the guts, selling the wings, you are basically buying the near-term cycle, moving it out of the money, and we like to do that when we're moving it out in time, so that we're not paying a big debit to do so. But yeah, that's what you're doing. You're going from like a straddle to a strangle when you move out in time. Meta, problem child. Ooh. Iron Fly, 770 shorts. September. 10 points on the call side and 15 points on the put side.
So slightly skewed to the upside.
Yeah. Net credit is
Probably.
726.
So you probably had an iron condor rolled up to this.
Yeah.
Got a little, got a little aggressive and made the put spread a little bit wider. This trade, I mean, it's not going to move all that much until expiration. So I would hold it. I mean, it's a 50-50-ish shot here.
Yeah.
Because you have a lot less risk to the upside above 780. You only have like $2 in change of risk.
Yeah.
Whereas you have $7 of risk on the downside. So I hold.
Yeah. You need a rally here regardless, but not much to do if you've converted to this situation. For a stock with good options markets, you can buy a zebra with 100 delta for 10 to 20% of the underlying. Why not convert all of the long stock holdings to zebras and roll every 21 days?
Miss out on dividends.
Yeah.
Long-term taxation if you're holding these stocks for a long period of time, but
other than that, if you're trading
them
in and out of stocks, then yeah.
Yeah.
Zebra is going to prevent you from getting blown out to the downside when that happens.
yeah, it goes to what we talked about earlier in the morning when we were looking at like the swings in the market based on volatility and just sizing down positions. Going to a zebra is going to use a lot less capital, but give you that same sort of upside exposure. So it's a way to, if you're trading covered calls month to month, using a zebra is going to be, is going to give you a little bit of added leverage with the same sort of position.
Mm-hmm. When a trade's going against you, how much time is enough time to wait it out versus knowing you have no chance?
I wish I knew.
Yeah. It depends on the strategy, I would say.
Yeah.
So like the micro crude contract, and it also depends on your size. Like if I'm long a static delta position, my intention is to hold that forever.
Mm-hmm.
So like micro natty gas, micro crude, I'm not exiting these positions. I'm just holding them forever, regardless of what happens. But I'm trading it small enough to where I can do that. Defined risk positions are kind of similar. Like if you have a credit spread or debit spread that's near max loss, it doesn't really make sense to close it because you can get all that value back if you get the reversal.
Mm-hmm.
The tricky one is like strangles. I think the trickiest one is strangles with risk to the upside. That's the hardest one to do. Like with risk to the downside, if you've traded small enough, you can just take the stock or roll the put.
Yeah.
But if you're taking upside heat on a strangle, that's the most difficult mental problem to figure out.
Yeah.
So that's for me, like I would rather just do my best to not have a lot of upside risk, because that's like even if you're bearish or neutral, like still that's the hardest one to answer because stocks can just continue ripping higher, where there's a lot fewer stocks that drop and then don't recover ever.
You just reduce a little bit of delta.
Yeah.
Roll the put up, roll the call down, reduce delta slightly.
So are you saying when you're long or short a future straight out, you'll just roll it until it comes back to a profit for you?
I'm almost never short a future.
Okay.
So, but yes, a long futures contract.
As long as you're size
correct. Yeah.
We've gotten into some pickles.
Yeah.
In the past.
Yeah. But it's all size based.
Yeah.
Like my biggest pickle was Facebook.
Mm-hmm.
When I sold a strangle for earnings and it went from 220 to 130, $6,000 loss in a $25,000 account. Closed it, watched it go from 130 back to 220 a year later. So if I was sized correctly, I wouldn't have been in that strangle, first of all. But if I had a large enough account to hold that position, I would have just held it and it would have been fine. So that's my painful example of sizing was not correct there. But yeah, I think the hardest question to answer is upside risk. Short, undefined risk, upside risk. Downside risk is like, for me, it's like, okay, if I've traded small enough, I can just hold this forever. Sometimes it doesn't work though. I've had Under Armour shares for 600 years.
That's why you should just get rid of them.
I'm just gonna keep
let the bag fly free.
Well, now it's a call option. It's $5, but
True.
That's an example of something that has not worked out over the last couple of years. But, you know.
So that's the real risk, is you're just tying up capital.
Yes.
You know.
Opportunity risk.
Right.
But yeah,
opportunity cost.
Yeah, totally.
Yeah. Like you have this opportunity cost of literally anything else but Under Armour.
Yeah. But I think I think the IBIT year-long trade has been somewhat eye-opening to me because I've had a strangle on. I've had risk on both sides in this product the whole year, and it's gone up and to the right this year. But I've just been shifting it. So like if IBIT goes up and tests my call side, instead of just rolling the put up, I'm rolling both the put and the call up.
Yeah.
So that's something you could do if you're fearful of upside risk, but you want to have a strangle on to hedge your downside. You could do something like that, where you can just roll the whole thing up and do whatever you can to shift your upside risk to downside risk. That's been a powerful mental thing for me. Amazon. 919, 200 short, call 225, 200 short put, 225 short call. Also have the Jan 2026 195 long call.
Nice.
Plus I own 100 shares.
So it's long, but you test on a call. Roll the call.
Yeah.
It's an easy one. Close out of the put. You close the whole position. You roll out to the 230, 210, 215 if you want to lean a little bit, more neutral here. But yeah, you hit a home run. Or take some of the position off. Close the. If you want to keep the shares, you close the long call and roll the strangle and roll up the put. If you take the long call off and you roll the strangle and you go to something like the 230, 220, you're buying in 7 or 8 points lower because you have it's a covered strangle now because you're long the stock, and you're collecting another $4 or $5 and you're moving your call $3 or $4 out of the money. So you have $8 or $9 more of upside, and then collecting more, $4 or $5 more of extrinsic value. If you rode this, you rode it any time in the last couple months.
Yeah.
Put this one on. So, a nice trade. I wish I had some of that.
Maybe you could. Get long. What are you doing? What are you waiting for?
I know. I have some long delta in the Johnny Trader account. I should get some here, but it's all right. What's the deal in our grains?
Grains, I'm still long corn and soybeans, and I mean they've come back here, so it's looking like, I mean they're down today, but over the past 2 weeks since that WASD, we've gone up. So
yeah, I'm still long wheat. I've got the 560, 595 diagonal spread. Long November, short September. So we'll see. But I could roll from the September to the October cycle since it's in the same Z contract. So I've got that going for me. But definitely need some more rally out of this thing. Yeah, what is this trading for? The 595. Huh. Pick up $150 rolling to October.
Right.
Rally.
yeah, I mean I have a call spread in soybeans. I'm at 60% of profit, so I'll probably take that off or even roll it 31 days out. So I might roll that one to stay long. and then hold it just a little bit longer for this one.
Just a little micro, tiny little bounce.
Just a tiny bounce. We just need that big green Shrek candle.
There you go.
Anything else you got your eye on, futures wise?
Futures wise, I mean, I'm iron condor for oil. I'm long live cattle, long natty gas, long silver, long the corn, long the soybeans. Other than that, I'm not in any futures positions. I'm long Nvidia. I'm gonna hold it through the earnings. I'm not expecting them to drop that Mikey expects, but
that's why there's a market.
Works. Yeah.
What about copper? We had on this morning on Daily Dose. Apparently, copper is going to be, put as one of the precious metals or something like that in the U.S. Despite the tariff situation that we have, it kind of contradicting in my mind. So I'm not sure how to position this. But do you have any thoughts on copper? I know we've had this insane move. I got caught with an iron condor. Thought I was getting cute into the high implied volatility. That's what happens in things like this. But maybe we're kind of near the lower end of where it's been trading. Is this of any interest to you?
Yeah, I mean, I'm not trading it yet. Every time I've tried to take a trade over the past 2 weeks, the volume at the strikes I want and stuff just isn't there.
Okay.
So I haven't done it. But I mean, we've been making higher lows. It looks like, it's in a decent spot. I think we talked about this a while ago where I said you need a few weeks for price to establish a new range after one of these humongous drops before I really want to get directional. So if I did take a trade, I'd probably do it to the long side right now.
Okay.
But yeah, I'm just not in it yet.
We have a micro copper HG.
Yeah. MHG. I think we traded this.
Yeah, we did, but it's still a big contract.
Yeah, I mean 1/10, but your copper's a huge contract.
Yeah. Yeah.
Oh yeah, we did the call vertical spread. 605 back in the day. Yeah, it could be interesting. Maybe a short put spread.
Take it away.
Damn, these are big.
Yeah.
A 445, 443 is still a $500 spread. 2 100ths is $500. Crazy.
Mm-hmm.
The 445. I think I'll get into this.
Yeah, I mean, the IV rank, you could look at like CPER for a proxy on that. It's like 23.3 right now.
I'm going to get into the 445, 441.
You could look at FCX too.
MLAS, those are all calls, no puts. Same story though. Just roll it out if you want to keep it. You could even roll the 200 out for a couple shekels, but the 195 200 trade is basically done. Your 100 shares against the 225 short call has the most roll credit.
Yeah, if you got them. Okay, so they're calls. So you gotta. So I would. 225. So I'm assuming you want to keep your January calls.
Yeah.
Yeah, you just got to roll up and out, or up and closer at the money. I mean, you got to buy in some of the risk.
Yeah.
If you want to keep it.
Yeah. Yeah, the 200 is preventative.
Yeah, it's
But yeah,
30 points in the money.
Yeah, going forward, if you're trying to keep offense on, you got to roll out and up before it goes deep in the money. Once it goes deep in the money, it's grand in value, and you can't replace it with extrinsic value.
Yeah.
Recommendations and ETFs to trade oil instead of the futures.
I mean, there's USO.
Yeah.
If you're trying to avoid the drag and drift, maybe you just go to the primary companies like Chevron, BP.
Yeah.
I mean,
Exxon.
XLE.
Yeah, XLE. You could go to like miners. You can do the adjacent products, but straight up oil is going to be difficult.
Yeah.
What's your profit target for a crab trade? For the crab trade? Did you put a new crab trade on?
I don't think I did one today. But just generally speaking, I mean, it's one of those where there's a lot of things that go into it, right? You have time decay, you have exposure to volatility, you have that gamma as well. If you're doing them into earnings, it's going to be a lot more volatile from a P&L perspective. If you're doing them like 60-30, further out in time, they're going to be a lot slower. So I don't put a specific percentage on it, but if I'm doing a 10-point wide, like if it's a $10 wide long spread relative to the short spread being $10 wide, and I'm doing it at $5 or $6 or $7, it trading at $10 is probably the best case scenario, right? Like pinning the short strikes, you have a fully in the money long spread, it's going to trade for somewhere around $10. If I'm buying it at 6 or 7, I'm not looking for the best case. I'd probably look for $100 or $200, but there's a lot of subjectivity to it.
Mm-hmm. Last one here from Harsha. KSS Coles. Long 500 shares, cost basis of 9, earnings tomorrow. Want to protect downside, but also the chance that stock could moon a bit. Well, what you could do is you could do a collar, straight up collar for 3 days, like buy the 13, sell the 15.5 for a 10-cent debit.
Yeah.
It'll cost you $50, but this gives you 80 cents. You have 80 cents of risk to the downside, and you have 2 points of upside profit potential. You could also do something like buying the 13 put and then routing the 14, 15.5 call ratio for 60 cents per contract. But this basically doubles your long stock potential from 14 to 15.5.
Mm-hmm.
So there's things you can do here if you're willing to pay a small debit, but you can also do a straight up collar for a small tiny credit if you do the 12.5, 15.5.
Yeah.
But yeah, that's pretty much it.
Very nice.
Yeah. That's it for us. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. We're all long micro natty gas, for better or for worse. But guess what? What's the worst going to happen? It goes to 0?
Yeah, I mean.
You think it's not possible, but we've seen it in oil.
We've seen negative oil. That is true. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. I've got Thomas's NVIDIA earnings preview in the YouTube chat. Also have the cherry picks pinned to the top of the YouTube chat. If you want to sign up for that for free, it's coming out today. But yeah, stay tuned. We got plenty more content. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right. Starting off with this man, Jamal, This Week in Stocks. How are you, my friend?
I'm doing well. I'm doing well for the most part. Like we were talking about off air, it's a little annoying around my house right now. Somebody's a little bit too happy with the Michael Parsons trade. But, we're taking it in stride. We're going to do it.
Hey, nobody told you to marry a woman from Wisconsin.
Hey, you have a Packer? You have a Packer wife?
Yeah.
He's a Packer wife. I know.
Yeah. To be fair, I mean, again, you guys know this. I didn't grow up here. I wasn't always a Bears fan. I grew up in Miami. I was a Dolphins fan. I had love for the 49ers, too. That was the team of the decade when I was growing up, of course. And so we didn't interfere. We didn't intersect, it was never really a thing. until our youngest came along, and he's a Bears fan, and I have to stick up for him because, dude, she would do mean things to him for sure. I mean, she's done things to our kids like, you sure you want to wear that shirt to school today? I don't know if you really want to wear that Bears shirt. I don't think that's a good idea. Like, you can't do that to kids. You can't rob their confidence like that. So I had to step in.
That poor kid, man. When your mom's a Packer fan, that's a tough thing.
I know. It's better than being a Cowboys fan, though. Look, I am happy that the Cowboys lost this situation. He really tried to turn that whole thing around. I mean, he seriously did. Well, this makes us a better team, and we need to stop the run. Stop the run in a pass-heavy league? Come on, Jerry. Come on.
Well, they're going to have 4 first-round draft picks in the next 2 years. That's pretty good.
No, that's a heck of a haul. That's a heck of a 4. I thought it was just 2. What do you mean 4?
They have their own 2.
Oh, yeah. Well,
they're gonna have a lot. Yeah.
It's less than what the Bears gave up to get Khalil Mack. That's one thing. I mean,
plus if I was the Cowboys, I would have done the deal with the Bears because the Bears are gonna have a worse record than the Cowboys to get better draft picks.
True. Yeah. Agreed.
Look at you.
Yeah. No, it's
inside the box, Osnoff.
Yeah. Look at me. Look at you, Pikachu.
It's a good time of year. College football was on last night. I mean, I was watching. We were watching the Badgers, actually, Wisconsin Badgers, who were struggling with Miami of Ohio. That's not good to start.
Did they win?
They won, and a backup quarterback kid came in. I actually think the backup is better. That's who they should go with.
Because Miami, they were 17.5-point favorites.
Yeah, they were. They did not won by 10. It was only it was 17 zip actually. Wow, Vegas always knows, doesn't it? It's close.
17.5, and they won by
17 zip. Yeah, that's pretty good. That's pretty good.
Good market maker. Good market maker.
The last day on college football, Miami Notre Dame is this weekend, guys. Again, I tell you, I grew up in Miami. You know, I'm a Canes fan. Oh, getting back to Miami Notre Dame, yes, sir.
I went to the convicts versus Catholics game back in the, I forgot, was that in the early 90s or whatever? 88. Right. My next door neighbors, first condo I bought in Chicago, my next door neighbors both were 7-year domers. They went undergrad and then they went to law school. Both of them, husband and wife, 7 years. Their whole house was in Notre Dame colors, everything. They led Notre Dame. They dragged me to that game and we tailgated, and it was an unbelievable game.
It's good times, man. It's good times back then. I miss those days. Hopefully we can get this rivalry up again. I have a lot of Notre Dame friends now that might not become friends anymore.
Oh, can't let sports get in the way of a good friendship. Look at your relationship.
Yeah, exactly. No, that's out of necessity. It's different. Let's pull up the slides. Let's talk about the week. It was a little quiet, but there's a lot that happened this week, of course. Let's move to the first slide. S&P 500 is up for the 4th consecutive week. Russell 2000 and Dow Jones are also the same. NASDAQ is a little bit out of whack with them. It's been down 1 week, but these 3 have been up 4 consecutive. We had NVIDIA earnings this week, and basically the biggest thing was how they're in the middle of this U.S. and China situation with tariffs. But AI is not slowing down. That's the one thing that they showed, so it's up in a way there. Definitely a quiet earnings, though, which I feel like a lot of us thought. I don't know if you guys did anything. I didn't do anything in NVIDIA, but I kind of felt like it was going to be an inside movement, and boy, was it ever.
I was bearish, so I only sold calls, so that worked. But the earnings plays in general have been very modest for us, Jamal. I don't think
outlier move. We've avoided them if there's been any because of liquidity. So
I don't think we've had a big loser. I think there was one earlier in the cycle that wasn't good, but I can't remember what it was. But it was bad. Like, it wasn't horrible. And we've had a lot of really small winners, but I don't think we've had a bad loser this cycle, which is good.
It's a good sign. If you can't remember, that means it wasn't a blowout.
Well, it wasn't. It didn't blow out all the winners. Let's put it that way.
Right.
Yeah.
Apple's been in the news. There's rumors that they've held talks about attempting to buy basically some different these AI companies, whether it's Mistral or Perplexity, that they can upgrade with Siri. They're starting to feel like they're getting left behind a little bit here. U.S. economy beats estimates by expanding 3.3% in the second quarter. No tariffs seem to be affecting consumer spending, people who like to buy things, which is good for the economy, of course. And the VIX and VVIX are hovering near their lowest levels of the year, with readings of 14.43 and 92, respectively. Fall is pretty low.
Yeah, and Vol's even low today with the market down. I know it's only down a skosh here, 15, 20 handles on the E-mini S&Ps, but still you would think at all-time low levels or recent low levels that it would catch a little bit of a blip on any down move, which we're not even seeing here today yet.
I think this morning, you're going to see vol a little lower than later today, Tony, because I think going into a 3-day weekend,
we'll get a little bit of vol expansion.
Yeah, I do. I think the vol sellers will walk away this afternoon, and I think you're going to see vol perk up this afternoon, even if whatever the market does. I think vol's going to perk up this afternoon.
Yeah.
There's a pretty. We can move to the next slide, John. There's a pretty big difference between front month and second month VIX, right? Right now, I would say this is not it. It was probably got to be about $2 and change, right? I don't have the platform in front of me, but
I can tell you, right?
What do you
I looked the other day, it was almost $2.20, I think.
Yeah, I think you're right, but hold on, I'll tell you.
Pretty big.
Yeah, it's pretty. You mean the carry?
Yeah.
Yeah, it's pretty big.
Yeah.
Yeah.
This is the forward curve for the Fed funds rate, and when you look at August, September, October, November, December. Basically, we're looking at effective rate of possibly 3.85% for 2-year yields by the end of the year, which is pricing in basically 2 cuts. And a whole full year from now, we're out to 3.17. So rates could be a lot lower within a year's time. We'll see, though.
Yeah, they've been talking about that now for 2 years.
Yeah, I know, but it seemed to gain traction a couple of Fridays ago, right? That big rally. Right.
Listen, this chart in front of you is why we are staying long bonds. Long bonds means you're betting on rates going lower like this.
Mm-hmm.
And this is why we're staying long bonds every single day for the rest of this year until we get a rally. And it so far hasn't gone anywhere, but it's worked.
It is wild how we can have this. Obviously, this is a future looking ahead in this pricing, but bonds have been fairly, steadfast, sitting around 113, 114. You talk about ZB, right?
Yeah, but the funny thing about bonds now, which I think is a little weird, is that even though they haven't gone anywhere, the put prices keep getting a little cheaper, almost like a commodity where they have a floor, So the puts are a little cheap, but I think the best play out there is to be short bond puts. But there's buyers. There's no question. There's put buyers every single day in there.
Mm-hmm. Yeah. Let's move to the next slide. Is this getting a little out of whack? This is XLK to XLF, tech to financials. Of course, you can look at this ratio. You can look back at the .com era when obviously tech started to fall off. You can look at the global financial crisis, and then you can see the pandemic and the AI. Is this starting to trail off? Is this something to trade, or is this a situation where tech is just going to be outpacing financials?
So this is tech over financials. These are all over tech tops, right?
Yeah, I don't know if you call them tops, but they're heights.
I mean, it's a weird relationship. Like I don't really look at tech and financials. Like I don't even know what that pairs trade would look like.
Well, I mean, it might be something like a NASDAQ Russell. I mean, on a very kind of broad-ish base.
Maybe. Mm-hmm. Okay, that's fair.
Yeah.
I mean,
it's not a one-to-one correlation.
Yeah, you sell NASDAQ by Russell is what you're saying.
Yes.
All right, that's fair.
Yeah. Or just in general, do you feel like financials have kind of been left in the dust, or is it just really tech is really outpacing by that much?
I just think tech's outpacing. I think some of these financials are priced stupid as well. I mean, you can't look at like Goldman Sachs and JP Morgan and go, oh my God, those stocks are dirt cheap. I mean, they've gone up 1,000-fold since 2008. I mean, it's their prices are in the stratosphere.
So that's what I just looked at yesterday when I was thinking about this, and you lose sight of like the price, right? Like honestly, if you would ask me yesterday what price I thought Goldman was, I wouldn't have said $700. I kind of lost sight of the fact that wow, this is a $700 stock now.
Sure.
JP Morgan $300.
$700 and they can't even make a market.
Right. Yeah, right.
JP Morgan $300. They can literally not make a market.
Yeah, right.
So I'm not so positive that like I said, they're making money because they've annuitized their customer base and they've annuitized, their models, the fee structures. They're running unchecked right now, but God help them if they ever have to make a market on anything.
And see, you know what? And then this was actually makes me think even more about this whole thing. Actually, I didn't really. So Goldman and JP Morgan are obviously not the ones that are getting left behind when we look at this chart. To me, this chart says there are a lot of names that are techs that are not just NVIDIA and Apple and Microsoft that are pushing this higher. And that's not quite the same in tech.
Yeah, sure. Agreed.
Let's move to the next slide. This is the 10-year yield minus 3 months. So any chance of rate cuts at some point in time will be reflected in here. This thing crossed over in October 22, and everybody was screaming recession at that point in time, right? When it crossed and went negative. And now it's just sitting pretty flat. Surprising that it's actually not a little bit higher giving. This is kind of reflecting some of what we were talking about. Not a whole lot of, even though people are expecting rate cuts, not a whole lot of big change here as of yet.
Agreed. I mean,
you take a look at the long end of the curve there, like, the ZV bond, and, we're sitting at 114, what seems like, forever. And that's reflecting here what you're getting in this relationship between the 10-year and 3 month too. So yeah, it is all quiet. Do you think that means that bonds are going to have a lot more volatility if they do get some sort of rate cut coming than the overall market?
I would think so.
I don't think so, Tony. But I mean, I can tell you that what scares me the most about bonds is I kind of feel like everybody's, because the puts are always bid, I feel like everybody's buying bonds, buying puts. And I feel like, that's their protection. And it's been too easy to be short puts in there. It's been too easy to be long bonds. You haven't taken any, they've taken one swing at you all year. I don't know. Is it possible everybody's wrong?
It wouldn't be the first time.
Be the first time.
I mean, that's a crowded boat.
Sure.
Right now, the world's not sitting around short bonds going, well, I think interest rates are going to go to the moon. Every single person thinks interest rates are going to get cut. And so you've got 99 people on the boat, and I'm one of them, thinking that rates are going to go lower, and you got one person on the other side. Usually that one person's right and 99 other people are wrong. I don't know. It just scares me a little bit.
Similar to the dollar, right? There's all these people who are short. At some point, that's going to change too.
We'll see. Yeah.
Let's move to the last slide. The de minimis exception actually already ended at 12:01 this morning. So it's going to cost more for shippers and customers. Packages that are under $800 will no longer be duty free. There was an additional 25% tariff placed on India on Wednesday, brings the total to 50%. Apple is holding an event on September 9th to announce new products, including the iPhone 17. I've been long Apple heading into this thing. We usually see kind of a buy the rumor, sell the news and that, right? Tesla sales in Europe fell 40% in the month of July. 7th consecutive month of declines happened to coincide with January, right? When people started in office. So looks like you were ahead of the trend, Sosnoff, in getting rid of your Tesla. Seems like nobody in Europe likes it. Maybe you're kind of European. I don't know.
You know what? We saw.
Consider yourself European, Sosnoff? I mean, I know you consider yourself a.
But last week we saw the BYD, a lot of them.
Yes.
Do you know what it stands for, BYD?
BYD, it stands for...
Come on, I told you when we saw one, it was on the car.
Something, build your dreams.
That is correct, build your dreams, just like Jamal did with all these slides today. He built his dream.
Yeah, exactly. Wait, it really does? Isn't it a Chinese company? It stands for Build Your Dreams?
Yeah, I mean, that's what was on the car. It was, yeah,
that's what BYD stands for, build your dreams.
No, it doesn't. You guys made
build your dream under a communist regime. Nothing says oxymoron like that.
Research August 25th, the market measure, how volatility impacts options skew. Check that out. That's all I got.
Apple is one of the buckers today. It's up a couple of pennies, not that much, but it is a bucker just the same. And Tesla is also one of the buckers, trading 346 on the bid. It closed at 345 and change, so it's up about 30, 40, 50 cents. So you named two of the buckers in the market today, with the market being a little bit weaker. The Russell, which we talked about the Russell NASDAQ just a moment ago. Russell just turned green for a second. NASDAQ still down over 100, 114. Closer to its lows than its highs for sure. Right now, even the S&P's hanging out at 6,500. I'm going to ask you both a quick question here. I mean, expected move in the E-mini S&Ps for the day is closer to 30-ish handles. Let's just call it 34 handles. What's the odds we close this weekend at right where we are, 6,500?
Pretty damn good. 34 handles seems huge to me.
It does seem huge. I agree with you. Yeah.
I feel like there's been a lot of days where we start sort of like this, especially this week, where we're kind of down, and then before you know it, we end the day, a little bit higher, and somehow sit around the expected move. So I don't know. I would say we're gonna end up 6,500. I don't see how we can't. But
it's that roundish number that everybody's looking at. All right, everybody, let's take a quick 90-second break and come back, which only means one thing. We're going to be up or down 50 handles today. We'll take a quick 90-second break.
I was going to say it's almost a lock. 64.75 lock. Put it on the board.
We'll take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell. That's right, Sadnov. Good job out of you. You got it right again. I'm back in 90 seconds. Thanks, Jamal. Tomas, back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with Fast Market. Fast Market.
That music gets you going every time, doesn't it?
It does. It gets the juices flowing, Sadnov. I'm not gonna lie.
I don't like them today.
You don't like them any day.
I don't like them today. I'll leave it there. I don't like them.
Okie dokie.
NVIDIA, you couldn't just open here yesterday, huh? You had to rally back.
Well, you've got some things in your camp, Sadnov. You've got bonds week down 17 ticks. You got Bitcoin also down 2,000 now to 110 and change. What you don't have in your camp is you've got volatility down 17 cents from a /VX. You got the Russell trying to hold, and you really have no volume anywhere on the E-mini S&Ps, NASDAQ. I mean, we've been in a very tight range here, 10 points high to low, maybe 5 points tradable range here in the E-mini S&Ps. And you got a long weekend where, everybody's in the Hamptons.
I'm not going to be in the Hamptons, okay? The Midwestern Hamptons.
Okie dokie.
All right, let's do it. Let's see what we got.
Ready?
Bam, bam, bam.
Bam, bam, bam.
All right. All right, John, let's see what we got. NDX 4-day call. Great. This is Grace from Seattle. Gracie, what are you doing here? 4-day call broken wing butterfly short at the expected move, 1020 wide. Does this even trade?
Well, NDX is going to trade, 1-to-1
Sure.
with you. So
NDX down.
To answer your question, as a 40-year veteran of this game, would be indubitably yes, they trade.
All right, hold on. Short at the expected move. The expected move is, let's say, $260. I got to figure this out.
No. Expected move is around 100 and change on NDX.
No, 4-day.
Oh, sorry, 4 days. I digress. You are correct. 260 points-ish.
Let's say, where are we right now? We're
550.
550. So we got to get to 820, right?
on the upside.
Okay, 820. Go. What's the next one? Then you got $20, $20 wide. So you got 820.
And under 2,300 or so.
Hold on, 820. You're gonna buy the 820s.
Oh, you want to do a broken wing butterfly? Sorry.
That's what she writes here, right? Broken wing butterfly.
Yeah.
820, 830, 850.
Depends on how wide you want to get. Yep.
She says 10 or 20 wide.
Which is a very small position in NDX, which is a very big product.
It's a 90-cent credit.
That is correct.
Well, I don't know what the credit is. 80 cents, 90 cents.
Good luck.
Would you say good luck?
Yeah.
I know. I need an uptick here.
Right, because you have a synthetic short call spread here, and you've got a downtick. Oh, look at
All right, 85 cents. I gave up a nickel, Grace.
I hope you're happy with his
That's the first time anybody's had that trade for us. So let's go next slide.
And you did it on a down opening. I mean, you are amazing.
I don't usually do that, but whatever. Let's go to the next slide.
I hear you.
Oh my God, you guys are killing me today. Jeff from Miami. Okay, he wants to do a 0 DT iron condor, slightly larger 30 delta. Well, we did the study on this yesterday, Jeff, and your best bet was the 20 delta.
That is correct.
We just did this study yesterday afternoon. 0 day. Let's just see really quickly. 20 delta. Well, we'll go 23 delta on the puts. Oh. Well, these are hard. The deltas don't really line up. 26 deltas on the calls. No, we got to go. Okay. 64.55. We're going to go $20 wide. 56, 55.20, 55.35. I'm bearish today. Me no like this market.
You're a big bear. Rrr, look at you. So much machismo.
Me no like this market today.
Have you liked the market any day in the last 2 months?
Don't try to don't try to make sense of this.
Don't be rational here. I got it.
Don't try to be your,
Don't try to be the wet blanket that you normally are.
Yeah. Don't ruin it for everybody else.
Got it.
All right, Jeff, I'm trying to do this.
Try as you like, Sosnov. Try as you like. Even the S&P down 31, Sosnov. Close all watertight doors.
Nice little downtick there. All right, we got it on, Jeff. We'll see what happens. Let's go to the next slide. Like I said, I don't like this, but I have a short delta, so I'm okay. What do you got next? MBD, Brad from Fairhope, Alabama.
Huh?
First time hearing from Brad from Fairhope. No idea where that is. DB, and I don't think it's very good. It's up again.
You have a position in here?
Jesus. Insane. I'm betting it'll trade in a wide range after this move, selling the 270, 380. That's better than I got on. Brad, I got the 280, 360. Let's see. What are you doing?
He wins.
$270 done. 380. 380, 270. I mean, yeah, sure. It's going to trade. These are hard to figure out what price. So I got to do a little price discovery here. You got to give up. What's the stock? Oh, the stock just dropped $3. Wow, the stock moves. It was just up $3, right?
That's correct.
It moved 70 cents a tick. 10.44. I think I gave up 6 cents. Let's go to the next slide.
Next slide we go.
Dow Chemical, Tyler from Missoula, Montana. Missoula. Let's see what we got here. 27 and a half, 22 and a half, 27 and a half strangle. I mean, can I make money on this? Is it even possible? It trades a little bit. I'm going to give up a penny, see what happens. 147. Oh, you Dow Chemical. 147.
Filled 147.
All right, it's something. Let's go to the next slide. I'm neutral to slightly bullish on CCL. What do you guys think about a OC 33 straddle? Tony's favorite cruise line. OC 33. I'd rather do the 34, 31. Give it a little bit of width.
Oh, would you?
267. Dead smack in the center. Thanks, Austin from Boise. Austin from Boise. Cool. Next. Ben W. from New York City, New York. Hi, Ben. What do you got here? NVIDIA's IVR dropped to 1%. Perfect for poor man's covered call setup? Well, that's if you're bullish in NVIDIA. We're not. Perfect. I don't think it's perfect for poor man's covered call. I think it's perfect. What do you want to do? Ben, I'm cool with that. But I'm not interested in getting long NVIDIA here. Nope. No. Poor man's covered call means is using, well, this isn't really a poor man's covered call. This is like a, well, how many positions on in there? Stock's down $5 today. So if we were going to do this, let's just say we're going to buy, GN's a little long. Let's buy Dees. Okay. So if we go out and buy the Dees 190s, they're trading for about $990, let's say. These are really tight markets.
That is true.
And we're going to sell not SEP, but ACK. We'll sell the ACK, but instead of selling the ACK 190s, let's sell the ACK 185s. Now that's a diagonal. Now that's a knife.
Now that's a spicy meatball. Have you ever had a spicy meatball?
Yes.
You have?
I think so.
You think so. Got it.
Unless a spicy meatball means something that I don't know what it means.
I don't know what it means either.
Is that a code name for something?
No. Not being one of those guys. No, absolutely not.
Okay. Let's go to the next slide. I mean, I didn't know. Maybe there's means something in today. I don't know. Mike from Sacramento. UPS is lowest since 2013. UPS. Man, we have not traded this Mike in like forever.
Mm-hmm.
I wish it was down today. It is a pig.
PIG pig.
What do you got in here, Mike? Doesn't trade that much. Buying the ACK. 85.90 call spread, right?
Yes.
Wants to buy the 85s, sell the 90s.
Mm-hmm.
278.
Mm-hmm.
I don't even like this trade, but usually the trades I like the least
Work out the best.
Yeah. Because like this is something I would never do.
Uh-huh.
So Mike, I'll try it, but I haven't gotten fills yet. It's not that liquid.
Okay. Okay.
We're gonna give it one more little oomph. Nothing. 283.
283 it is.
Let's go to the next slide.
Bitcoin under 110, 1098.
Or monthlies. Jade Lizard. Sell the 180 put and the call spread. 0 upside risk. Well, you don't need to have any upside risk in Lulu because it's probably going to 0. I have on in there, I'm short the 182.5 puts and the 230 calls. Well, that's basically what he wants to do.
Yeah, pretty much.
So he wants to sell, let's see. I already got this position on essentially, but let's see. He wants to sell the SEP 180 put. Okay.
Mm-hmm.
And the 225, 230 call spread.
Mm-hmm.
For 567, looks like it's 580-ish.
That's correct.
No. 75, maybe. It's hard to tell in Lulu because it's kind of a crappy.
It is.
577. A little bit better than you had on here. A little bit.
577 it is.
577 it is. All right. Let's go to the next one. Jorge from Los Angeles. Implied volatility is a bit higher than average. How about a 20 Delta Strong to collect some premium? All right. I never thought I'd have to say this, but Bat, stay off those stay off those Bronny James sites, Bat. Love you guys.
Everybody's a comedian. Everybody's a comedian.
He's so easy. They got him easy on that one. He's a point and clicker.
They did get me pretty easy.
They got you. They got you.
They did. I'll give him that.
What does he want to do here? 20 Delta Strangle and MU. MU is trading for 120. We're going to go to October. Okay. 20 Deltas, 105 hoodies, and we'll go to the 140 calls. It's a little different. Yeah, it's a little. I'm centering by price, not by.
I got you.
By price. They're popping vol today. We should get a decent.
A little bit up 15 cents now. So I don't know if even the S&P is at the expected move around $37.
Like I said, I think it's going to be way outside the expected. 564. Jorge. We'll take it, dude. Let's go next slide. Oh, Abhishek from San Mateo, California. Pretty neutral here in GDX. So are we. GDX, trying to grind out a winner in there. We're currently in the 56.67 in October. Let's see, 56.67. We'll roll up our 58 puts, 67 calls. It's price equal, delta equal. It's perfect. 27 deltas. Price is exactly the same. No skew. Mid price is 234. Filled at mid price.
Beautiful.
Right, we got it. That gives us. There we go.
That gives us. There we go.
That gives us a there we go. Let's take a quick look. SPX, just let's look at our SPX 0 day because they moved around. Call side is a little low here. So we're gonna, remember we said we adjust?
This is correct.
So we're gonna roll our call side down,
We adapt and adjust.
We adapt. We roll our call side down a little bit, neutralize the deltas, give ourselves a little hope, and
a hope, a wing, and a prayer.
NDX. We did a broken wing butterfly. We don't trade a lot of NDX, so that's a kind of a rare one for us. But I think Dow, we just strangled. It's a cheapie, kind of a long shot. CL, we did almost a straddle, like one strike off a straddle. We did not do a poor man's cover call. Actually, what we did was a diagonal spread. We did a diagonal in NVIDIA. We bought a call spread in UPS. We basically bought a Jade Lizard in Lulu. In MU, no, we traded MU, John.
You did 564 credit.
We sold the 105, 140 strangle in MU. GDX, we sold a strangle. Now I needed to sell a lot of premium today, so this was like a good start. And it's a good day to sell premium because the market's kind of weak.
Right.
But there was one trade I didn't make, wasn't there? No. We did them all.
Very good, Sadnoff. Look at you. You the man.
Look at you, Pikachu. Gold just rallied $16. Not that it matters.
No, not that it matters.
Not that it matters. And looking at some of the earnings stocks for last night, Bob was up 11. That stock is a beast. And Marvell is rallied, and I rolled calls down. So we're pretty much done in Marvell now.
Very good, my friend. Good job out of you, right?
I don't know. I'll let you know in a couple weeks.
Well, time will tell there too, my friend. But you know what we got to do right now, Saz? Do you know what we got to do right now, Saz?
Right?
Yes. We need to take a quick little break. You know why? We got a market measures coming up next. And then after the market measures sound off, it's Friday. We're going to go to your phone call. So get your questions ready. We'll be back in 90 seconds. We got more Tasty Live immediately following these messages. Back in 90 seconds with Tasty Live. Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With what's coming up next, Sadnoff, a market measure. But first, let's take a quick look at the market. Sadnoff, what's happening? Even the S&P is down 50, as foretold by my great one.
I just want to bring up a couple things. As foretold by me, not you.
You, by my great one. Your great one. That's you. My great one. I was giving you all of the props. Volatility.
Okay, hold on a second.
37.
There was something weird this morning when you said that the expected move was like
$35. It was a large.
It didn't make any sense to me because on a Friday long weekend, it didn't make any sense. So that's why I was so bearish. Because that expected move just didn't make sense. And sometimes, you don't like when you're betting on a football game, you're like, why is this team a 7-point favorite? It should be even. And then next thing you know, they win by 30. Same thing. Same thing. So that's kind of that's what scared me this morning.
Got it. All right. You're getting all puffy chested. I can see that.
No, not at all.
With everything lower, stating the obvious. Okay. We'll see.
I'm a master of the obvious. In case you know that.
Very good, my friend. Don't worry about it, though. We've got a market measure.
I'm not worrying about it. I'm looking for actually.
So volatility up 2.5% now, almost 2.5%, 40 cents. You're not going to get any contraction of volatility these days, right? For the weekend. Like everybody always asks, like, when does volatility come out? It's not coming out right now.
Not a chance in hell. I told you I thought it would be cheap this morning and then get more expensive.
We both thought that. I did not think it was going to get to here. I did not think even the S&Ps were going to be down over 50 handles.
Okay, it's fair. Again, every day is a learning experience for you. And I love to see watching your growth over the past 15 years. It's just amazing.
Okay, I am going to put that on the list with, I worked very hard when I was younger, so I can have somebody like you check my trades. I'm going to put that up there with both of them. This is one of the, you're really shooting nuggets at me these days. I mean, we're down half a percentage point on the E-mini S&Ps, well, a little bit more on the E-mini S&Ps, Russell and the Dow. Let's just, let's at all-time highs. Let's just relax here, chemo.
We had a Dell, we had a Dell position on.
That's on you, Boo. You told me no.
No, it's a good one. We did a put ratio
so
spread.
Money goes to money. Look at you.
I forgot about this. We did a put ratio spread in there. I didn't think it was going to get near the at the money. We did the 123, 120. Remember 2 days ago?
I do.
Did it 1 by 2 and it actually went right to the perfect.
Dell's right there at 120, so you're able to put it on for a credit, take it off for a credit. That's a home run. That's something you never see Sadnov do.
Winner, chicken dinner. Forgot about Dell. Did we do anything else that I forgot about? I don't think so.
That's your best trading when you forget about it.
I know. I'm a good forget about it trader.
You are a good forget about it trader.
All right, let's do it. Quick little reminder, just a couple of, John, before you get to here, just a couple little things. Number one, we are going to do I just keep mentioning this just so people realize, instead of the Sunday night show, now it's going to get interesting on Sunday night because there's something going on today. But instead of the Sunday night show, we're going to do the show on Monday night. Monday's a holiday. We're going to do first call on Monday night. So Monday night, 4:55, myself, Chris, Ilya, and we'll see who else is going to be on. I'm not sure if we have any special guests. Also, on a week from today, 1 week from today, right now, the Bat and I will be performing.
Yes, we will be performing.
We'll be performing, and we'll be doing some incredible dance routines at the Regency Ballroom. There you go, Bat. You, me, ballroom dancing. It only makes sense. Come out and see the Bat and I dance away at the Regency Ballroom in San Francisco next Friday. It's September 5th. We will be, I mean, the show doesn't start until, let's see, what time is it right now here? It's 9:12, so it's only 7:12. Well, I mean, you can start dancing at 7.
I can go. I'm like the Energizer Bunny. I can go all day.
Yeah. So we'll be at the Regency Ballroom exactly 1 week from today, right now. Doors will open at 8 o'clock in the morning. The show will start at 9. We're really looking forward to it. We should have a great crowd. We should have a really fun time. We're coming locked and loaded with lots of cash.
Yep, we will.
We are ready to do a live trading show in San Francisco. We haven't been to San Francisco in a couple of years. I feel like it. And I think the last time we were out there, we were in Palo Alto. And that was a cool place too. So we're going to be at the Regency Ballroom, San Francisco, next Friday. Come on out. Can't wait to see everybody. Doors open at 8. Show starts at 9. Tastylive.com/events. Tastylive.com/events. 2 weeks after that, we'll be doing the same kind of show. We do different trades each time in New York City. So that'll be on the 19th. So it'll be at Webster Hall on the 19th. You sign up at the same spot. So if you're in New York, tastylive.com/events. If you're in San Francisco, tastylive.com/events. Please don't sign up if you cannot make it, because we will be going to a wait list next week for San Francisco, and we want to make sure everybody that can make it gets a spot.
Sure.
It's all free.
Always free. Yes.
Always free. We got some giveaways from the CME, giveaways from the CBO, giveaways from us, and it's just a live trading show. There's nothing else to it. It's not like we're not teaching a lot of lessons. We're not doing anything. We're just trading. You got to kind of.
But you learn by doing and watching and seeing it. Little nuggets hit people in different ways. So
we're going to put on basically $100,000 portfolio, not notional. That's actual buying power. Last show we did in Chicago, we used $120,000 of buying power. So we put on a lot of positions. The last show we did before that, I think we were in Milan. I'm not exactly. I got to check, but. We used 100, we used about 120,000 each show. So it's real positions. All right, that's all. Let's ready, John?
I'm ready.
It's 9:14. Spoo's down 52 without a bounce all day.
True.
Yep, no bounces. The skinny on future scalping. The skinny on future scalping. Let's go to the first slide. Let's have some fun with this. So options tend to work well for longer term trading. I wouldn't call it long-term trading, longer terms, because they offer flexibility, limited risk, and time for the strategies to develop. Traders can benefit from changing market conditions, use options to hedge, or guard around broader trends without needing constant adjustments. The other side to it is you can just be very strategic. Futures are often preferred for short-term scalping due to their high liquidity and leverage. We're talking about the actual futures contracts now. We're not talking about futures options. Options and listed options, we treat those the same way. But futures themselves are just a very efficient product because the amount of capital required to carry a reasonable amount of leverage is pretty low. High liquidity, if you stick to the major futures, high liquidity, leverage, and low transaction costs. Tony and I on the show never talk about futures that are illiquid. We've been doing the show for 15 years, and you've never heard us talk about a single future that's not liquid. We don't even list them on the platform. So we only trade the most liquid, probably the top 10 to 15 most liquid futures and futures options. We don't touch anything else.
That's correct. We always are looking to do that.
Liquidity is the key to us. We'll never talk to you about a futures option that's illiquid. We'll never talk to you about a future itself that's illiquid.
Right.
Overnight, things can get a little funky, but during the day, it's going to be the most liquid underlyings. Let's go to the next slide. But where do I start is the question from our research team. All futures contracts have different notional sizes, share equivalents, tick sizes, tick values that you should be aware of. I've done multiple live shows on futures. I've done webinars on futures. We put together decks on futures. The main difference is futures are not standardized. So it's what we call nuanced know-how is required. And there's a ton of stuff on Tasty, literally a ton of stuff. For more information, see the Tasty blog from August 21st. You can check that out of 2024, where you can download a futures cheat sheet, all you need to know, which basically we line everything up for you. We'll reprint it again too.
Of course.
And for futures, you'll notice that on our watch list, and you'll see this at the live show, all we watch is futures. I mean, what's in front of us all the time in the futures markets. The futures markets drive the stock market. I mean, we obviously trade 80% more stocks and indexes, but we watch futures. Just for the leverage, just for the ranges.
Yep.
Okay. So we're going to look at some of the micros and some of the minis. Years ago, they didn't have micro futures. Now they do. And so, they're basically 1/10 the size. And it makes it a lot easier to trade futures, especially for people that are nervous about it. But also, we trade a ton of micros. We like them.
Sure.
Let's go next slide. So here's a sample of the cheat sheet that we put out. Now, we did this because the cool thing about this, we put the major futures up here. And you can see we have a description. These are all the index futures, essentially. And we have the notional equivalent in the middle column, and then we have the ETF equivalent. So on Tasty, what we do is we beta weight everything to the S&P SPY, and we also show everything in equivalent ETF deltas. We're the only platform in the world that does this. And you're thinking, well, why do you do this? We do this to normalize everything on the platform. Every other platform that's ever been built shows the original deltas for each underlying. But if you don't know that one product's bigger than the other notionally, it's impossible to line up those deltas.
Right.
We do it all for you. And again, I can't stress this enough. We're the only platform in the world that does this. And so it makes following a big position or following all your different positions so much easier and so much cleaner. That's why we get emails all the time from people at other firms. They're like, how do I follow this stuff? Because it doesn't make any sense. Of course, it doesn't make any sense because they really don't, whoever developed most of these platforms doesn't understand the ETF equivalent. I know it's not rocket science, but it's just hard to build into software.
Correct.
We also have, in some cases, the vol symbol equivalent. And then, of course, there's the tick size and the tick value. So everything is in front of you. You notice it's not standardized. When you trade IBM or you trade NVIDIA, the tick size, everything's standardized.
Right.
When you trade ES and NQ, nothing's standardized. But they're all the same products. Okay.
Yep.
Let's go next slide. We call it nuanced know-how. So we're going to be using the micro futures in the case. This is an example of just using the micro futures watch list, which includes everything. We have all these different watch lists in the drop-down menu on Tasty. So you don't have to know all the symbols. You can just go to the drop-down menu in any one of the columns, and you can just take a look, and we have micro futures, futures. You can see everything. It's listed there. So you don't have to search for symbols or anything like that.
Mm-hmm.
Tony can show you after this segment's done. We can show you how easy it is to find everything.
Sure.
Let's go to the next slide. So these are these are just, we put these up here so you can kind of see these are the largest intraday ranges over the past year. And just to give you kind of like an idea, I guess, you know, when you think about kind of, you want some context around risk, I think that's what the purpose of this.
Mm-hmm.
So, you know, just to give you an idea, that's all this is, just to give you some context. The VIX having the most, the micro ether, you know, the natural gas, these are the riskiest ones. The micro Bitcoin, crude. Then you start getting down to the indexes like the Russell, NASDAQ, S&Ps. You know, I mean, it's a little less. That's all.
Mm-hmm.
Let's go next slide. And these are the 10 largest intraday ranges over the past, you know, over the past month. That maybe once all year.
Mm-hmm.
So micro ether, mini VIX futures, we rarely trade those. You know, natural gas, we've always told you it's dangerous, but then micro Bitcoin, you know, so the bigger indexes that we trade all the time, the moves are much more manageable for context purposes. Let's go to the last slide. So there's some takeaways here. Options are ideal for longer term trading due to their flexibility. And the same goes for listed options and listed futures options, okay? And the ability to adapt to changing market conditions without constant adjustments. But even so, options are very strategic. Futures suit short-term scalping because they're high liquidity, leverage, low cost, fast execution. Now, the cool thing about Tasty, again, is that we standardize and normalize futures by showing on the platform the ETF equivalent. So you don't have to do any of that work yourself. Also, from the exact same interface, we show and let you trade everything. And one more thing, we just launched a brand new ladder on the platform, which has been getting really good reviews from our users. It's the newest ladder in the industry. It's fast as hell. It's simple to use. It's clean, simple to use, and it's on the platform. And we can show you where that is on the drop-down menu. When we finish this segment, Tony can show you where it is. But it's basically a futures ladder.
Mm-hmm. Mm-hmm.
Okay. And then before trading futures and futures options, it's important to understand the contract specific. What's really important is some of the nuanced know-how of the futures, like notional sizes, tick sizes, but you'll figure that out pretty quickly because as soon as you start trading it, you figure it out. The more important thing to know is stay away from some of the exotic ones like micro ether. It's really hard to make money in there. It's not that liquid, and it's the one that has the biggest moves. Micro Bitcoin, micro ether, you know, micro natural gas. Those aren't really scalping vehicles. Okay, just to be fair. You want to scalp Bitcoin, use IBIT or BITO. You want to scalp ETH, use ETHA or use the cash Bitcoin, Ether. But if you want to trade anything else, futures are great.
Agreed. Hey, Tom, I do got to do one public service announcement here. 855-238-2789 or 855-BE-TASTY. That's the phone number to call because phone lines are open. Give us a buzz. We'd love to hear from you. I got 4 or 5 lines open right now, right this minute. Even the S&Ps, Sadnov, they're down 48. They're off of their lows by about only 8 handles. NASDAQ down 260 and change. That's your the weakest of the group. Russell down only 12. I say only 12 because it's half a percentage point. NASDAQ's down 1.25 percentage points. Dow down 226 and volatility up 35 cents off of its highs by about 20 cents, well off of its lows, which it made overnight last night. Bonds down 18. Sadnov, how you feel about that?
They haven't really moved. They're basically a 1-tick range for the last hour. I don't have any strong feeling on it.
Bitcoin down 3,500. That's a big move. 3% on Bitcoin. Ethereum's got itself a 3.5% move, also down $159. Gold caught itself a bid. It's rallied to its highs of 3,500 today. It's up $24. Gold back near its highs. Gold IV rank of 20, starting to percolate a little bit on the up move. What do you think about gold, Sosnov?
I think we don't have a gold position on because the IV and IVR was really low in there. I don't know what it is today, but I'm staying away from GC. I don't like silver at 40 and I don't like gold at 3,500. I think those are rich but I think there's better trades.
Taking a look at my watch list, those Buckers, Affirm still up $13, trading near, well, not trading near its highs. It got all the way up to 100. It's trading near its lows, up $13 or $14, trading 93 after trading 100. BABA up 13. It is trading near its highs. UNH up $1.60. And then you really got gold and volatility products. Not too much else going on for the stocks that we trade. Apple was hanging in there. It's only down, still is, only down 5 cents, but it was green.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
beat the opening bell. Get trade ideas and market insights before the open. Market strategist Tom Preston, every weekday. Sign up at tastylive.com/newsletters.
Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Friday edition of what it is that we are trying to do. Welcome to the apocalyptic version edition of what it is that we are trying to do. It looks like they finally came to get us here today with the market down huge. So thank you guys so much for being a part of what it is that we are doing, because it is only because of you all that we can do what we do. So if you are watching over on the Tastylive network, I would actually bounce on over to YouTube, because you can join the conversation and join the discussion in real time and communicate with your brethren who are also watching the show. Man, you can commiserate if you're a bull, you can celebrate if you're a bear, but it is indeed going to be a good time had by most. So let's go ahead. Let's pop into the market here. Let me see if we can do this really quick. So Josh, we should be good to go now on the market. So yeah, man, I mean, if I bring up my my drawing tools here, it's not good, guys. This is just not this is not good. The S&P is down 50 on the day. You've got the risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, down 320. You got the boomers down 125. You've got the Russell 2000 down what appears to be about 14 or 15. I'm not really sure, because I went to the eye doctor this morning. So quick little tangent. We're going to shoot from strength this morning. We're going tangent within 30 seconds. So I've been having a hard time seeing, like, the small numbers on the screen in front of me. It's for the first time in my life, right? I mean, Father Time is undefeated. And I'm like, oh, it's time. Right? So I went to the eye doctor this morning, and I'm a contact wearer. So she's like, oh yeah, there's all kinds of things we can do. We can do multifocals, we can do monovision, we can do blah, 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 blah. And she's like, and I love my eye doctor. She's amazing. She's like, let's start you off with some monovision. Have you guys heard of this? This is the craziest thing ever. And I'm doing it right now. Let me tell you something. I can't see a lick. She said, she's like, here's what we're going to do. We're going to change the prescription of your eyes so that one eye is going to look into the distance and the other eye is going to look right in front of you. And I was like, are you serious? And she's like, yes. She's like, I know it sounds crazy. I know it sounds weird, but in a couple of days, your brain will just adjust and it will know which eye to use. And I'm like, so what's the backup plan? I just walk around with like an eye patch? Like, what if my brain can't figure out which eye to use? She's like, it'll figure it out. So I'll tell you what, we're 3 hours in. My brain has no idea what eye to use. So I will keep you guys updated. But let me know if any of you guys out there, my fellow contact wearing brethren, let me know. Are you guys rocking monovision? Anybody got some multifocals out there? Like, help a brother out and let me know what you guys are rocking out there in your neck of the woods. But man, market's not looking good. Not that I can see it, but you've got, bonds down 17 ticks. You got notes down a couple ticks. It looks like oil looks like it's red. I don't know. Gold is up so much. I can even see that. Look at the shifties, man. First they get engaged a few days ago, and now look at gold up 37 points. And let's take a quick little gander at my Hunt brothers. Silver is partying today like it's 1999. So silver is up 82 cents today. It was actually up significantly more just a little while ago, another 25 or 30 cents or so. And so the silver bros are celebrating. The gold bros are celebrating. The Bitcoin bros are not quite celebrating. The old digital gold is not exactly doing what digital gold is supposed to do. But nevertheless, Bitcoin down a couple thousand today. Of course, we've got volatility. It's going to be up on a day like today. You've got volatility futures up. What appears to be about 30 cents, although I'm not exactly sure. And then you go down to the spot volatility. You go to the VIX. Is that the VIX? Or is that Wix? Is this a website commercial? I don't know, but whatever that is, it's up $1.22. And so that's looking pretty good too. So it could be Wix, it could be the VIX. I have no idea. And so, all right, let's go in here though. So we've got actually, a day like today helping out the portfolio a little bit. Like you can see a lot of green on the screen. So I'll get to that in a second. But I see you guys in the chat and I don't really know who's in there, but it looks like Ash Finn's in there. It looks like Margin Walker came to play. Man, Stefan's in the house. Man, I see Sam L is in the house. I see, is that Gasman? That's Gasman in the house. Gasman talking about some wild monovision. I know, dude. It's the craziest thing ever. Like, I was like, did she just make this up this morning? Like, did she see me on the schedule? She's like, I don't really know what to tell this guy. I'm going to go with the one eye does one thing and the other eye does the other thing. Little song and dance and so. But I love her, man. She's great. And so, but Finn West, Adam Armfield, Joe, Man, Rancher's in the house. Miko's in the house, man. Look at you guys. I appreciate you guys. Appreciate you guys so much. All right. So let's see here. We've actually got a couple of things to talk about. So number one, man, take a look at Best Buy. Guys, we're going to do it. We are going to cheat death here today on the program. So Best Buy was actually up more earlier. It was up over 74 just earlier today. But we're going to be able to get out of this vertical spread basically unscathed. We're going to lose 20, 25 cents. For the mental records, for the official scorekeeping, this is indeed going to be a scratch. And so we're going to be basically right back to where we started in our battle against the P&L Open Bros just a couple of days ago. And so P&L Open not looking too amazing. But today, as we grab a different color, let's grab magenta, or what I think could be magenta. Obviously, today is helping out a little bit with Best Buy up. A very obvious flight to quality. Like when everything is crashing down around you, like where do you go for quality? Like where do you go for all of your American consumer, global consumer needs as a person of 2025? You go to Best Buy. You don't get it on Amazon. Like you're not ordering it on Temu. Like you're going to brick and mortar physical shop. Let me go walk the aisles. And so Best Buy today up $1.02. And yeah, it just makes sense. It makes sense in a very not really kind of way. So let's go ahead and let's close out of this vertical spread. We'll leave our shares on, of course, because we're not done with the P&L Open Bros just yet. Yeah, let's go for $1.78 or whatever looks like $1.78. It might not even be $1.78. It could be $2.78. I don't know. Let's go in here and let's see. Let's go down a few ticks. All right, so no takers at $1.75. Oh, by the way, don't forget housekeeping next week. So next week, this is going to be super fun. Next week on Tuesday, Thursday, and Friday, man, we are going to shoot from strength. I am going to begin the show, right? We are going to just shoot right out of the hole, man. We're going to begin the show with some educational content. We're going to talk about extrinsic value for 3 straight days. It's going to be more than you ever wanted to know about extrinsic value. We are going to leave no stone unturned. And by no stone unturned, I mean we're going to go over 3 different stones. Tuesday, Thursday, and Friday. Man, it's going to be super fun. I cannot wait just to kind of mix it up a little bit. But let's go in here. Man, I'm just looking at this. See if we can get $1.72 maybe for Best Buy. Man, I can't get filled. Where's my liquidity, bros? Are you guys hanging out with the P&L Open Bros? Man, I cannot get out of this vertical spread. I'm just giving away, not even profits. I'm just maximizing. Okay, so we got out for $1.66. So we ended up losing about 30 cents on the trade. So it's been worse. In fact, it actually is worse right now in Best Buy. And so, all right, so that's Best Buy. But man, look at the rest of what's going on. This is helping us quite a bit. You know, this big down move, obviously we still have our shares in Chipotle. We don't need to do a Chipotle check anymore because we failed the check yesterday. And so we're still going to give it, you know, obviously the verbal cameo that it deserves. But yeah, we've got our long shares in Chipotle. And then that's going to be that. But man, look at the rest of these things happening in the portfolio. Like IWM, at least I think that's IWM. I'm not really sure. I just see green. All I'm doing is I'm looking in this general area, and I'm like, I see a lot of green, which is that's very foreign for me. I'm not used to that. I'm used to seeing, you know, a little bit of red or a lot of bit of red. It's usually going to be some hue, like some shade of red, right? To see green on the screen, it's like, wow, this is so surprising. Even the monovision can pick that up, man. That's some good stuff. And so, look at NVIDIA though, man. We missed it by a day. Oh man, they got us. We missed it by a day, man. If we had just, if we had held on to that butterfly yesterday. Oh, it would have been absolutely beautiful. And so I'm looking at that, and, you know, we ended up, let me think here. What did we do? We got a little bit. Yeah, we got $1. Oh, wait a minute. Oh, my. This is why. Oh, man, the monovision's got me still thrown off. Guys, look at the GTC. Look at that. And I told you guys I would not push it out when it happened because I'm not used to doing GTCs. But man, we got filled on the open for $3. I was like, did we take our butterfly off yesterday? I don't remember taking our butterfly off yesterday. I mean, obviously the short call spread is working out today. Like we're going to take it off for profit, whatever. But what happened to the butterfly? Man, it got filled this morning for $3.05. And so, man, quick little shout out to the GTC order. That really helped us out this morning. Now, excuse me, of course, if we didn't have the GTC order and we still had the butterfly, we'd be in a much better spot now, which, you know, Does this mean it's the end of GTC orders for us? Probably, but not necessarily does that need to be the case for you. Like, I still think, like, if you don't have a show that you're doing where you're trying to do all your live trading in kind of a concentrated window, then utilize the GTC order and all of its functionality. Like, I think it can be really, really helpful in that regard. And so for NVIDIA, yeah, that's some good stuff. In fact, here, I'm going to do it with you guys. I'm going to right click. I'm going to push that to the follow feed. That's what we're able to do as traders on the network. And so it's not going to be on the follow feed yet because I have to go in and like type up some comments and stuff. But I'm going to do that. And then when the show is over, I will type up the comments. But you guys, you saw it here first. The NVIDIA trade was filled this morning for 305. And so, man, that's some awesome stuff. But let's go back to the short call spread. Man, this NVIDIA trade ended up being a nice little trade. Right? I mean, it's nothing crazy. Like, it's not like we've got one prescription in one eye and one prescription in the other eye. Like, that's some wild stuff, man. This is not that at all. This is very, very kind of plain vanilla. Like, this is just a little dollar here, a little dollar there, a little expecting move butterfly, a little short call spread, and everybody goes home happy. And so that's basically what we did here in NVIDIA. And yeah, I think we'll just take off the short call spread. There's not really too much else to say. And yeah, I think that's going to be that. So let me go ahead and close this position. And let's see if we can get out for 81 cents. Is that what that says? Is that 81 cents or 51 cents? Man, I don't even know. But we'll give it a go. 80. All right, so we got filled for whatever that number was. I think it was 81 cents. And so we got about $1.20. Man, that's a solid little earnings package. That's a solid little trade package around earnings. I mean, look at this. We did a video for, you can see them right down here, right? We bought the butterfly for $2. We closed it this morning for 305. That's $1. $1.05 actually, if you're keeping score at home. We sold the call spread for $2 right around the same time we did the expected move butterfly. This all happened on Tuesday on 8/26. And then we just bought back the short call spread for 81 cents. So another $1.20. Man, if only they all were this easy. Like, if only they all were just this simple, this clear. So very unlike Monovision in that regard. But man, $1 here, $1.20 there, that's some good stuff. I will absolutely take it. And so there's NVIDIA. And let's see here. You guys help me out. What's going on? Is this all from PCE this morning? Like, I mean, guys, listen. Like, I know going in, that was the most important PCE print that we've ever experienced. But that was pretty ho-hum. Like, even I've got to say, that was a nothing burger. Like, everything came in line. Nothing was crazy. Like, nothing off the reservation. And then all of a sudden, market down 300. I mean, the market was pretty weak overnight for whatever reason. But then it really started to pick up steam going into the open there. And it's just another great example that nobody knows, man. Nobody has a single clue. Not a single clue. They don't ring a bell. They don't send out the company-wide email to kind of let you know what's going on. You just got to kind of be at the ready. And so there's NVIDIA. So next up, let's go ahead and do, let's see, we did Best Buy, we did NVIDIA. Man, let's do Rocket Lab. So take a look at Rocket Lab. Rocket Lab is down today, down 38 cents, but we're actually up a little bit today on this short put. And so we have a 38 short put, 21 days to go. You can see we sold it for $1.35. It's marking for about 50 cents. Again, I'm no Julius Mina, and I'm also working with Monovision, so I have no idea really what's going on. But it looks like we're right around 50% of max profit, give or take, right? Plus or minus 30 to 40% around the edges. It looks like we're basically where we've been trying to go since the very beginning. So I don't really think we need to belabor this point anymore. I think the time has come and we can go ahead and take this trade off and just we can all move on with our lives. And so Rocket Lab, I think that was one of y'all. Was that one of y'all that brought that to my attention? I didn't write it down. That was before I started keeping receipts and taking notes for all the trades you guys are bringing to my doorstep. Like that, I know this Palo Alto trade is still Sam L's. Like Sam L still looking pretty good. We're between the strikes, right? We're going to sit tight. I don't know what you did with your trade necessarily, but I'm going to sit tight on this one and kind of let it cook a little bit longer. But the Rocket Lab, I think, was one of you guys. So let me know. Was it one of you guys? Identify yourselves in the chat. And I would like you to get full credit for this. And by full credit, I mean, I'll give you like 10 to 15% of the credit and I'll take the rest. But Rocket Lab, 38 put. I think we're done. I think it's over, man. Let's buy this guy back for, it looks like it's about 50 cents, give or take. 53 cents. We'll go, man, we're lifting offers now. Man, there's the monovision at play. We're lifting offers now. We're not even going for the mid price. I can't see the mid price. I have no idea what the mid price is, but I saw the offer. Man, let's go for it. Let's lift some offers here on the Friday edition of the show. Love it. All right. So lastly, the last one, and guys, I'm kind of embarrassed. I'm embarrassed. I'm a little bit ashamed. Like, I can't believe I ever doubted it for a second. Like, I can't believe that I was actually on the wolf hating bandwagon. And I'm talking wolf with an O, wolf with a U, whatever you need it to be. Man, look at this guy. Look at this short straddle in wolf with a U. I mean, we are basically we're beyond 25% of max profit. You can see we sold it for 226. It's marking at $1.57. We're up about 70 cents on the trade. That looks like almost 30%. We're at almost 30% of max profit. And so it's like, man, it's like, what more do you want? Like, what more do you need out of this position? It's like, we just swept the Orioles. We just took 4 out of 4 in Baltimore. Like, what more can you want? What more are you asking for? Really nothing, man. This straddle is looking pretty good. And so I think let's go ahead and take this guy off. And then I think that's going to be pretty much it today. I think we're just going to meander on over to the YouTube chat. If I can, am I going to be able to read the comments? I may not be able to. I'll just have to kind of, just do the best I can with whatever words I can make out. And yeah, let's see here. Let's close this guy down for $1.57. That looks pretty good. See if we can get filled. Well, I got filled on the mid price for a wolf with a U. Man, that's some good stuff. That is some good stuff indeed. So that's wolf with a U. Everything else in the portfolio, I mean, you got Meta is kind of back in the mix. We're at 21 days to go, but I won't be able to roll this for a credit, so I'm not going to do anything here. Like here, I'll even show you. If I right click, or excuse me, if I highlight both legs, I right click, I roll expirations, I go down to October. I don't know what that number is, but I can see the red little DB, the red little debit. I know it's a debit. So I'm not going to roll for a debit. I don't really want to increase my risk on the position. When it comes to defined risk, I mean, this is kind of the game that you play. This is kind of what you're signing up for. There it is again for the 75th consecutive day. If you can roll it at or inside of 21 days to go for a credit, then go for it. If it's going to be a debit, then you want to think very carefully about that. Usually that's not something we would do. Usually that's not something we would consider because, yes, you are getting more time. You are getting an extended duration, so there's your gimme. The gotcha, though, is you're adding risk to the trade. The gotcha is, though, you're increasing your maximum loss on the position. Not typically something that we want to do with a defined risk position. Now, if it's a nickel debit, if it's 3 cents or whatever, okay, I got it. That's basically a scratch. I understand. You may want the additional 4 weeks. You may want the additional 30 days or whatever it might be. But here it's like, that looks like it's, some 30, 40, 50 cent debit or whatever. I don't really want to do that with this position. So instead, we're going to sit and we're going to stew in the bathtub of filth. But man, look at this. We are close. We are very close to exiting said bathtub of filth. You've got Meta at 739, and we have a 720, 730 call spread. And so we are close. Man, we are very, very close. Even with the monovision, I can tell that we're close. And so, all right, that's Meta. I'm very curious to see what her plan B is, because so far plan A is not going so well. But I'm gonna give it a few days. It's so weird though, man. Like for real, like my right eye can like see far distances, and my left eye, like it's got me right here. That's pretty much about it. Like everything in the middle, they're kind of fighting each other. They're kind of battling each other to see who's gonna kind of reign supreme there. It's jungle rules with the vision these days. And so anyway. I digress. There's not too much more to go over in the portfolio, and I can't see anything. So let's go ahead and let's go to the YouTube chat. And let's just see what is what. All right, man. I see you guys in the house, man. What's going on? Sam L in the house. Happy Friday, Doc. Charts are bleeding. Yes, they are. NASDAQ still down 300, it looks like. P&O, open bros are crying in the corner. I mean, maybe a little bit. We kind of, we punched back today. You know what I'm saying? Like, we've been taking hits. We've been taking just a beating, but we gave a little jab back today by getting that vertical off for a scratch. So that's some good stuff. And somehow you tell us it's all just part of the process. What a way to wrap the week. Do I say that? I think I pretty much just say you have to know what you signed up for. I don't think I've ever said it's part of the process, because I don't know if it is part of the process. It may be, it may not be. I'm not quite sure. I have to think about that one. But you do need to know what you've signed up for. That is something that I will take ownership of. So Joe says, hey, Dr. Jim. If you put on a string, oh, I forgot to surprise and delight somebody. Man, I'll do that after I get to Joe. But this is a very good question by Joe. Hey, Dr. Jim, if you put on a strangle or an iron condor and the stock has stayed in the range, but you're down on P&L, is it okay to keep the trade on? I know Tasty likes managing at 21 days to go. What's the gotcha? This is a great, great, great question. Okay, so you didn't say this, Joe, but I'm going to take this one step further. If you put, this is such a good question. If you put a position on around 45 days to go, right, give or take, and it stays within your strikes, and it's a strangle at 21 days to go, I'm going to say maybe 50 times out of 50, maybe every single time. Again, you're 45 to 21. You've gone the 24 days. You're going to be profitable on that trade. It would take so many things to go wrong. If you're, as long as you're still inside of your short strikes, you're going to be profitable on that trade. Let me leave myself an out. 48 times out of 50. Let me leave myself two outs. One for each eye, since they both really can't see anything. So 48 out of 50. So 48 out of 50 times you're going to be profitable on that trade. And the 2 out of 50 that you're not, you're not going to be showing a big loss. You're probably going to be like barely red. Another day or even later that day, you're going to turn green. The problem with what you kind of brought up is almost always with iron condors. So the problem, and this is honestly one of the reasons why I don't love iron condors. I mean, it's a fine strategy, especially if you're just starting out, learning how to play the market from a neutral bias and things like that. It's an incredible learning tool. But when it comes time to actually really growing your account, really moving forward, I don't really love iron condors. I mean, super wide ones that are kind of intended to be a synthetic strangle, that's a separate deal. You put those in a different bucket. Like that's a whole another conversation. But when you're talking about $5 or even $10 wide iron condors, I mean, they're okay. You guys will still see me do them here on the show because I understand many of you guys are just starting out. And when you're just starting out, your goal should not be to make a bunch of money. That might seem backwards to you and that might seem kind of off place to you, but your goal is to gain experience. And your goal is to expose yourself to the market and build up that market awareness that can only come from being in the arena. It can only come from being in the arena. I came across, this is a tangent off of a tangent at this point. I came across an Albert Einstein quote just the other day that I had never heard before. And I've heard a lot of Albert Einstein quotes. I've used many of them in my live talks before in the past. For those of you guys that have come to one of our live talks that maybe I was at. Albert Einstein, the only true knowledge is experience. That's an Albert Einstein quote. That's not my own quote, but man, that's a very, very good quote. And I totally agree. The only true knowledge is experience. Notice he didn't say the only true knowledge is your favorite podcast. Notice he didn't say the only true knowledge is your favorite YouTuber, right? Pun intended. The irony from being on this show. No. He said the only true experience, or actually, no, he said the only true knowledge is experience. That's so true. That's so true. So when you're starting out, right, iron condors are an important piece to the puzzle because you have to build up that experience. Okay, but here's where the plot thickens. Here's where we get a little bit of a twist, kind of midway through the narrative. When you put on a bunch of iron condors, you're actually going to experience what Joe kind of alluded to here. You're going to notice, man, this thing is between my strikes and I'm at 21 days to go, but I'm not profitable yet. Right, I haven't made any money yet. What's going on? Well, chances are it's just the nature of the strategy. Chances are it's just the friction that you've introduced with the long legs that are outside of your shorts that are essentially watering down all of the advantages that you're bringing in with the short options. Now, of course, it's not without a pretty significant gimme. You do, of course, have limited risk. You've got the safety net in place, all the things that we all know and love. But it comes at a very, very significant cost. And so none of that even answered your question, Joe, but I thought it was somewhat relevant, which is not always the case for most of my tangents. And most of my answers to all the questions that come in even. But your question is, what is the risk to holding inside of 21 days to go? No, all kidding aside, I hope that was still helpful for you and everybody else watching. Especially if you're just starting out. I mean, I think hopefully that's some valuable insight. The risk if you hold inside of 21 days to go is increased gamma exposure. So the risk and what we're essentially trying to mitigate or somewhat get rid of altogether at 21 days to go is the increased gamma exposure that comes as you get closer and closer to expiration. That is more of a problem with an undefined risk strategy. So like a strangle. So with a strangle at 21 days to go, again, 48 times out of 50, I think you're probably going to have a profit on your hands. But even in the off chance that you do have a slight negative, I would probably roll it out to the next cycle and not really think about it. Now, truth be told, is there a big difference between 21 days and 18 days or 16 days? No, there isn't. So if you want to wait over the weekend or whatever, you can do that. It's not going to be that big of a difference from a gamma exposure standpoint. For defined risk, one more thought on the gamma thing. The reason why gamma risk exposure is important, by the way, is gamma is a second derivative of the model. So it's underlying or underpinning directional exposure. It's showing you how fast your delta is going to change. So it's kind of a second layer of directional risk. And so the reason why we want to avoid that is because as a premium seller, what is the one thing that's going to do the most damage to you or me or anyone else doing what we do? The big outlier move that gets away from us. Like, that's it. That's the thing that's going to do the most damage. Well, if that happens to happen in the final week of expiration, it's going to hurt a whole lot more than if it were to happen in the first half of the cycle or 35 days to go or 25 days to go or whatever. It's just going to be a much more muted effect if it happens kind of outside of 21 days to go. That's why we manage at 21 days. When you have an iron condor, though, you don't have to worry about gamma risk because you have the long legs. The long legs are in place to not only define your risk, but they essentially mitigate all of the extreme gamma exposure that you would otherwise be exposed to. So you don't really need to worry about it. So again, if you can manage at 21, go for it. But if you can't, just hold it. I would just hold it. If you can roll out in time for a credit, you could go for that too. But if you can't, just sit on it. And with a defined risk strategy like an iron condor, sit on it all the way to expiration if you need to. Just go all the way to the end if that's what it takes. And so that's one of the beautiful things about defined risk. You don't have to worry so much about exactly how many DTE might be left in the strategy. So anyway, Joe, I hope that was helpful for you. But let me find somebody. Let me find somebody in the middle. Man, you know what? I'm going to surprise and delight somebody. Wait a minute. I'm going to surprise and delight somebody for my own benefit. David C says, "Hey, Dr. Jim, I've been monovision for years, but I went all in and I let the eye surgeon do it. Are you crazy, man? Are you off your rocker, man? Maybe I am going to just let me know. Am I going to adjust?" He says, "Or am I winking? It's permanent. Or am I winking?" Okay, I don't know if you're trolling me. Maybe you're trolling me, and that would be an amazing troll. But if you're being serious, like if you did the distance near like eye to eye deal, man, help me out in the chat. Like, did you really do that? And then number two, is my brain really going to figure this out? I really have a hard time believing it. Kind of similar to this down day today. I'm like, is this really happening? I'm like, there's no way. There's no way. But I'm like, man, my brain is not going to figure this out. My brain's just not that smart. Maybe the average person's brain can figure this out, but mine, I don't know, man. I'm not so sure that we're going to get where we're trying to go. But let me know, David C. Help me out because it's kind of fun. Like I feel completely free of like all like responsibilities. Like I can't see anything, man. It's like, what do you want me to do? I'm here. Like I'm here. I showed up today, right? Can't see a lick, right? So anything I can do above zero is a win. Anything I can do above the baseline of nothing is an absolute W in my book. But anyway, let's see. Where are we at? Brad Glazier's in the house. What's going on? What's going on there, Brad Glazier? Greetings, Professor. What's going on, my friend? Wishing you a good week, and you too, my friend. Thank you so much for being part of the core position. Just appreciate you, man. Appreciate you so much. Adam Armfield. Hey, Jim. Have you had a closing order for your butterfly open today to see what I would have won if I hadn't closed for 220? I think I had a 1 minute window to close the last butterfly profitably. Yes. Yeah, we did the NVIDIA thing on the open, which I went over a few minutes ago. And so, yeah, that was the one that we had open. And I had kind of forgotten about it as I kind of foretold yesterday on the show because I don't normally do that. And so that's one of the reasons why I don't normally do it, because I want you guys to be able to follow along with all the things that we're doing. It's so important to me. It's incredibly important to me. It's more important to me than my vision. It's more important to me than being able to see clearly, as evidenced by the fact that I'm here today with you all. And so, yeah, we got out of there for $3 there, Adam. And so, Finn West, aloha, Dr. Jim. Good morning. It's good to be with you, man. It's good to be with you too, my friend. Thanks for being here. I just, man, I appreciate you so much. Sam L, Doc, that NVIDIA trade worked out beautifully. Only problem, you were just one day early. I know. Classic Dr. Jim, always giving the market a 24-hour head start. Yeah, I don't know about that. I feel like the market's got a much bigger head start than just 24 hours for most of the trades that we do. Let's see. Rancher's in the house. What's going on there, Rancher? Gasman, a long zebra on RKT. What is that, wrecked? That's kind of how my vision feels right now, wrecked. RKT, Rocket Companies. $17 stock. Okay. You go into a long zebra, you're saying now? I don't know. I mean, I don't hate it. The only thing about this gas man is I like it. I like the idea. The only thing is normally when you do a zebra, you're doing it on maybe a higher price stock because you want to save a lot of buying power. And so I don't know how much buying power we're going to save by doing a zebra here in, Rect, right? RKT. And so $17 stock, if I bought the stock outright, it would be $850 would be my buying power. If I go in here for a zebra, it's probably going to be a couple $100. If I buy a couple 16 calls and then sell like an 18 call, that's going to be buying power effect is $340. And so I don't mind it. And in fact, I'm going to do it because we haven't done a zebra in a while, actually. So let's get one on the books. Like I like the idea. I like the spirit of the trade. So I'm going to essentially take the one that you suggested. Hold on, let me write this down though. Man, I'm not going to be able to see. Hold on, I'm about to leave myself a voice memo. I'm leaving myself a voice memo on the show because I can't see my writing. Here we go. All right, so I'm on from theory to practice right now, and Gasman just gave me this rocket zebra. So if it doesn't work out, you know who to find for the invoice. And so all right, so we got the voice memo down for the Gasman Rocket Lab zebra. We're about to get wrecked, but that's okay. So let's go in here and we'll go 337. All right, beautiful. Got filled. But all kidding aside, Gas Man, thank you for the trade. It's amazing. We haven't done a zebra in a while, so this will be fun. This will be a way to kind of, trade the zebra moving forward. So, all right, so let's see. Where else are we at? Margin Walker's in the house. The chat has been unlocked. That's correct. He says, what's up, Dr. Jim? I appreciate you, my friend. Man, I appreciate you. Margin Walker goes on to say, is the market rolling over? Will we see the SPY go to zero? I'm going to say maybe asymptotically, but not todically. Like, we might have an asymptotic approach there, but that's going to be about the best I can give you. Miko's in the house. Hey, Dr. Jim, I'm glad that you are here. The market is going down. It's scary. I wasn't aware it could do that. Well, the good news is we still have an hour and a half to go. Right? The good news is if we get enough computer restarts out there, and again, this is on you. You've got to take ownership. In fact, you've got to take extreme ownership from my Jocko Willing fans that might be watching the show today. Enough computer restarts, and we can get you back to unched. I may not be able to get you green today, but I can get you within, minus 20 to 0. We can get you somewhere within that range when it comes to the old NASDAQ index there. And so let's see. Stefan's in the house. What's up there, Stefan? Appreciate you. Rancher says, I've whittled down to 7 positions. That's great, my friend. Again, remember, it's not a competition. It's not a race. I know we're all looking at our leader, right? The creator himself, our visionary. He's got 97 positions. But the problem is he doesn't have any idea what's going on, right? The problem is he probably needs about 90 fewer positions because he can't see anything either. Maybe he's also got monovision. He's got some kind of problem with his own vision. But yeah, 7 is a great number there, Rancher. And so I personally like to generally be between 8 to 15, I would say. 15 is a little stretched for me. But yeah. I think 7's a good number. Ash Finn's in the house. Dr. Jim Time, let's go, man. Let's go, my friend. I appreciate you. Appreciate you very, very much. Thank you for being here and being a part of what we're doing. Sam L. Doc, I guess iPod Touch is out there celebrating with the Shifties and the Silver Bro. Oh, the Silver Bro? No, there's 2, the Hunt Brothers. Right? There's at least 2 Silver Bros because it's the Hunt Brothers. It's not the Hunt only child. Like, it's the Hunt Brothers, man. So yeah, iPod Touch might be here, though. You guys just scroll down in the chat. I don't see him yet. I see Andy B showed up, though. Thank you, Andy B. Thanks for being here. Bearded Traders in the house. Man, Brandon R is in the house. Man, look at you guys, man. You guys are blowing up that chat. I can't keep up with y'all, man. We got to double this show. We got to extend the show to an hour and a half, right? How crazy would that be? How crazy would that be? That's crazier than monovision, in my opinion. Like, I'm thinking this is pretty wild. This is pretty crazy. But 90 minutes of Dr. Jim every day? Whew, man, that's too much, Dr. Jim. We're pretty much at the max, Dr. Jim. That should be allotted as it is, but 90 minutes is way, way, way too much. But let's see. Chemist or something like that says, hey, Dr. Jim, I have the 232.5, 225 inverted strangle in Apple, 12.5 premium and 21 days to go. I'm newer to strangles, trying to decide what strikes to uninvert to for October. Oh, this is a great, great question. Man, let's do it. And let's do the whole thing together there, Chemist or Checks. Mist or something like that. I'm probably butchering your username, but I'm trying my best. And so let's see. If I go to Apple, thank you for all the detail, by the way. That's extremely helpful. So in the 21-day cycle, you said you've got a 232 and a half, 225 inverted strangle. So that means you're short a 225 call and a 232 and a half put. Okay, so you're short this guy for $15, and you've collected $12.50 in premium. And right now you've got Apple basically right up against your put strike. Okay. So you're trying to figure out, how to uninvert this strangle into the next cycle to kind of reset the clock. This, by the way, is what Tom and Tony mean when they say buy the guts and sell the wings. We're buying the guts in the September cycle, and we're going to try to sell out new wings in the October cycle. I don't do this myself too often. I usually prefer to just stay with the inverted strangle as kind of the last stop on the train tracks and then just manage it from there, which essentially doesn't require too much work from that point because it is the final stop on the train tracks. But if you did want to uninvert and kind of reset the clock, if you will, this is essentially the process that you would follow. So this is what you have on right now. And you said you have $12.50 in premium collected. Okay. So I am going to buy this back. So I'm going to buy both of these options now because this would essentially be the first step in your process. And now what I'm going to do is I'm going to minimize September and I'm going to go to October. And if I went to an expected move strangle, right? So I go to, I sell a 220 put and I sell a 250 call, let's say. So that's going to be, if I do all of this together, that's a $10.38 debit. Okay. You have $12.50 in your back pocket, right? So if you buy back what you have in September, go out to October and just establish a brand new expected move strangle, kind of starting over from scratch, you're essentially going to be able to do this all for a net credit of $2. Right now, the cost to do this whole transaction, buying back what you have and selling out the new one, is approximately a $10.50 debit. It's a little bit less than that, but this will make the numbers a bit easier. If that's a $10.50 debit, but you have $12.50 of credits in your pocket, then that, of course, means the net result is plus $2 in credit. So you would then have on this strangle in October where it's out of the money. You've got plenty of room on both sides. You're basically starting the process over for a $2 credit. It would be as if you went in and sold this strangle for $2 on entry, and you're basically just starting from this point. Like you're starting over right now. Like everything begins, this is the beginning of the trade. And so this is how you would do it. Now, from here, you could potentially move the strikes in. You probably can't move the strikes out too much because you won't collect enough, I don't think. Like if I go to 215 and 225 or 255, yeah, you probably don't want to do that because then you'd be paying $12 for it. And now you've only got 50 cents left. And so if you do a 220, 250, you'll have that $2 left. If you bring in the 250 to 245, now you're only paying $9.24, right? So now you'll have over $3 left. And so you can decide kind of what strikes you want to choose. It depends obviously on how wide you want to be, probability of profit, things like that. But yeah, this hopefully is a good starting point for you there, Chemist. Thank you so much for being here. And I really hope that was helpful. That discussion there. And so let's see. Margin Walker says, fade the move in gold. Man, I 100% agree. This move in gold and the move in silver is super, super crazy. Super crazy. I mean, gold is still up 37. You got silver. Where's silver at? Yeah, silver's up 92 cents now. So you've got absolutely huge move in the metals, crazy move in the metals. Man, I would have to fade it. I would absolutely have to fade it. I would say, the next 50 points in gold will be lower, and the next 2 points, next $2, or let's just say the next $1.50 in silver will be lower. So I would say 39 will print before 42 prints, which essentially cements 42 as more or less a slam dunk. And so, yes, but I agree with you there. Margin Walker. And then, yeah, there's Gasman with the monovision. Sounds wild. Yes, it's very wild. Scramble Everything says, Dr. Jim, wow, you passed up Wolf earnings to the upside. I don't believe it. Should have kept up with the Wolf and Wolf theme. Better put on that eye patch. I got to do something, man. Like, again, where's David C at? Did he pop in the end? David C, man, did you hook me up? Oh, I think did he roll out? Oh, he bounced. Oh no, I needed to know if that was for real. Man, people getting monovision permanent. That's a power move, man. That is a power move. I mean, that's up there with Anthony, in my opinion. I mean, Anthony's probably still ahead, but man, this is in the conversation. Permanent monovision? Whew, man, I don't know about all that. And so, but anyway, let's see. Finway says I was offered that option with new contacts. I said no and went back to my glasses. Yeah, that's the safe play, man. That's the IBM. That's the Procter and Gamble, right? Like I could go glasses, and I may end up doing that. I don't know. I may just go. She's like, hey, the glasses will be amazing. Like you'll be able to see everything like crystal clear. It'll be absolutely amazing. She's like, but usually with contact wearers, they don't like that option. I'm like, yeah, I really don't like that option. I like my glasses from time to time. I'm gonna get some new ones here pretty soon. Whatever. But it's like I kind of want to leg out the contacts for a bit longer. And so maybe that means monovision. I don't know. Maybe that means jungle rules in terms of fighting over the vision for the distance and the near stuff and whatever. But yeah. Let's see. Sam L says yes. Flight to quality BBY is green and ripping while our risk-free instruments are out there bleeding. I know, it's crazy, man. It's crazy. People are selling T-bills to buy Best Buy. That's crazy stuff, man. That is quite a rotation. That's quite a rotation indeed. Let's see. Scramble Everything says, send them a reminder to turn the computers on at the exchange. Yes, that's correct. Margin Walker says a new meme stock is ONDS. You should get in on this party, Doc. I mean, I don't know. That doesn't sound good. ONDS. Ondis. $5 stock. Man, you guys with these, oh my gosh. $2 stock, $5 stock, Ondis, Wolf. What was that other stuff that I think Rex brought it to us the other day. Some other, I can't even remember the ticker, but I'm pretty sure it was Rex. Yeah, I'm gonna pass on some Ondis. I'm gonna let y'all fight it out over Ondis. I got to fight out this vision situation, and so we can only fight so many things at once. Emmett Morrison, what's up, Dr. J? What are the plans for the long weekend? Yeah, I don't know. So Autumn actually, she got. I think I mentioned this yesterday. She got one of her teeth extracted on Wednesday. That's why I wasn't available for today's assignment. She is. I mean, you guys think we're in the Hurt Locker? Like you think you're short some silver today? You're in the Hurt Locker? Nah, man. She is in the Hurt Locker. She is really, really struggling. And so I feel so bad for her. So I'm going to jump in. And I can't see a lick, so I don't know what that means necessarily. But I'm going to jump in and try to finagle and corral, my kids, or at least some kids. Since I can't see them, they may not be mine, but I'm going to go for 3 kids in and 3 kids out at all times, and we'll just count heartbeats. And so that's going to be the strategy for the weekend. And I think that's pretty much it. What are you doing, my friend? I hope you're doing something very fun out there. Emmett, it's 3-day weekend. I can't believe I kind of forgot about that. That's right. I won't be back till Tuesday. Yeah, that's wild stuff. Andy B's in the house. What's up, Andy B? Miko, scramble everything. Buy, Mortimer. Buy. Yes, I guess so. If you're looking for a time to buy, I guess now would be that time, of course. And so let's see. David C. Oh, yeah, the Monovision. Yeah. And then let's see. Trading Places. Mr. Valentine has set the price. Yes. The Peanut Open Bros can get bent. Yes. Is that what the young kids are saying these days? I've seen that here and there, but I've never necessarily been able to pin down exactly what it means. And so, but I like it. I like it a lot. Bob Sala says, I haven't been to a Best Buy in forever. I'm all about Amazon. I don't know, man. You're really missing it then. You're really missing it. It's kind of like, it's basically the Blockbuster of electronic stores. Like that's what Best Buy is. And so, I mean, just think about Blockbuster and how things turn out for Blockbuster. I would say Best Buy is on the same path to greatness when it's all said and done. And so let's see. Wolf says you should have gone higher quality than Best Buy. Yes, and played Wolf earnings. Yes, that's correct. We definitely missed the mark on that one. Let's see. Margin Walker says you almost got Hotel California. Hotel California. That's like is that like who is that? Is that Don? That's Don somebody, right? That's before my time. That's 70s, right? Yeah, I was born in, or maybe early 80s. I was born in 81. So Hotel California, obviously I know the song. I mean, I couldn't sing it for you. I'm not even sure if I could pick it out if it was on, but I've heard of it. I know that it exists. And so I'm not following the reference here because that's a little bit before my time. But let's see. The Google is strong again today. And why would it not be strong today? I mean, NASDAQ down 325. Where do you find quality? You find it in Google up $1.78, and you find it in Best Buy up $1. Makes a lot of sense. And so let's see. Adam Armfield says you could have got 590. I think you mean on the NVIDIA butterfly. That's correct. But again, it's all obvious, right? It's all, crystal clear in the rear view, even with monovision. Like even with monovision, you're looking in the rear view, you see everything. Both eyes see everything at all times. It doesn't even matter. And so yeah. But man, I appreciate you guys. I gotta go. Wow, I can't believe that it's over. Man, it's so fast. You guys have no idea at all. Somebody saved me at the end. iPod Touch coming up clutch at the end with the Eagles. That's what I was going for. The Eagles, right? With Don, whatever his name is. Wasn't he the lead singer of the Eagles? Man, I don't even know. But iPod Touch. Thank you for saving Christmas there. I appreciate you. But I gotta go. I gotta roll. If I can ever help you guys in any way, please shoot me an email. I would love to help you in any way that I possibly can. If you guys want to connect on Twitter, I would love to hear from you guys on there as well. I'm at jschultzf3. In the meantime, guys, we do have Jamal coming up next with Engineering the Trade. In the meantime, again, because that's what I usually say, trade them small, trade them heavy, and stay generous. There we go. We will see you guys after the 3-day weekend on Tuesday.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tastylive.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the precision of the short game. Wow, I've seen better putting at the mini golf in the Dells. Tom, do you see holes where there aren't any, mate? Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tastylive Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
is not the bull. If that's you, join us on Tasty Trade. Genius loves company.
What's going on, everybody, and welcome to the most dangerous show on the Tastylive network. It's Engineering the Trade, and I'm your host, Jamal Chandler. I got to tell you, it's been an interesting week when you look back. The biggest thing we were waiting on was NVIDIA's earnings. NVIDIA showed us that AI is certainly not going anywhere. Surprisingly, very little movement, though. I mean, I don't think we expected it to eclipse move, which was about 12 points. I didn't expect it to really do much more than that, but boy, it was basically kind of quiet, if you will. We had core PCE this morning, and I tell you, inflation is still in the mix. We got a jobs report next week, and those have been the two things that really the Fed has been relying on to determine whether or not they're going to do a rate cut at some point in time. Obviously, there's been pressure from the Trump administration for Powell to do rate cuts, but you would think that it's going to really take something for them to eventually get to that, and that's what we pretty much realized last week after the end of the Jackson Hole meeting, when essentially Powell alluded to the fact that we're going to do rate cuts come September. So that's kind of the mix we're in right now. As far as trading, let's pull up the platform and take a look around a little bit at what we're seeing. Gotta make sure I got that one. I got to tell you, this has been one of those strange days. This morning, I think there was like a 34-point expected move. Looks like we eclipsed that. And honestly, I don't really think this is much more than just end of the month selling. Sort of, there's been a lot of, most days I feel like we've been up 4 weeks in a row. The S&P 500, the Russell, and the Dow have been up. The Nasdaq missed 1 week being positive there, but for the most part, I mean, we're in a bull market. From what I can tell, when you look at markets, basically not that far off of its highs. I'll come back to CRM. There's something I'm thinking about in CRM. It's one of the names I've been looking at. But yeah, I mean, look at that. We're sitting, right upon highs. I got to tell you, when I was looking, let's go over the last couple of months here. Let's go 3 months. When we got to here, when we got to the end of the month, remember the end of last month, we had a little bit of dip, right? Some of it, I think, was earnings. I think it was some of the Mag 7 names that had earnings. I think Meta was one of them on this particular day, and it just kind of led to this selling towards the end of July and the beginning of August. But it's been blue skies for the most part in August. And I remember when we got to here after the inflation reports on 8/12, we sort of eclipsed this 8/11 sort of after this drawdown here, right? Small drawdown. We ended up getting back up towards, and once that inflation report hit, you see this big candle here, and we've basically been maintaining above the what's that? The 2 week moving average since then, and we've held fairly steady and strong. And so markets have been flying for the most part. I shouldn't say flying, but they've been kind of slow melting up, really, if you will, and volatility really hasn't been much of a factor when you look at it. Look at September VIX, it's 1705. Look at October VIX, 1925. So you got about $2.20 between the front 2 months there. That's a pretty low volatility environments, if you will. And let me look over in the chat here, see what's going on. Margin Walker, what's going on? How you doing? Not sure what you guys are paying into you knuckleheads on a Friday. Look at you guys looking for trades. I love it. That's what makes you guys the best, man. I got to tell you, I don't really have many that nothing in the near term. Anything that I'm looking at now might be longer out. So CRM is the name that I was eyeing up going back to the middle of the month, and I definitely should have jumped on this trade when I was in the middle of putting on a bunch of different zebras. This is one that I was looking at, and it didn't actually end up. I thought it was going to fall a little bit more. I was also anticipating maybe waiting until after earnings. At this point, I think that's what I'm going to do. I'm going to wait until after earnings and then decide what I'm going to do from there. But I'm still interested in getting long this name. This is one of those names that is, a very. Let me try to remember the market cap. I want to say it's 100 billion or more, but let me look before I say wrong. CRM's market cap is not that high. It is 250 billion, so about a quarter of what I was thinking. But large market cap name. Not only is it in the S&P 500, but it's also in the Dow. And so why does that matter? I think when you're looking to sort of pick up a name off the mat, it's nice that it's in some two big indices that gives you some footing to stand on. So this is one of the names that I've been looking at. I think I'm going to wait until after earnings just to see if for chance somehow they miss. But I for sure want to put on a zebra in here. It costs about $3,000 and change out here right now. If I did the 240. 250. I feel like if the stock were to drop on earnings, I could obviously get that for a little bit cheaper than $3,000. I do like going November on this right now. I want to give it time, especially if it falls. I want to give it time. If I were really just interested in, if I thought it was already on lows, and if it were on lows like it was in the middle of the month, I'd probably go here and I would go nearer term and I would do the 250, 260. Most of the time in the zebra, you're usually selling the at the money. As opposed to if I go 240, 250, you can do that, right? I mean, because eventually, if you're lucky that and your stock actually moves up the way you want it to, I mean, this is kind of what it's going to look like anyway. It's going to be a little bit more in the money, but again, I just looking at the chart, we've seen a little bit of bounce since the middle of the month. I feel like that happened in a couple of names that I was eyeing that were on their lows. Lulu is another one, right? In the middle of the month, it's kind of on their lows. This was a name that I was eyeing up as well. This also has earnings next week. It makes me a little bit nervous to jump into Lulu ahead of time because, again, this is one of those companies that's struggled more recently, especially when you factor in tariffs. I'm not sure exactly where they get most of their material from, but it is one of those companies that has been subject to some of those issues. So I don't know if I want to jump in this one prior to earnings. CRM, though, software seems to be somewhat fine. I feel like there were a couple of software names. I think Snow is one of them, Snowflake. I believe that's a software company. I can't remember. But they had a pretty good earnings report and ended up going really well. Overall, what I got going on today, some of them are leftover earnings plays. That's Best Buy. Okta is a leftover earnings play. MDB leftover. Intuit. These are a lot of these are 0 days and they're leftover earnings plays. I can't wait for those to roll off. They were part of calendar call spreads or what have you. I think some of them might even have options a little further out. Okta still does. CoreWeave is a zebra that I've been holding on for a while. Walmart, I think it's mostly calls. Wolf is a zebra that I put on actually a week ago. I remember there was some news surrounding them in Google. It's not a big position, obviously pretty small. I'm willing to hold on to it. Fiserv is another zebra name. I feel like I've littered myself with a lot of different zebras. Gold. So I just noticed today, this has been a trade that I have not been interested in for a while now. It's been a while since I put on anything in gold. Probably a couple months, I think. But let's see. I think I took my gold stuff off. This is the last 30 days. Let's go 60 days. Yeah, I closed my gold trade on 7/22 at a time where really gold hadn't been doing. It had touched near-term highs, and it felt like gold was really kind of carving out a range that was somewhere around 3,400, give or take 50 points. Well, recently it seems like gold is starting to climb out of its hole again, and we'll see if it can break out higher. I decided to buy a call spread today in GC. Went out to October. I bought the 3,550 3,600 call spread. So this is the way I like to play gold, with some convexity and a little bit of upside. You can see vol is on the upswing a little bit too when we look at the IVR. So that's I literally just put this trade on this morning, and I literally just put this trade on this morning just because, again, I was watching and I had been noticing gold throughout the week. I've been noticing silver too. I was going to put on a silver trade. Then I realized maybe it's a little bit too much, but I like having a gold trade, especially if I have a long dollar trade, right? Because one of those may end up working, one of them may not, but it's a nice little pair trade, if you will. So anyway, just to show you the silver trade, I almost put on a silver trade this morning too. Can't remember. I think I was looking at October as well. I was looking at the 42, 44. It was, well, I think I could have bought it for like 1,800 this morning. I think I could have bought that for this, that which obviously means it's up like $700 at this point on the day. 2% move, nice move there. That didn't. I just decided against it. It was kind of a bigger trade, and I still want to have some cash, so I didn't want to do too much. I've gotten to the point now where I'm like 75% cash in now, just on a lot of different trades. Most of them are further out. Most of them are not. Vol selling trades. I mean, it's hard to sell vol in this environment, in my opinion, when the VIX is in the teens and you're looking at VIX futures in the teens. It's a hard environment to sell vol in, really, and you're kind of inviting yourself into some trouble, really, because we've seen and we've done a lot of studies about how the vol pops can be a little bit bigger when VIX is a little bit lower in the teens and things like that, right? So you don't want to set yourself up for failure. Yeah, I got some directional stuff. It's mostly directional when you look at UPS, when you look at FIG, you look at Apple, Russell 2000 is a further out call spread. I'm living in the somewhere between the 49 and 84-day window for a lot of those directional long trades, and I'm okay with that for now. So, yeah, it's just a margin walker wants to be short Microsoft. Hey, everybody is entitled to their own opinion. It's just a quiet environment, really. This bond move today, again, there's times where I want to trade it, but all bonds seem to be doing is just retracing big moves from the day prior. You saw it on 813, same thing here. You saw it on 821, 822. You're seeing it again from yesterday to today. And there's not enough vol. That's where you want to sell vol if it's just going up and then coming back down and retracing moves. But this is not enough vol for me to sell, I got to tell you, especially in bonds. When you look at bond vol on a flat vol, it's 10, right? If the IV rank is 50, then that means if you're lucky, it's 15, but I doubt it is. So it's just kind of a low vol environment, and it's too low for me to be selling any bond vol, even though bonds essentially are not really moving much. They've been, if we look at the continuous contract here, bonds basically have been hanging out, and the for ZN seemingly somewhere around 110, 111. This seems to be a little bit higher than usual. And again, the jump has happened more recently because bond 10-year yields are just a little bit closer to the 2 years where they're expecting rate cuts. Again, that's been priced in. We'll see if it actually comes to fruition. ZB, on the other hand, doesn't seem to be a whole lot of movement, and it's the longer end of the curve, so you would expect as much. Hanging around 114, I would say, that's kind of been the flat area. So you could put an iron condor around that. It's just, for me, like I said, with an IV rank of single digits, I'm not interested in doing that right now. Man, MES today, down 48 handles. I'm sure a lot of people were interested in possibly buying there because most of the week it feels like we start the day lower and then we bounce back up. I'm kind of glad I didn't do anything because it just doesn't seem to be worth trying to catch that move and play it for a bounce to the upside. Bitcoin, similar deal. We know more recently Bitcoin has been pretty highly correlated to equities. I've seen that a lot. I've done charts on it. You can see for the days where we're down, Bitcoin is we're meaning the S&P 500. That is, when the S&P 500 is down, Bitcoin is down. We see that quite a bit more often, and so you could definitely play that. The only hard thing is this contract, even for the micro, is pretty sizable, 4,400 essentially. Ether, I haven't bought Ether futures in a long time, but these are a lot cheaper. Of course, the move is not the magnitude of the move doesn't necessarily lead to big bucks, if you will. So that's one of the reasons I haven't touched it. Like I tell you, I got long dollar again via being short the euro. I'm short delta the euro. I have a euro put spread 117, 114. I'm looking for some convexity on that trade at some point in time, I think, because of this dollar chart. Look at this dollar chart. Dollar has been one of the worst performing assets on the year, and it's still kind of hanging not too far from the lows. So either it's going to revisit lows, and that's just going to make me adjust my strikes on my put spread, or the dollar's going to have a significant bounce towards the end of the year. We'll see which one ends up becoming true. No other currencies of interest. Again, I did used to have a short delta yen spread, but not doing that again, leaving that one alone. Looking into next week, we got a jobs report. You would expect more movement from the bonds, if you will. We usually start off with the JOLTS report, and then ADP, and then the non-farm payroll, as I always call it, the job soup. So that's going to be something. Short the euro. Welcome to the party. That's right. Scramble everything. That's right. Yeah. Don't sell any premium at 15 VIX, people. It's not worth it. Carvana. Had earnings today, right? It was one that I was interested in playing. I see it's interesting. I was going to do the 90 strike and maybe another, but I just decided against it. Didn't want to. It looks like it would have worked out, though. What was the high in here? The high was $100 today? Holy cow. I would have definitely made out well. So somebody asked me recently about the calendar call spreads and what I do. Somebody emailed and asked, when you do them, why don't I close them at the beginning of the day? And for the most part, again, it's a directional trade, but there is somewhat of a small vol component to it. And so when I do those upside calendar call spreads, essentially I'm looking to see, first of all, there's a couple. I always end up, let's just take this for example. And this would have been a great example. I would have probably done the 90 strike, maybe the 95 and maybe the 100, right? Well, it's the start of the day, the 90s would have been in the money, right? $10. You're not really making money on ones that are super in the money. I would have made probably a decent amount on the 95s, and the 100s would have been really more, would have been nice as well. In this case, the stock faded, right? So it wouldn't have been to my advantage to hold on to those calendar calls throughout the whole day. We faded back below all of the strikes, and that wouldn't have been good. However, a lot of times, what ends up happening, even some of the ones I had this week, Snowflake was a good example. I did the 225s Snowflake. I did the 237.5s, and then I did the 250s. And in that scenario, the stock actually started kind of, it opened, where did it open? The stock opened at 222 and went higher progressively throughout the day. And that's exactly one of the reasons, that is the main reason why I end up often holding those calendar call spreads throughout the day, because I'm looking for an upside surprise based on the strikes that I usually choose. I usually choose strikes that are outside of the expected move, right? You guys know the expected move bar right here. You can see that. So when it's earnings, I usually do strikes that are outside the expected move. Just case in point, let's just say next week we want to eye up CRM if it does, and when it has earnings, and say we're looking for I would probably play it for a move up to its most recent high, which was 270. So say 270 to 275 range, with maybe an upward one towards. But maybe we just worked ourselves into a trade, guys. Let's see. The 270 strike. Let's go regular September. A lot of times I only go 1 week apart, September 5th, September 12th. But in this case, maybe I set it up so that I can get a little extra time here with CRM. Yeah, let's go. Wow. You see those markets just move. It was 138. Now it's moving around. Let's go will it give me 145? I doubt it will, but let's try it. Okay, so we got 145s on. We'll go, let's see. 290 is as hard as we'll go. Why are we looking at possible 290? Well, that's a really big move, not going to lie, $40. But it's not completely out of the realm, is it? As of now, well, yeah, it is completely out of the realm, probably. As of now, it's pricing in a $20 move. But see, that's one of the reasons why I do these. They're fairly cheap. If I did the 290 strike, right? 290. These are only 93 cents. We'll pay 95. I don't mind that. I mean, that's pretty darn cheap. And we'll do a couple of those. That I always think about these in terms of premium. So $190 to have on this spread. That's pretty good. 270. We'll go 280 as well. We'll go with the 280 kind. So in this case, if CRM has good earnings, then let's go 113. If CRM has good earnings and they surprise to the upside, then we're going to see. Oh, this doesn't trade in pennies. Does it trade in pennies? No. Yeah, it does. Well, of course, 115. If it surprises to the upside, hopefully it has a huge move that is way beyond the expected move happening in that situation. And that's one of the reasons why I like that. if it goes down, then guess what? That's going to be the setup for me to put on the zebra that I've been eyeing up for quite some time. And I am only risking $430 to do this. So that's about almost 2% of the portfolio, right? It's one of those ways. And a lot of these end up being percentage-wise big gainers, right? Like I had some the other day in Snowflake where I put on for 80 cents and I ended up making like $1.40 on that. I mean, that's percentage-wise over 100%. That's pretty good. We like that. And again, if I lose it overall, if I lose the premium, well, that's only 2% of less than 2% of my book. I can survive that. And it's just a nice, easy way to play earnings for moves. If you like playing earnings for moves, right? It's not, for everybody. Do you not trade CL? I don't really trade CL as of right now. There's really not much interest in CL for me. I mean, there's been, the vol is only 20 IVR. Again, I know it's 20 IVR, but I also consider the whole entire vol environment. And with VIX at 18, VIX at, where is the actual VIX? VIX is at 15 and change with low vol CL only at 20 IVR. That's not high enough for me to sell any vol. And directionally, look, similar to what I said about bonds earlier, there really hasn't been, despite these big blips that have come due to some geopolitical stuff, really hasn't been much of a way to trade oil directionally there recently. So I'm not going to force a trade. Hi, Jamal. I've noticed you typically don't eliminate the extrinsic value in your zebras. Any reason other than having a lower cost zebra? Yeah, you don't always, I usually base it on strikes. I try to eliminate the extrinsic, and some of them you just can't. UPS, very low extrinsic. This FIG is one pretty low. This one is actually pulled back some though, as you can see. The Russell, that's not a zebra. NQ not a zebra. GC not a zebra. So you can see most of the zebras are fairly low extrinsic. It's hard to completely eliminate it. Just by design of the trade, you're doing two, and that two that you're doing, especially if you're doing it further out. Like in my case, I'm doing it a little bit further out, so there is going to be some extrinsic, but these are fairly low extrinsic values when you look at 125, 150. Again, this one has a little bit more extrinsic, as you can see. It is below the 70 strike now, so something to consider. I mean, I could readjust. I don't necessarily know if that's worth my time. Let's see if it is. Just to adjust for the extrinsic, but even then, the extrinsic is not. So right now, that would be 1,700. Currently, 1,400. I have to pay another $300. That's not worth it for me. What else? Yeah, it does a decent job of eliminating extrinsic, though. And so that's one of the things I do pay attention to. But at the same time, I'm also just trying to get on a trade with a little bit of long delta and trying to find a cheaper way to do it, and a less, it's way less extrinsic than just having some calls, right? So that is a lot more advantageous, I would say, to me. But overall, I got to tell you, this was you don't want to put yourself in any traps heading into a new month. I wouldn't be surprised if we start the month off with a positive, especially after a down day to end the month, similar to what we did last month. I have not put on any trades today. Again, I already put on some CRM ahead of next week. Just sitting here talking to you guys got me interested. But we'll see what September ends up bringing us. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. I'll see you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tastytrade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tastylive.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince financial markets is the biggest takeaway, and that's kind of just the overarching principle I follow.
Hey everybody, Tim Knight here. Well, it's a really good day because that sort of link I was talking about has finally snapped. That is to say, equities are down and precious is up, which is exactly what I want. Because my portfolio, in a way, it's kind of a giant pairs trade. I've got a whole bunch of individual short equities and a handful of very large, long precious metals positions. So it's a doubly good day in that respect. Let's jump into the charts before we begin this 3-day Labor Day weekend. I am told I've got to do a little bit of video magic here. Yay, okay, I think that should work. You should see my charts now. Let us get rocking here, and we'll go to candlestick just to make it a little more clear. And by the way, what I'm showing you is my own creation called slope charts. They're free if you want to use them, slopecharts.com. Let me know if that's cool with you. I'm interested to know, because there's talk. We've been trying to figure out, like, does it make sense to you that it might look a little different than what you're looking at, etc. I hope not. To me, a chart is a chart is a chart. I just happen to use these because I created them and they're exactly like I want them to behave. So, but I hope you're okay with it. So let me know if you're not, or if you really are. You might like them. In any case, we are looking right now at the spider. And it has cracked below that little breakout yesterday. So yesterday, of course, was a lifetime high, and we've slumped under it. We've lost all of yesterday's gains and pretty much all of Wednesday's gains as well. And it's not because there was some big news. The PCE came in at exactly what they predicted, because we're all supposed to believe inflation's at 3.6%. So that's what it's supposed to be, 3.6%. But in spite of that, the market is burning off some of the preposterous valuations it's having right now. And as I said earlier, at the same time, gold's going up, which is very exciting. Here's the diamonds, also red, and none of these changes are big. I'll take any shade of red you got. So we're slipping below. We've really spent this week going nowhere. As you can tell, we're going to close pretty much where we closed last week, just grinding around. Nvidia is down. Now their Wednesday earnings didn't really matter much yesterday. It was kind of a big eye roll. This was the big spinning top I mentioned, but we're certainly sinking now, which is weird because a giant shrug of the shoulders yesterday. Now it's finally falling because there's talk about how China is a little bit weary of dealing with NVIDIA and all the trade restrictions and nonsense. So they're like, okay, we'll make our own chip. How about that, fellas? And so NVIDIA is freaking out a bit because the only reason they're a $4 trillion company is because they have a monopoly on this style of chip. And if that monopoly goes away, so do they. They're really not that so special anymore. Think of what happened to Intel. Intel was the king of the world in 2000, and now they're desperately, they're basically a government welfare queen. They're just gathering up money from the government, selling off 10%, trying to keep afloat. Total also ran. Has been. Could happen to NVIDIA. You never know. Intel used to be the king, and now they sweep the streets they used to own, right? SMH, the semiconductor ETF, is also down rather heartily, almost 3%. My only semiconductor positions myself are ON, and AMD, and those are both down. And the cubes are also down more than 1%, 1.13%. Those are at a lifetime high back on the 13th of this month. And we ain't closing there. We're basically the same levels now that we were a month ago. So 1 full month, ever deeper in debt, and nothing. Bupkis, zilch, nada. Some of the high flyers continue to fly less high. Joby, we've mentioned a few times, it just slips sliding away, just burning off day after day. And, some are still propped up, some are still hanging in there, but they are very vulnerable. Like Oklo, for example. This is Sam Altman's nuclear power company to juice those AI chips. And it's still quite high. Anybody who bought a few months ago is just sitting pretty. But it's very precarious, I would say, at these levels, as most stocks are actually. I keep pointing back to my thesis. Bullish, precious, bearish equities. Say it again and again and again. That's what all the ratio charts tell me. That's what the long-term cycles tell me. And occasionally some common sense. It's been exciting, though, because you and I have been anticipating this breakout for eons, and it's finally happened. We've been talking about the triangle. We've been talking about lifetime highs in gold. It's finally happening. Gold at the moment is up almost $40 an ounce. We're going to close at a lifetime high above $3,500 an ounce. It's incredible to think the same gold, the same metal, was $200 and change back when Bill Clinton was in office. Still this millennium, it doesn't seem that long ago, a couple $100. And now over 3,500. And if you told me a year from now it would be 5,000, I wouldn't be at all surprised. If you told me 3 years from now it would be 10,000, I wouldn't be at all surprised. Be a little odd that you're traveling through time like that, but the price projections, that wouldn't surprise me at all. Cheap, and that sounds crazy, but it really is, relative to equities at least. The gold miners seem to be recognizing this. They're up to another record high. GDX up almost 3%. And GDX up almost 3%. And I've been pointing out, I've been wringing my hands about this toast at this point. My speculation back here was that this was a long-term top for gold miners and was poop out. No, it is blasted right through. In fact, let's just do it the honor. We're going to change this to blue. We're not even making a resistance line anymore. So we've just gone blasting higher than this. There's a sea change afoot here. There's something different going on. And so God bless it. Go on. Go to the moon. That's fine. But what I've been focused on particularly, because GLD is kind of the instrument of choice, is this level here, which we are so close to. 317.63 is the level. And it looks like, we've actually got a few pennies above that today. I don't think we'll close above it, but it is looking good. I wouldn't be surprised at all to see a big pop on Tuesday. I almost said Monday, but Monday's a holiday, of course. But this is looking very nice. We've been talking about the consolidation. We've been talking about this whole series of, in this case, is a 4-month period where it just kind of grinds around and catches its breath and, weaker hands lose interest, and then boom, like a rat out of an aqueduct. So this is what we're looking for, and I'm thinking gold's going to have another good week next week. So yay gold. Another long, which isn't precious metals related, but still looking pretty good. It's down a few pennies today. It's just kind of doing nothing, but that's okay. It's had a good week. IEF. This is a beautiful bullish setup, and I think it's looking good for September. But getting back to precious metals for a moment, another long position I've got is our pal, Palladium PALL. And as I've been mentioning, the kind of drop dead stop on this is this gap down here at 97.70. Maybe it won't even get there. Maybe Wednesday is as low as it's going to get. It was weak this morning. We'd given up all of yesterday's gains, but it's been kind of clawing its way back ever since, and it's up a little bit right now, about 0.25%. Bullish engulfing pattern versus yesterday's bar. It's looking good. And I think it's going to be doing some serious catch-up because palladium's very weak compared to silver, compared to gold. But I think it's got a very good future, measured in months or even years. Speaking of silver, we haven't looked at that in a long time. It's doing well also. Remember the target? This was the target we set. Getting closer all the time. Only about $2.60 away or so. What happens when we get there? I don't know. But it's a target, so I think we'll get there. Now, that stuff you can hold. That's the barbarous relic, the ancient stuff, real money. What about the digital stuff, of which I'm really not much of a fan? Well, here it is. Here's Bitcoin, off more thousands of dollars. Now, I've dealt with the crypto crowd long enough to know anytime Bitcoin goes down and anytime you dare say that it's weak, they'll point out, well, it's gone up 8 billion% since yada, yada, yada. Yeah, okay, fine, whatever. Did you buy it then? No, I didn't think so. Bitcoin wasn't really tradable for any like normal humans for years after it was introduced. It really just kind of got a little bit of attention when it was about $1,000. And I'm not debating it's had a fantastic past, but the fantastic past kind of ended 4 years ago. Now it's doubled since then, but so's a lot of other stuff without quite the risk. This was astonishing, but these dramatic bursts got, you got this incredible, like multi-tens of thousands of percent. This, and then milder and milder and milder and milder, and now we're just sort of breaking down. And this is with a staggering amount of very corrupt political support, just everything Washington can throw at crypto, it's thrown. And it worked. It got up to $800,000. And now it's starting to kind of cough up blood. So we've lost about $15,000 on this. And that support hasn't gone away. A lot of regular people have lost a lot of money chasing this stuff, especially like the kind of junkier crypto. But anyway, in the recent past, gold has just beaten the pants off of Bitcoin. Ethereum, which was at a lifetime high just last week, has also been slipping down, and so too has Strategy, MSTR, which is looking very, very precarious here. If we break this level, 333, in any meaningful way, Michael Saylor, his hair is going to stand on end. There's very little time left. Just to bang through real quick, I've got 25 different short positions. Here's just a few odds and ends really, really quick. Abercrombie and Fitch down about 4%. Hello, keyboard. Clover Health, mentioned this one yesterday, also down over 3%. Yeah, I did it. Darn it. Get back to where you were. We were at Clover. CrowdStrike off 4%, like so. Dollar General turning down over 3%. AMD, as I mentioned, also off over 3%. Palantir, yes, I'm crazy enough that I'm actually short Palantir now, off a little bit, about 0.2%. Roblox off about 2%. And just one last one, Wayfair off about 1 2/3%. I'm hoping for much, 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 much bigger gains on those. But we're going to get back to the theme. Capital T, gold versus the spider, which is just one of many ratio charts I could show you that hammer home the same idea. Long gold, short equities. It's as simple as that. And that's what I think the long-term future holds. So have a good Labor Day weekend. And I'll see you here on Tuesday. And let's just keep doing exactly what we're doing right now. So I'll see you later. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. I know that. Don't say I'm.
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring
okay.
the person speaking to you. That's at 7:53 on Friday, and I don't want to say it, but I got bingo! Sazlo bingo! I won! John, can you come in and validate this, please? I would like to have. I have the times and the references.
Yay!
Good for the good guys.
Woo! We got a winner!
Pounds
Winner,
and claps
chicken
on his
dinner.
desk. You get the free square of the bat in the middle. Accordion hand gesture. You take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Ilya, we are back, my friend. I want to thank you for filling in for Tom Sosnoff, who's been filling in for Nick Batista, who's been filling in for a lot of other people. But you are on the show today, so thank you so much for coming on. I do appreciate it.
Oh, it's a pleasure. I don't think you and I have ever got a chance to work just the two of us together. This is exciting.
And I don't think we have. So I'm ready for some fun and games from you. But let me what I normally do is I usually go over what's happened in the market, and then we can talk about what we see for the future, or maybe some opportunities for everybody out there. E-mini S&Ps are down $48.50. That's about a 0.75% move to the downside. And quite frankly, Ilya, after we made these kind of lows, and we are about 10 handles off of the lows, which is not a lot. We've really kind of just sat here. We've been pretty complacent.
Yes.
In this move, right? You got about 1 million E-mini S&Ps have traded. That's about 200,000 more than on the slow days that we had this week at this time. Nasdaq's been a big leader to the downside. That's a 1 1/3% move. That's 319 points. That's a significant size move. And when you go through the big movers for today, Netflix down 23, Crowd down 19, Meta down 15, Tesla down 13. A lot of these stocks, AVGO, I know is a high flyer in everybody's portfolio to the upside. A lot of these stocks, they as you said on the break, they gave the bears a little bit of a bone today.
They did. It's an interesting day because it seems to kind of fall within some of the recent dynamics where it's tough to point a finger at what got them so upset today. There wasn't anything particularly terrible that you could go, oh, the thing came out and then they did the thing with the stuff and then, oh, no. There's not anything on the calendar like that here. The data was the inflation data out of the U.S. It came out spot on what was expected. There was nothing there that was really that controversial. It feels like a sentiment thing more than anything.
I could fly with that. And you know what? I mean, listen, we really went nowhere in a nothing week, right?
Yeah.
I mean, that's really what we really went nowhere. And it doesn't look like there's going to be any window dressing for the end of the year here, but we really went nowhere in a very low volatility, /VX $17 off its lows. Its biggest range for volatility today, really only around 75 cents, 75 cents. Not a big range in volatility. Bonds are down 15, 114.11. But I know where you're going to go, and I'm going to get there after these two little messages. Bitcoin down 3,700, has not been able to stage itself a rally. Ethereum down a full $100, not able to 109 actually stage itself any rally today. And oil down 65. I think when I get to gold and silver, this is what's going to make you a little bit happier. Again, I'm taking a shot here. We didn't talk about this ahead of time, but gold up almost $40. Big move in gold and a bigger move in silver up a full point. That's a huge move on top of big moves. Go ahead, take it from there.
Yeah, I mean, I think when you look through sort of cross markets, it's an interesting thing because you get gold up like this. You look at what's going on with yields, especially at the long end, yields are up. They're kind of still stuck in a range when you look at the short end, but at the long end, yields are higher. Dollar is a little bit down in spots. So euro is a little bit higher, Aussie is a little bit higher. But you look at the pound, it's not going anywhere. The yen is a little bit down even to flat. So you don't get this consistency where you would go, okay, dollar down, yields up. Okay, that's going to give me this kind of gold market. So the dollar and yields are both up. Okay, so gold's down. Makes sense. You don't really have a kind of thematic consistency when you look across markets, and it's not like anything crazy has happened with Fed policy expectations, which is the other sort of standby thing for gold. We're up to almost 87% chance that we're going to get this September rate cut. That's not controversial. We've been hovering around 80-ish percentile for this for weeks. The market has known that this September rate cut's coming probably back to May when the probabilities got north of 55, 60%, and they basically said, okay, this is likelier than not. Mm-hmm. And we've only kind of cemented it now over the past several weeks, especially with Powell last week. So it doesn't really stand out in a thematic way, this gold move. Instead, it seems almost like, you know what, we're going into a long weekend. It's the end of the month, and there is a level of jittery out there. And whatever happens over the weekend, European markets are going to get a chance to respond. Asian markets are going to get a chance to respond. The U.S. won't get a chance to respond for an extra 24 hours. Maybe there's a bit of defensiveness out here.
When you look at gold, do you look at it as, I mean, because it's been rallying as the market's been rallying too, right?
Yes.
I mean, you know, I know it's been going sideways really since April when the market has rallied and gold has gone sideways. But prior to that, it had been going running 1-to-1 with the market, and it's finally catching not finally catching. It's at the high end of what you would call this is a channel, right? I mean, I would say
there's like a little range here. I mean, I'm a simpleton when it comes to looking at charts. I like nice horizontal lines that are obvious, where you can like take a crayon and pull it across the screen and go, well, seems to be a sticking point right around here that it keeps hitting. And when you look at gold, I think you see that in spades. You have this kind of a range here. Let's call it like 35.80, 35.90 on the bottom, well, let's even tighten it up. Like 35.30 on top, and like 33.20, 33.15 on the bottom. And that's sort of the inside of the range. And we've held that since basically mid-June. And we haven't gone anywhere. And we're at the top of that band here. So,
but we haven't had, I'm going to go to volatility because that's what I like talking a lot about. Volatility has not upticked on this, what really is like a 6 or 7 day rally in gold. I know it's been stair stepping, but today you've got a nice % move, and you've got volatility upticking, yes, but you've got an IV rank of 26, not that great. Like,
no.
Okay, go ahead.
No, you're right.
Yeah. I'd rather see a much, so my question is, do you think gold gets out of this level here and starts a new up movement over 3,500, or do you think it comes back down again? I'll give you my take on it. I think it comes back down again, but again, I'm just playing the contrarian role. We've had 6 or 8 straight up days in gold. I figure black on the roulette wheel. It's got to be red eventually.
I mean, I agree. I think if you wanted to put your technician's hat on, you'd say there was a massive rally that took us from, let's call it early December last year, into a high right like in the second half of April after the whole Liberation Day bond market kerfuffle digested. And since then, we've basically been going sideways. And if you want to be a kind of first page of a technical analysis textbook kind of a technician, you say, well, we had an up move, consolidation. Consolidation typically resolves in the same direction as the move that was there before. The bias is higher. That would be like the textbook thing. What I've been doing in gold is basically selling vol, and whether I do that through selling calls or selling puts depends whether we're near the top or the bottom of this range. And I just fade it, but sell vol either way.
Sure,
and so
a gray area. I get that.
Right. So the latest iteration that I have is I've sold some call verticals, and I'm just extracting whatever can be extracted. I've had it actually for a while now. One of the things I've been doing in these crazy markets is giving myself more duration. So I've been sitting in this thing for 21 days already. So back from the last time it tested the top of this range. My sense is that looking cross markets, the dollar seems to be stabilizing after an awful first 6 months of the year, and a dollar rally would be kryptonite for gold. So I think we actually are looking for probably not the technician classic. I agree. I think we're looking for a little bit of a pullback, and maybe eventually we blow out this range on the top side. But for all the dovishness that we've been speculating around the Fed, that it hasn't done that yet, suggests that maybe this isn't that move for now.
We talked about some of the stocks that brought us low today with the E-mini S&P down 46. Let's take a look at the other side of the coin here on the upside. You had BABA for earnings, it was up 15. I mean, for me, BABA is a non-event, doesn't mean anything to me one way or the other in the overall market. You do have a firm up $7 and UNH up around $7. But after that, you're hard pressed really to find any names. I get it. You got Google up $1.70, and you even had Apple, I think, was up about 50 cents. Well, it's up 13 cents right now, but Apple's been strong all day long. Little surprising that Apple, with a lot of the tech stocks, a lot of the news has been going on with Apple. That over
Take a look at Dell.
What?
Take a look at Dell.
Yeah, no, I saw the down 12. I mean,
this thing is getting taken to the woodshed out here.
Yeah, SMH is down, 3%, $8, back near its lows of the day. So this was really a semiconductor shellac.
Tech is getting whacked here.
The what is?
The tech sector just in general is just getting whacked here.
Yeah. I mean, yes, on top of some monumental gains that it's had, right? So
100%, yes,
we've had this. I mean, look, we've had this back and forth movement all week long. Like I said, I mean, we've gone nowhere pretty fast this week. But stocks in between there. You just mentioned Dell and the semiconductors. A lot of the higher flyers, AVGOs of the world and stuff have gotten a little bit softer than they've been. So, yeah, there's definitely. And probably rightfully so. I mean, we can use a little bit of a backfill or a little bit of a
totally.
I mean, nothing goes up forever. I mean, and it certainly seems like everything goes up forever here.
Let's see if this resonates with you, because I've been watching this for a few weeks, and it's starting to kind of feel like the markets are living for the next event risk, and in between they don't really have momentum to build a trend or extrapolate. Their default seems to be, okay, well, we're at record highs, let's see if we can survive this next one thing, and then they stall, and then the next one thing, and it starts kind of mid-August. So you get the CPI number, and for one day everybody's happy, like, hey, this is clearance to cut rates. And then for 7 days, nothing, sideways drift, we come down a bit, nothing happens, there's no news, but the markets cannot say, oh, we just got this good piece of news, everything is fine, let's build a trend, let's keep going, this thing has some sort of momentum to it. Then Powell comes out and the market goes, hey, and then you get another burst. Nothing happens. You go nowhere all week this week until NVIDIA. NVIDIA comes out, and again, it's good for a day of something going, oh, well, this is fine. It sells off because they come in a little bit lighter than people wanted overnight, but by the time the cash opens yesterday, everybody's like, okay, this is fine. It's not great. NVIDIA ends up the day down fractionally. It was down almost over 3%.
Yeah, 3%. Yeah, I mean,
at one point,
but look, you got big dogs like Microsoft down $1 today. I mean,
yes.
What's
so it seems like the market is exhausted. It seems like it can't,
that's a good one.
Can't build momentum in between these events. It's just kind of it gets to one of these things and goes, okay, it's not great, but it's still good. It's still good.
You know what? I think you hit on it. I think the market is exhausted. I think that's what this whole week has felt like, on both sides, up or down, felt like it was just exhausted. Not a lot of, maybe you could say not a lot of players or whatever, but it seemed like it was exhausted. Volatility was exhausted to the downside. We've actually caught a little bit of a bid here now, up 20 cents. To 17. This morning with the E-mini S&Ps down around 20 handles, you had volatility lower this morning. So the playbook was there until, NVIDIA started selling off. Palantir was down, $3.50 or more. But, now Palantir is only down $1 or so. Tom and I talked about it earlier today. We thought volatility would get bid into the close. It is bid into the close a little bit, but I didn't see this 50 handle move down 46 or whatever. I didn't see that. I thought like you, it would be an early morning trade and we would sit down 20-ish for most of the day and, you know, see what the last hour were to bring us.
For me, it was like, okay, if we are going to get a big move, how does that happen? Well, okay, we could have the PCE number comes out hot. It's been coming up hot relative to forecasts for a few months now. So, okay, the PCE number, let's say it comes out annoyingly hot. And it's not 2.6, it's like 2.8. And the core is not 2.8, it's like 3. And the market goes, oh no, woe is us. What are we going to do if this September cut probability goes from 80 to 70? End of the world, obviously. And so, and then you have the long weekend. Let's not hold the bag while there's a sell-off, and maybe Europe and Asia take it lower while we can't do anything. Okay, let's just liquidate a little bit, and then you get something hairy. And month end on top. Okay, maybe you get something hairy, but you need a catalyst. Here, the data...
Don't we need a Trump tweet or something like that?
You'd think, something. And over the past several days, he's been trying to fire a Fed governor.
Yeah.
And the market doesn't care. Like, the dollar hasn't even noticed.
Right.
It's pretty incredible. The bond market hasn't noticed. Like, you'd think, like, the long bond would notice that the president of the United States is attempting to create a precedent for firing a Fed governor and claims it's for cause without actually going through any kind of formal, like, okay, we investigated, here's the cause, now we're going to fire her. That would make sense if that was the case. But it's all kind of happening so fast, nobody cares.
Bonds haven't moved. Yield hasn't moved. Euro
not a care in the world.
For the week, I'm saying, haven't moved.
Yeah.
Good ranges in between. I mean, today's expected range was only 35 handles, and we moved well over that. I mean, we're down 52 right now, so we're well outside the expected move to the downside. So you could say that this was an exaggerated move to the downside on a Friday going into the long weekend. Now, you put any weight into everybody gets back from vacation and the market really starts to we really get to see what the market's all about after this holiday?
It could be that because this is such a sort of market lore kind of a thing, almost like the Santa Claus rally. At some point, it's a self-fulfilling thing. Nobody necessarily, like, it's one thing to sort of say, okay, there's an empirically observable Santa Claus rally, but it's become such market lore now that everybody's waiting for it, sees a little uptick, goes, oh, that's the one, pile in, and then it happens, and it's self-fulfilling. I think there is some element to liquidity coming back, if not because Europe comes back in force, and there's a significant overlap, especially during the key morning session for Wall Street. They take a ton of time off, and they're coming back, and so there's a little bit more liquidity in the overlap. And there is a kind of psychological thing to it where people go, okay, now I have to decide how I'm going to outlay risk. The marker is here. We've bookended the summer. Where's my portfolio? So I think there's some of that. I don't put a huge amount of stock into things like that. I like to look at the price action and just go, okay, where's the market want to go? What world is it describing? When you look at sort of the interrelationship of assets and you go, okay, in what world do we have this up and this up and this up and then that down and that down and that down? What is the price action saying? And that's sort of how I then try to see what I think's likely next.
Talk to me a little bit about notes, because they've been creeping higher as the long notes have been going higher, which means yields go lower, but the bonds, the 30 years have been going nowhere, really going sideways. Talk to me a little bit about that yield curve.
The yield curve is an interesting animal here, because what seems to be occurring is a kind of steepening. If you look at the 10s, 2s, And if you look at where it's driving, it's actually not the front end. So what I like looking at oftentimes is a kind of bisected look at spread. So I look at the 3-month to the 2-year to get a sense of the front end, the 2-year to the 5 to get a sense of the belly, and then the 5 to 10 to get a sense of what happens at the longer duration. There's been a significant steepening of this curve, basically going back to the beginning of the month, and most of it seems to be happening at the long end, at the 5 to 10 a year kind of area. And I think what that's starting to tell us is this idea that the market and the Fed aren't so much at odds near term, they're at odds about what happens next year. And when you look at the pricing, when you look at Fed funds futures, the Fed has been saying since December, before the new administration came in, before the tariffs, before any of that, we're going to do 50 basis points in cuts in 2025. And they've stayed on that message. They said it in December, they said it in March, they said it in June, and the market has basically been there with them since about May. So if you look at the spreads in Fed funds futures, you can see the markets are priced for about 48 basis points for this year, and they've been a few basis points up or down around 50 since May. Next year, though, there is a huge disparity. The market thinks the Fed is going to cut by 80 basis points next year. So that's 3 cuts and some change, so some small likelihood that maybe there's a 4th. The Fed's got 1 rate cut written down. And I think what the market is very clearly saying here is, okay, fine, whatever. You have 3 meetings left. Everybody agrees, you agree, we agree, we're going to do 50 basis points. You're running out of calendar, just like you did last year. You're going to do these 50. You have but so many opportunities. So September, and then either October or December, whatever. But next year, because you were so sluggish to go this year, you're going to have to do catch up, because we're actually not concerned about inflation. We're concerned about what's going on with economic growth. If you look at the break-even rates in bond markets, there's no inflation fear there. They haven't really gone up in a spirited way. They fell from February to April, right alongside stocks, when sort of the initial these tariffs are a growth scare thing occurred. Stocks obviously rebounded famously. Break-even rates haven't really gone up like that. The market isn't worried about inflation. They're worried about second-order effects, it seems, what the inflation will mean for growth and consumption and so on. And so I think the markets think the Fed is going to do a lot more next year than the Fed is owning up to for now. And that's sort of where that steepening of the curve is occurring. I think the front end is relatively stable here for the most part, but it seems there's a lot of action in the long end because of this disconnect.
Well, it's rare that you see bonds with the same type of implied volatility that you see with the equities. The monthly implied volatility in the bonds is sitting around 10 or 11. And if you go into a SPY, you're going to see basically the same thing, a 10 to 12, let's call it maybe even 13% implied volatility. Been a few times that we've been on the programming here where the market volatility has actually been lower than the bond volatilities. We're almost going to see that now. Doesn't happen very often, but when the market's acting like a commodity, there's really a lot of complacency, and that's when you have to, be wary. Doesn't mean be wary to the downside. It just means be wary. It means that the market's, can make itself a surprise move up or down. I look at this move today, 50 handles lower, really going nowhere for the week at all, and say to myself, it still looks like business as usual to me. Volatility upticking a little bit here going into the long weekend, a 2% move. I don't think that's surprising. I know Tom and I both talked about it, that volatility should stay bid into the close. You will not get paid for your weekend hold that you're doing. That's the risk you take. And if you don't get any type of, like what you said, in Europe or any place else like that, or any kind of silliness, as the E-mini S&Ps just rallied 10 handles in about 30 seconds. They're down 40 right now. If you don't get any type of news like that, you will get a big contraction of volatility. You'll get volatility back in the 16.5 handle. Ilya, thank you so much for coming on the show. I really do appreciate it. I'm going to take a quick 90-second break. I got a sauna to put together, believe it or not. I'll let you know all about that.
Godspeed.
I'll let you all know all about that on Tuesday. Maybe I'll even send you some pictures. Sound good to you?
Perfect.
Sounds good to me too. Thank you so much for coming on. Peace.